What's good? How we doing? Today we're gonna be live for I don't know. We'll see how long we go. Probably usual. We're gonna go in. We're just gonna backtest. We're gonna kind of just old-fashioned backtest. Just really dive into these charts and really find out how moves happen. This is a current chart right now. I'm not really gonna go over too much bias, but I do want to see price drop lower, draw lower. We'll see though. We might have SMT at these highs. Kind of like we barely purchased that high. I don't know. I gotta see what happens to really form a bias. I like to let overnight session really play out before I really form a bias. So other than that, kind of want to just drop into. I guess we'll use TradingView. I always debate whether to do TradingView or FX Replay, but we'll do TradingView. And I want to do. I want to do the March contract of 20 or the June contract of 2024, or no, the March contract of 2024, and then we'll do NQDS, and then I'm gonna deep back test for a minute. We'll see how long this goes, and then I might watch a lecture, and then we'll see. We'll see from there. Basically, yeah, I'm just gonna back test. Try to make some art with these charts. And yeah, that's kind of my goal with this session here. All right, February 12th. When is Jay Powell? When is he speaking? I think he might be speaking today. I think around 10. That's usually when he speaks. I can check real quick. Yeah, he speaks at 10. So I'm expecting just like lower quality action in the AM, and then in the PM I'm expecting to see, or I'm expecting a 1050 macro to really have a good nice move. Okay, I think I did pack test this day, but I don't really remember it, so we're gonna do it again. Look where we expand from a new week opening gap here. Now we kind of just have buy side. We're already in all-time highs like right as market opens. Same on NQ. We're already in all-time highs pretty much. 7th. Right here at market open, we come up and we take buy side liquidity. So we take buy side liquidity at market open. All-time highs taken at market open. Kind of a little bit. No red folder news either. There's bond auction. Accumulation, manipulation, distribution happens at 7 a.m. early, and then we get expansion at 7:30. Do we have any news at 7? No, we didn't. It's been 2 days of backtesting. Do you understand PA better now? I would say so. I'm only going to get better. What's good, Michael? We drop below 8:30 open. $8.30 open. Let me expand. What about this? What type? Oh, it's almost negative 1.5 there. Do you typically? Yeah, I trade MXM. That's personally what I trade. Because MMXM really is kind of just a way to view the market. We don't draw into this fair value gap here. Why is that? I would have liked to see us come down here, but we don't. We have mitigation over there. Yeah, I would have liked to seen that, honestly. If I were to be trading this, like we draw on all-time highs, then kind of just accumulate for a little bit, and then 950 macro, we expand. Kind of have this here. Drop below 8:30 open. 945. We don't really have like an SMT or anything. We're just drawing into an order block. The only thing backtesting the charts you traded is you know the trend and bias, so that's like a cheat. Well, you don't know every like intraday fluctuation. And like backtesting is just, it's important because like if you don't do it in your own charts, or if you don't see it how price, if you don't see what price does, then how are you supposed to be able to trade it, you know? And how are you supposed to trade if you don't understand what you're doing? And I think that's why backtesting is very important. after taking sell side here. We don't have any low resistance liquidity generated overnight. That's kind of like how we did today. So the more we're gonna be more centered around the liquidity that we've generated today. So we drop down in that 5-minute order block here, and then we seek expansion here on Nasdaq as well. If we go to the 1 minute, we drop into a deep discount. We take sell side here, barely purge it, and then we expand. Overall, I would have liked to have seen a further retracement here. But we draw up into this order block here. Why did I have that marked? Where's market open? Do we have SMT at the high? We do. 9:30 opens right here. So we have a very small SMT here. This could have been a trade here. Market open. We just have a classic Judas. We're not even really. Yeah, I would say classic Judas. It's where we form a Judas swing right there, and we reprice to where this order block into this imbalance with low resistance liquidity signatures here. I would have liked to have seen this imbalance. We do end up coming out and taking this low here. The SMT that forms right at 9:30. Displacement we break down for a value gap and an order block. And then we seek sell side here. How many points are offered? Around 40? Around 40. Look at this inversion here. The wicks trade up to this here. We break down. Oh, look at this standard deviation here. A -2 to 2.5 lines up nicely here. So here we have a market maker sell model. I do kind of want to swing grade this. %, low risk entry, consolidation around 50%, 75%. We end up getting a silver bullet right here. And also look at this. We reprice right to this for value gap right here. Oh, almost to that. And then also we reprice to this wick right here. And we get one more selling lower, but we don't end up taking this low. And then 9:45 we expand all the way up here. And then we seek all the way lower. Very hardworking guy. I appreciate it, bro. MXM powders are upright and upside down. Seems like the market literally only trades off this model except for extensions. Yeah, every higher time frame retracement is going to be a lower time frame market maker model. I mean, it's just a way to view price. And that's the way I like to view price. Hold on, I'm trying to get this. I'm trying to get my. I'm trying to get. It's all gonna be worth it. All right, here we purge sell side here. You got your 915 macro. Within that 915 macro, we seek buy side. We don't really have any retracement at all. We kind of just get expansion. Oh, we reclaim this order block right here. This is just a stop hunt here. $10 a.m. Where's your silver bullet? Technically right here, honestly. That's your silver bullet. We come up to mitigate this for value gap. There's no really type of SMT that we have. Kind of just seek expansion. Alright, and now what are we looking for? 1050 macro. Around that. We are in all-time highs, so trade with current order flow until proven otherwise. I do want to see this. I think I did already measure this, but we'll measure it again. Negative 1.5, standard deviation hit right there. Then we come back up, then we take buy side here. During that 950 macro. Get displacement, we pull back to where? Into optimal trade entry here. And then we reprice lower to this fair value gap right here. Oh, we don't actually. Oh, we end up doing it throughout the day. And this fair value gap is important because it overlaps with this mitigation. Oh my gosh, look at the low that we put in throughout the day. Right at fair value. Is that during a macro with an SMT maybe? Put this to the right. And we barely have a stop on here. And we don't even trade into this fair value gap here. Oh, and we have SMT here at these highs. Yeah, I could look to get engaged into this 1250 macro because we have weird news right here. We had 1 a.m. news. We had 1 p.m. news. $12.50 news. Or 12.50 macro will be because of news. Right here, we pull back to discount here, or we pull back up to premium here. We fall short of this PD rate right here, generated sell side, and into this 1150 macro. We end up kind of consolidating, and then we shift into a sell program right to this old high right here. Fair values offered into the market, and then we seek expansion throughout the rest of the day, and we kind of just accumulate here. Do you sleep? Yeah, I do. When ICT says a mohawk, he's referring to a wick. Hello? Oh, I think it's loading. Hopefully. Imagine my Wi-Fi just shuts off. Yeah, I need to turn off new week opening up because. And look at this. We're priced right to a 2-minute order block. A nice institutional 2-minute order block. I don't know. I feel like when I backtest, I've said this before, but I feel like I'm too subjective with my order blocks. Like, it's easy to say in hindsight, like, oh, this was an order block right there. And we reprice to equal highs. I low-key think that I should just retest backtesting the AM session because that's normally what I trade. But look at that new day opening gap gets repriced to right there. All right, let's see what this new day opening gap does. Overall here, before market opens, what we're looking for, what type of news do we have? Front folder news at 8:30. What is it? Thursday? I don't think the market's topped like this. Oh, this is perfect, bro. This is a perfect New York reversal. New York AM reversal. Oh, this is beautiful. Let's dive into this. It's beautiful. It's beautiful. So pretty much all we're looking for is look at the respect. Look at the respect to new day opening gap right there. The bodies. I mean that's like towards 1 p.m. I'm assuming we expand to buy side here. Oh, we don't. We already taken the draw. That's why, like, if I ever look at new day opening gaps, it can kind of get me in trouble sometimes. But there has to be an existing bias and narrative. So here we have buy side liquidity. Oh, this is gonna be good PA right here. So what are we looking for? We're looking for high resistance to be created to be created. High resistance. What time do you usually trade? 9:30 to 11 is usually when I try to trade. Or from 9:50 from 9:30 to around that 11:50 macro usually is when I try to trade. And then we get displacement higher here. Fair value gap gets created. And we have this order block. Order block that swept liquidity right here. Expansion. With an order block. We open right here at 9:30. We probably get a Judas swing back down to the order block. And then we seek buy side liquidity here. And what do we have here now? This now becomes a propulsion. Buy side liquidity is taken. We accumulate here. We accumulate more orders. Then we come back down to propulsion for fair value. And we come back up higher. This is I've seen this happen a lot too. In the PM session, we'll come back down to like a order block or a propulsion block is an order block, but we come back down to order block, and then we once we've offered fair value, expand higher. We've already repriced this order block, so we come down to this. I mean, we already have repriced this one, but We find sensitivity at the order block again. Let's dive into this. I do want to pull up ES here. ES, not so clean, honestly. At all. Where's 830? So we form SMT at the lows. We reprice where up to. New day opening gap here at 930. And then we come back down. Kind of just whipsaw here on ES. So we form SMT here at these lows. This low to this low, SMT. A volume imbalance is created. Oh, it's beautiful. Beautiful repricing right there. And we seek expansion towards buy side liquidity. Where's high resistance liquidity? Where's low resistance liquidity? That's simple as that. Look for that 830 and 930, and boom. That's honestly just the simplest way to trade the AM session. High resistance creates either at 830 or 930 most of the time. If we have 830 news, look to get created at 830. If we have 930 news, look for the stop button to be at 930, and then look for just low resistance liquidity opposing that direction. And that's exactly what we have here. Volume imbalance right there. 15-minute order block. Expand higher. Then we have a propulsion. And then we end up expanding higher off of that. Then we have this low resistance liquidity signature that we are more likely to reprice to. Well, I guess there's to the volume imbalance because there is no time frame for a volume imbalance. This in my opinion is like a where do we open? This seek and destroy. Judas. I don't know. That's how I like to see it. Because the ES wants to draw into the new day opening gap here and market open. Here's ES at market open. Come right here. You're the most dedicated person I've seen here to learn this stuff. I appreciate it. Appreciate it, bro. Appreciate it. Oh, actually, I forgot I already had a tab here. So since ES wanted to draw up into its volume balance, NQ trades up. We don't really stop at any level. Except for true day open. That's weird. True day open here acts as resistance. I'm just going to mark that. And we also fall short of new day opening gap here. Come back down to volume imbalance because it's reprice right too. Come back up to new day opening gap here. Let's mark out the 950 macro. Whew! Beautiful right there. Oh, I wish that rejection block was there. I also do want to swing grade this. What do we have around equilibrium? Oh my gosh, this is this is gorgeous. This is gorgeous respect to an implied dealing range. What do we have here? Low risk entry right at 25%. Come back down 25%. I look, you want to move this over. Man, how big did I make this? Holy. So we go back up into a premium here, T premium, and we draw back into equilibrium to then have a stop hunt, to then expand, and then look at this, boom, right there, silver bullet right there. I want to do a stop, but we'll just stick with that. What do we form here? BPR. Then repricing higher takes place. Are you profitable yet? Nope, not yet. We consolidate here, we expand, then we reverse, then we expand. Pretty sure. I'm gonna note this Judas swing, and then we're gonna probably go to the next day here. So notice here, we take sell side, then we take buy side, then we take sell side again here. So price forms slow resistance liquidity. Price generates. We have a bullish bias. We have a bullish bias. And we first take sell side, take minor sell side to entice breakouts. And then we reprice to take minor buy side. And so ES can reprice to a new day opening gap. We then come back down and take the low resistance liquidity. To then run to buy side, forming a seek and destroy Judas. Alright, let's just know what happened PM. We accumulate here. Then we take buy side. Then we purge buy side again. Reprice this imbalance right here. When we consolidate, what do we do? This is how you can trade consolidations. Just look for stop once and imbalances to reprice to within D premium, like this. We have a soup right here, and then just take that to right here to sell side or to a discount here. Same thing up to buy side, and then we take buy side liquidity here. We refer to equilibrium within this range here. And then we end up displacing to take sell side again. Now we create a new dealing range here from this high to this low. Come up, take buy side here, repricing lower, imbalance right here at 2 p.m. So silver bullet. Right at 2 p.m. Gnosis right here. 2 p.m. exactly is when we trade into that for value gap. I mean, I guess we traded into it a little bit before, but then we really dig into that there. And then we seek sell side. And then what is that? That's that propulsion block. Their buy side liquidity is taken here. Imbalance. We have imbalance on the right side, on the left side there. I like doing that. Whenever I draw in imbalances on the right side that have an inversion or a left side imbalance, I draw the low, and then I overlap that with the high of the right, and that becomes some more practical way of where we're probably gonna respect. And as we see, we've taken buy side, then we displace lower, pull back imbalance, and we seek sell side here. I guess reclaim that. Oh, beautiful. Oh, we fall short just a 4. -4. $150 macro. Alright, and then we kind of just consolidate there. Do we have any form of SMT here? So we have a 1227 high, and we have a 107 high. 1227, and then 107. Yeah, so this right here, 107 high here. As the ES is trading up into its new day opening gap. It's your SMT. Does ES take it at 138? Oh, yeah. ES takes it at 138 as it trades into there. That's your SMT. And then boom, we reprice lower. Nice day right there. Classic 830 reversal. Oh, yeah, same thing though. I guess I've backtested this before, but I don't really remember it. 830. Create a wick here, big whipsaw, but I don't see this. I mean, I guess this could be a reversal, but I don't really see as much. Do we reprice lower to this low here? This imbalance. Asia remains the low day there. And then we seek buy side. We fall below 830 open. We had 10 a.m. news here. We don't trade into new day opening gap. We refer to the 15-minute imbalance with the stop on here. Whoo. Same thing. Where's the high resistance created? We end up creating high resistance signature at 930. Where's low resistance liquidity? Well, we have low resistance liquidity at these highs here. Then we end up getting displacement, inversion right here, mitigation, boom to buy side, and then -1 gets seeked. And then we kind of just have the classic buy day. Wait, do we have 8:30 news? Oh yeah, we have PPI. Okay. 8:30 news, and then we're aggressive to trade back down to the sell side to this imbalance at 9:30 to then have a classic buy day. Price trades below. We don't reach true day open. Nice 4-minute fair value gap with 4-minute order block there. But other than that, it doesn't look like we really get much of an entry. Lowest entry found at 25%. Oh, look at negative 1.5. So reaccumulation zone. I like gray best. Reaccumulation. Let me see. Buy side expansion here. $9.50 macro, put it in work. We have 10.50 macro. No, ES hasn't taken buy side. Six sister, and then we come up to take buy side. Then we reach standard deviation projections. All right, next. $9.30. Same thing. I mean, this is a classic buy day. This is a classic buy day, but we come up to take buy side, and then we just seek sell side. So, like, the profile is still there, but then we do seek PM reversal. So, like, Oh, look, we're reprice right to that 15-minute imbalance right there. Inefficiency, balance price range. We form SMT at the lows too, I think, at 9:30. Do we? I mean, do we take this 6 p.m. low? So it's not really much of significance. No, we don't. We take 12:45 a.m. low. Oh my gosh, look, I didn't even see that. Stop hunt occurs at 9:30. An expansion from the new day opening up, and then we have volume imbalances here. Look at where we reprice right to volume imbalances. We have breakaway gap here because we have balanced price range. 9:30. Here we first use that as resistance here. Oh, what type of Judas do we have? Double purge. You're pretty early off the 9:30 a.m. Not gonna go into rest first. What do you mean? Here we don't really have any order block. Because this order block, this isn't an order block because we don't sweep liquidity. The order block's here. Do we have a 5-minute one? No, even then we don't. So price doesn't know what to. The algorithm doesn't know what to expand from. Yeah, well, I already went to sleep. Here we go. The 1-minute chart is going to show us more details. As we see here, 9:30 comes down. So sell side. Here we have a classic Judas. They come up, we take buy side. Then we come back down to take minor. We have an order block with a volume imbalance. 950 macro. No stop hunt. I mean, we just leave this low here at this order block. I mean, even if you are to enter in off of an order block, or maybe wait for a fair value gap. I guess we do have a fair value gap there. Oh, that's a nice example of a consolidation. Price drops below true day. And then we seek expansion. Oh my god. Look at that. Look at that. New week opening gap. To the T. Then we have all these equal highs here. Notice all these confluences around this. So you can say that right there. Then we come up to that. And I'm not gonna lie, this might be random. I don't know. No, this actually might be random, and I'm like not joking with that. Like, I really don't know what caused that, because we're in all-time highs. Normally, I'd be looking for a new day opening gap there, but as we see here, we have an inversion, balanced price range. New day opening gap. New week opening gap. It's not even within a macro either. That's kind of surprising. I'm not gonna lie. Oh shoot. See this? We take buy side, then we in a deep premium to take sell side in a deep discount. But first, we come from a premium to equilibrium up to a premium. Premium PD ray, a new week opening gap, down to discount PD ray to generate both the buy side and sell side levels. Then we come up to a deep discount, up to a deep premium, to then take buy side here, to then reprice lower, new week opening gap, check there, boom, and then sell side taken here, and then we get displacement here at equilibrium of this price leg here. 25% is held as support here, 50%, and then 75%. Oh, that's beautiful. That's beautiful. That's beautiful. That's beautiful. Thank you, Ali Khan. Thanks, brother. I'm gonna have to watch that John another time, bro. That thing is so nice. Let's look at this dealing range here. %, we consolidate, we have stop on it. I guess I backtested this, but I didn't journal it, so I don't like it. Oh, my indicator, I deleted it. New day opening gap respected perfectly. We just randomly displaced during. Oh, just randomly. This is CPI, I believe. I'll be right back. I'll be right back. we have this low that exists here. When is this? This is February 13th. Look at the liquidity if the references. That's kind of random. I don't know. Look at the cast forward too. Like 60 days, we pretty much put them low like right there. I don't know. It looks random. We are in a discount though. We come up. Okay, we take 20 AI or 20 candle high. Manipulation above true day open. London high day. Wait, cause this right here, this range, that's just the Asia range. Yeah, when it says the 20-day candle, that's just the Asia range. We generate a low. A low is generated right above. $830, high resistance is created. Where are we likely to reprice to? Sell side. look at the bodies, respect that. And then 25%. Bodies, respect. CE. Wicks, respect. .25. Do I sleep? Yeah, I do. I went to bed at like 7 last night, 7 p.m. Woke up at like 1. Or I would say like 12. I don't know when time I started. 12 my time. I don't know why price stops there. Oh, there's a nice... At 9:30. It's created at 9:30. We get displacement. Order block? Ugh. I don't really like counting that as an order block. I'd rather go to the lower time frame to see if we have order block here. Alright, bro. Here, this is what I'm looking for. I'd rather refer to this. This is the order block. It doesn't get repriced to. We do reprice the wick, but I'll use the bodies. New day opening gap, constant encroachment. We reprice to the premium end. Discount end. Here we have propulsion, and I'm using the wick because it overlaps with the fair value gap. I think I took a trade here. I remember the trade I took. This was back. This was a while ago. I took a I took a breaker fair value. I took a unicorn. I thought this was a unicorn entry. I almost got stopped out. My stop was right here. Wow, bro. It's crazy like looking back and see how much you've grown. I remember this exact I remember I took it right here, I think is where I entered, and I have my stop right here. It was a decent entry. I mean, it's like I took a partial here and then a partial here. I remember it, bro. That's funny. Here's the trade that I took today. Yeah, I think this is a good entry here. Then we reprice a little bit lower. Then we seek expansion. We dropped down below 8:30 open. Because we're nowhere near true day open. Oh, nowhere near true day open. Oh, that's a 9:53? Oh, 9:53 root candle. I don't really know too much about that. Your room lighting's such a vibe. Appreciate it. I have LED lights up in my like I have blue LEDs and I have like a red light, and I have LEDs like stuck up with like duct tape right now because I didn't know if I wanted to like actually put them in because I didn't want to put up LED lights that I was gonna take down potentially. So I think I'm gonna hang them up. I still haven't. $10.50 macro. Dude, I like this backtesting so much better, honestly. I don't like the actual entry type of backtesting. This to me is just therapeutic as well. Like I feel like I could do this all day, but I'm not so sure about the other type of backtesting. I'm listening to music though, and bro, I need to listen to some new music. Like how we use constant encroachment, then we displace through it. Fair value gap with that. Oh, with a mitigation. Whew. I actually remember this day. I used to watch Justin. I used to watch Justin Werlein a lot, and he it's like his big day here. We have SMT, and then we have like SMT for value gap. Just trying to find where that is. 1045 high. Yeah, SMT here. Oh my gosh. Mitigation block right there. New day opening gap with the volume imbalance. During a 1250 macro. consolidation here. New week opening gap offers. Bro, I'm not gonna lie. New day opening gap might be like my PD array of entry. Just look for overlapping PD arrays with it. We have impulsive fair value gaps in. The wicks are holding that 50%. Let me see sell side. Look at this. We fill in that fair value gap. In that new day opening gap. Beautiful. What do we do at 50%? Consolidate. What do we do at 75%? We offer a low risk entry. -1 to 1.5 re-accumulation. Oh my gosh. Oh my gosh. That's beautiful. We re-accumulate within that zone, and then -2.5 is a possible retracement reversal. It's there. It's there. Look at that. Look at that beautiful respect. Sir, yes, sir. Sir, yes, sir. What type of news folder we got today? 214. No red folder news. It's a Wednesday. Where are we at on the higher time frame? We just came down. We've taken this sell side liquidity pool, and we have repriced those 60-day IPTA lows that we were talking about. What liquidity are we referring to? It's going to be most important. This high right here. We have this imbalance right here that we don't draw into. We never take edge of the lows. Oh my gosh. ES doesn't even take those lows there. Whew. Okay, so we form SMT here at these lows. Then we reprice the console encroachment of that. Or maybe 75%. I honestly doubt it. and Q and ES both agree on a random level. Oh. Oh. What's good, AOD? Down 2% on the new funded. Any tips on the next trade I find in the New York session? I would say just don't trade, bro. I'm gonna be straight up. I would say take a break, honestly, because I think, and I know for a fact that your ass needs a little bit more time to develop. That's my personal opinion. I think so many people, rush funded accounts. So many people rush funded accounts. So many people. And I hate to break. You might be one of them, but I am not. I mean that in no disrespect possible. I mean that to try to help you. You know, like I try to shit on you. I'm trying to be realistic here. The only advice I could give someone, and I don't like giving advice because trading's a little bit subjective. I would say just focus on becoming a better trader. That's all I could say. Just do what you know and stick to what you like to see within the market. How much have you spent on fundeds? Is that a Fed question? Is that a Fed question? Sorry if it is. You don't have to answer. So we create high resistance here and then high resistance here. Therefore, 1050 macro is going to be a little bit better. And it looks like 1050 macro offers a shorting opportunity here. And then 1150 macro right into that new week opening gap. 14 hours? Yeah, bro. That's pretty good. That's pretty good. I would say just keep up what you're doing then. Just stick to what your model is. Simple. Simple as that. It's like if you have a model that repeats, if you just submit to that over time, then you'll probably get results. But if you keep on trying to change your model, then you're more likely to fail just because of random losses that will occur. Okay, so this is the SMT that we form. We're below midnight open. Or below 8:30 open. I think it's pretty much just a balanced price range. It's what I like to see. But basically, anytime I'm looking at a certain PD rate that we could draw into, this is a signature that I personally like to see because it shows the intention within the market. And this is what I personally like to see is a fair value gap that goes into a PD array and then a fair value gap that goes out of a PD array. So what this shows is that, because not all fair value gaps are going to be a fair value gap. Like, notice how this fair value gap failed. This fair value gap failed. A lot of people, or I don't even care, but we know that there are some traders in the market that try to short this, looking to see further prices lower, maybe this sell side objective. There's also shows that price was able to close back above this fair value gap with a new bullish fair value gap of its own. And we see that right here and then right here. So that shows that the intention here is not to go short. It's not to see lower prices, but also to see higher prices. Then we come back down. And then it's this is a balanced price range. So price shouldn't really hang around it. It's pretty much just a balanced price range. It's also I'm pretty sure that's kind of where like I got the logic from. I mean, I say fair value gap in, fair value gap out. That's kind of what I like to say. But yeah, it's sharp turn, island reversal, whatever you want to call it, balanced price range. I just say fair value gap in, fair value gap out because it's easy for me to understand. All right, then here we have high resistance. What do we have here? Like 4 drives? Let's go back to NQ. Yeah, but pretty much we have like high resistance liquidity. And we fall just short of that new day opening gap there. I mean, same signature, fair value gap in, fair value gap out, but we don't really come into a higher time frame PD array. We just come into a high resistance liquidity. We've created high resistance. See, so this fair value gap is going to be a lot more sensitive with this fair value gap. That's why this is an institutional order flow entry drill. We end up displacing right at 950 or 1050. $11.50 macro gets traded right to, and the same thing. Fair value gap in, fair value gap out. Same thing here. Fair value gap in, fair value gap out. Maybe you thought that this could have been a buy here, but what I've noticed is it's not even within a macro, and we're just looking to rebalance maybe like a 5-minute. This move here is just to mitigate this 5-minute fair value gap right there. And then we come back lower to then take sell side after the initial traders have been trapped long. And then we have a bullish breaker right here. Here on the 5-minute, bullish breaker. Breaker. Where is it? What am I looking for? Yeah, that's what I was looking for. And then we are in bullish institutional order flow entry drill. Every low should just be a stop rate. Every low that we take should just be a stop rate, as seen here. We have a 5-minute imbalance right there. We also have these two down close candles, which could probably be a 15-minute order block. We don't really have a nice 15-minute order block. It'll be a 10-minute order block. These two down close candles together combined. I mainly like to look at the last down close candle here. But you can include these two. Here we have a 5-minute order block and a 5-minute fair value gap right here. During that macro, we have a 150 macro here. Creates another swing point. Alright, I'm just gonna let's go to the next day. So we put a low day. Wait, what day is this? This is a Wednesday. Monday, put in a possible high of the week. Tuesday, possible low of the week. Wednesday, and then Thursday. Let's see what Thursday does. I'm probably expecting consolidation on Friday. But what does the news allow for? We have PPI on Friday. Nothing on Thursday. So here, 8:30 creates high resistance. Little sell day. Just until 11 a.m. What day are we looking at? Thursday. Your price right to this imbalance right here, right to that new day opening gap. Hey. Or 8:30, my bad. Not 9:30, at 8:30 though. 9:30 expands from that order block above 8:30 opening price and above true day opening. This one a nice sell. Here at market open. And then where do we head to? We draw into maybe 2 hourly down closed. Yep. Hourly down closed candles. Fair value is offered. Fair value is offered. $8.30 opening price is the order block. You up so early to see London session or just a back test? I don't care to trade London session because I think New York session is just superior in my opinion. I that's what I think in my personal opinion, because if I can just wake up, or if I can trade later for more insight, because then you have more insight on what London has done. And New York has more volatility, and London's usually a manipulation. Yeah, it's all up to the trader too. Like, if you want a micro scalp, and if that works for you, then that works for you. Oh, this is a beautiful Judas. This is beautiful Judas. Beautiful Judas swing. And then look at the new day opening gap. New day opening gap. New day. Oh, right to fair value there. And then look at what we do at new day opening gap. Psst, psst, psst. Right here, that's a good move. I would say I scalp too, but I don't know about micro scalping. Like, how long are your trades? ES and NQ are not aligned at all. Not at all. No longer than 3 to 5. Got you. Sometimes 10 seconds. Got you. I don't know. I feel like I'm more likely to go on tilt. Or I would be more likely to go on tilt. $10.50 macro creates a turning point. $11.50 macro. I'm not really going to note that. I'm just gonna mark market on closed macro. It's really the last 15 minutes. I take a lot of trades in a day sometimes, but I have rules that keep me in it. Much to learn. Glad you're working hard as ever. Good luck, G. I appreciate it. Low key, what should I while I'm backtesting? Should after every like day should I like just record like a little video that I post on YouTube? I think I might do that. I think I might do that and just have like all these videos for every session. Yeah, I'm gonna do that. I'm gonna do that. That's smart. Cause then like I'll have all these videos created. Then here we have sell side of the curve. I haven't used this thing in forever. I lucky don't like it that much. Whoo! Yeah, I like those a lot better when they're like lower opacity or whatever. Mitigation offered. Oh my gosh. Yeah, we're gonna. I mess with this, and I'm gonna make like little videos of this. This is a good day, bro. This is a good study, right here. And once fair values offered, ES trades right into its volume imbalance. Because originally we have SMT at these highs here. ES hasn't repriced to them. Then we create a nice market maker sell model here. And then we seek buy side of the curve. This is art. This is art. Like this is a whole form of art here. Don't sleep on this. I don't want to. It has to be done. 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 Do we reprice this order block? No, we should leave it as a breakaway. We reprice right to a mitigation. That would be a mitigation. Low is generated. Come back up. Right into there. Now this right here. Smart money reversal. Smart. We don't have SMT though. Price changes its state of delivery. And then buy side's offered. Look at that respect there. And then this is another new day opening gap. You can't tell me that they don't get respected. What will be the original consolidation? Where will be the original consolidation? Wait. Oh no. I actually did the wrong thing. I actually exit out of the backtesting. Where we at? We're at February 15th here. Let's go over where the original consolidation is going to be. Dang. Wow, that took forever. Well, it's kind of subjective here. This can be the original consolidation. This looks like a very, yeah, I would say this is your original consolidation. But this also is another original consolidation here. But we don't end up taking this high. Why? New day opening gap. So I would count this as the original consolidation. But this is the dealing range that we're working within. And notice how what we're doing here. We're creating a bullish order block, and then we are manipulating below true day open. There's that 5-minute volume balance. Doesn't look so much like a volume balance on lower time frame. Here we have a fair value gap in, fair value gap out. Damn, bro, that's just like 14. And here we have equal highs. So what is this? Hello? I would agree. But I don't know. I've been taking it slow, bro. I've just been trying to backtest, trying to find my model because like, I think I'm just paralyzed by perfection, and I don't know. I'm just submitting to time. Yeah, I guess this might be my excuse, but I don't really think so. But until I have like a set in stone model, I'm just gonna be backtesting and forward testing. So. I'm not gonna note counts for encroachment. That's a lot. Operating within that 5-minute breaker. I appreciate it. Oh my gosh. Look at that precision. Or nah, this is a 1250 macro. And then previous area mitigation here. And we seek buy side. I want to do this from the bodies. 25%. Low risk entry. 50% stop hunt. 75%. We get that silver bullet. Oh. You're a grinder, appreciate it. I don't know if I said that out loud, bro. I swear I be like I do that so much and it's not like people will say things out loud or I'll like think I say something out loud, but I really just say it in my head. Original consolidation, break of original consolidation. We don't ever return back to it. Low risk entry. First stage. Second stage. Oh my god, this is a beautiful. Okay. All right, let's record this. It's in Notion. I wish you could do a slideshow on Notion. I kind of wish I did it on Google Drive, but it's on Notion. Thursday the 15th, 2:15. Hold up, bro. I don't want to do this in. I want to do this in a slideshow. All right. Well, lesson learned. Wait, can I not copy this? Oh my gosh, bro. This shit's gonna be annoying. I should have just done it in a slideshow. It already wouldn't have been done. That's cool. We're straight. I never threw in like a 15-minute order block. Did we not have one? Did we not have a 15-minute order block? Not really. Not really. We didn't really have one, so okay. We'll just. I'm just gonna do it in the. We're just gonna do it in here. Screw it. Okay, let's get straight. Ash, yeah. Actually, I'm gonna use the bathroom real quick. Okay. All right, welcome back to a market model review. Today we have a full MMXM breakdown. As always, these are just my interpretations on price. Shout out ICT, let's get straight into it. So we have a both buy model and sell model, and as we know, that forms the full market maker model. So here, this is the market maker model that we had, and we're going to end up breaking this down. So as we see here, we have an original consolidation, then we have a break from the original consolidation, or we take liquidity, we take buy stops here within this balanced price range, and then we displace lower, we get displacement, and then we redistribute into a new day opening gap, we redistribute again into a new day opening gap, and then we create a low, we generate a low right above a higher time repeat array. That is exactly what we want to see. So a low gets generated right above a higher time repeat array. Then price comes back up into that new day opening gap, and then we slide back into, or we take this sell side, and now we have a breaker. So now a breaker has been activated. So it would be this up close candle, the last up close candle here. And as you can see, that gets respected if we draw that out in time. We also have mitigation block right there, mitigation block right there. As we see, minor sell side taken. And then here, right here, price changes its state of delivery. We then have a balanced price range on the lower time frame. As you see, fair value gap in, fair value gap out. Then we come back down to a 5-minute volume balance. We don't really have a 5-minute fair value gap here, but we'll drop it down to that lower time frame. Volume up balance on the 5-minute looks to get repriced to. Then we have expansion right here within an 1150 macro. And note here, the 1050 macro starts this turning point. 950 macro, we kind of consolidate a little bit, and we kind of retrace back up to have, or we distribute lower, then we come back up to new day opening gap to then deliver to the sell side and into this higher time PD array. Then we have a change of state of delivery, price change of state of delivery, and as we see, we enter our buy program, and look at the new day opening gaps getting respected perfectly. And as we see, we don't end up taking buy side here, we just end up repricing to this new day opening gap. So we work within this dealing range high to this dealing range low, but we actually don't end up taking that high until later on. Later on, we end up reaccumulating and then taking buy side there. So let's get straight into it. I wish I did a slideshow, but this is what we're working with. So as we see, 9:30 open, we have 8:30 high impact news. We come up, we take the high, the dealing range right within that new day opening gap, and then we form low resistance liquidity. We're consolidating right before market open. This is just time distortion. We're waiting for market open. We come in, pop up into open, and look at this mitigation block right there. Reprice right to fair value gap right here, and on the 5-minute, that was a balanced price range, and this is what a balanced price range looks like on the 1-minute. Price shouldn't really want to violate this balanced price range because we've already done what we needed to. We've offered fair value into the market. We come into here, boom, displace lower, new day opening gap right there. Perfect. Then we come back in, get another entry within that 950 macro here, and there isn't really a PD right here because it's a new day opening gap. That's the hidden sauce. New day opening gap's the hidden sauce. And then we come back lower up into the new day opening gap. And notice here we disrespect this imbalance. This could have been something. We're in a deep discount here. And then we come back up into that new day opening gap. And then here's the smart money reversal. We get a low generated right above a higher time PD array here. And then we dip into that right in that back end of that 1050 macro, and as we see here how that new day opening gap's respected, we have an order block right here. As we can see, we end up displacing lower, and we're manipulating into with speed. That's what we want to see. We want to see speed into the PD array, and we want to see speed out of the PD array to show the intention. As we can see here, we have a 5-minute order block right here. That's when we actually change our state of delivery to buy side delivery here, and as we can see, we're below true day open here, and we're below 8:30 opening. As we see here, this actually is ES, and look at ES. New day opening gap, new day opening gap. Look at that respect right there, and then this also is another new day opening gap. I don't know. You can come to your own conclusions. I'm just going to bring my evidence of what I see within my back testing. And then as we see, this is the higher time frame PD array that we are coming into. We have these two down close candles here. And notice this market maker model is the formation of an hourly order block. This is what it looks like on the hourly. As we see, we come down into these two down close candles, and now we're creating another propulsion block within the market that we could see some more accumulation within. And notice this is happening below true day opening and 8:30 opening. And as we see here is the 1 minute chart on NASDAQ. Here we create a balanced price range, fair value gap in, fair value gap out. We have an inversion that we tap right there, and then we get displacement higher, and then we have this inversion right here. We end up reaccumulating within. And as we see, we come back down here to this propulsion block right here. This is your order block, propulsion block right there, supporting price. And look what we do here. We have a stop hunt here. We reprice that 5 minute volume imbalance. We get displacement higher. And notice what we have here. We have relative equal highs within this. So this in itself is a fractal market maker buy model. So what do we have here? We have a market maker model within an already existing market maker model. If you go back to that dealing range high to that dealing range low, this is just working within that. Then we come up, we take relative equal highs. So you see the respect there. And here we can swing grade this. I know this is kind of a lot, but from this low, dealing range low to this dealing range high, here we can swing grade this at 25%. We'll expect our low risk entry. At 50%, we expect to see consolidation. That's exactly what ends up happening. We're a stop hunt here. And then we end up seeing silver bullet within that 75%. And notice this fair value gap happening around the 50% of that dealing range. Measuring gap right there. As we see right here, we have a fair value gap that gets reaccumulated within here, within that 75% range right there. And as we see here, that's a 25% gap right there that we never really head back into. And as you can see, we have some precision right here with the standard deviation at -4, perfectly aligning with constant encroachment of that new day opening gap that gets repriced to right there. And then as we see here, we have a 1250 macro. We end up offering mitigation. We have a 5 minute breaker. We have this these two down close candles, 1250 macro. We slightly displace below this. We reclaim this for value gap right there. And then we end up seeking buy side delivery here after the end of that into that new day opening gap. We come back lower here around 215, 230, and then throughout the rest of the day, we end up taking that high. So here we have some swing grades, and I forgot to include the rest of this to when we take buy side. But as we see here, where do we reprice right to? This imbalance right here, also new day opening gap high. I don't know, man. I don't know. Like that to me, just seeing that happen, and it happens over and over again, just is beautiful. And as we see, we have this doing range high to low. I use the bodies for this. 25%. Where do we get? Low risk entry. 50% consolidation. Stop hunt here. 75% silver bullet. And then we get that silver bullet up to that right there. And then as we see here, we have standard deviation from this low to this high. -1 gets respected perfectly. Look at that. And then as we see here, -3.5 good standard deviation. And then I think -4 gets respected. I don't know why. I thought the market maker model ended here, but it didn't. And now we have full market maker model. We have original consolidation. Also another original consolidation. Remember, it's fractal here. Distribution, accumulation, and then more accumulation over here. And then the time it takes to complete this model. And I low-key, let's hop into this real quick because I don't know why I didn't include this, but yeah, we end up taking buy side here around 4. Notice 4 puts in the high a day, 4 p.m. Then I also want to throw up these new week opening gaps right here. New day opening gap right there. Gets repriced to at 315. Market on close macro. We end up repricing the buy side here. Putting the high day in at 405. So we end up taking this. So this actually should be extended, and I apologize. I don't know why it was bugging like that. And as we can see, 4 hours to complete it, 2.5 hours, or 2 hours 45 minutes to generate it. And that's the market maker model. Anything wanted to, bro? What's up with Gary? I swear, I appreciate the commitment, bro. Always in here asking about Gary. I don't know why you care about my opinion. Is it a bot that always comes into my chat? All right, I'm gonna upload this. I wish I upload this. I'm looking gonna upload it tomorrow. I bet. That was a very nice study right there. Very nice. Very nice study. Very nice study. What do we have here for Friday? Oh yeah, PPI. PPI gave us no wick. No wick. We're likely gonna close here. Yeah, I was about to say that. Yeah, new week opening gap gets repriced to at 10 a.m. Honestly, bro, like, where do we reprice lower from? Where do we expand lower from? Where's it happen? Okay, what I'm gonna do is I'm just gonna create these in Google Drive, and then at the end of the session, we're at the end of when we're done backtesting, I'm just gonna go over all of them. I think that's the best. We'll see. Look at where 9:30 opens though. ES had a little bit different delivery here, eh? ES actually had the strength to do a buy program, to turn into a buy program here. Same thing though. We redistribute within a 9:30. $8:30 news. No wick here, or like no wick on this candle. It becomes a draw on liquidity here, and we reaccumulate within that new day opening gap here. We put a low right at new day opening gap here. 8:30. 8:30 doesn't really create a high resistance signature. It doesn't. 9:30 does, though. 9:30 comes in here. We take buy side. So we do have SMT there. We have SMT. SMT created while trading What do we reprice to? Funny. Funny. How many points is just within this one candle here? Like 70. Oh, gorgeous. Gorgeous. I think I remember this a little bit. I remember like trying to get like price to trade up a little higher on ES, I think. Yeah, I want to see ES like trade up here. Here we have volume amounts. I mean, we kind of have volume bounces everywhere on ES. New day opening gap, new day opening gap, new week opening gap. So SMT gets created here, and we have a fair value gap here, and then we reprice where to? Where to? So SMT imbalance right there. Mitigation. We have a breaker. Trade it into the breaker as well. Hold up. I'm just gonna have it like this, so it's a little bit less distracting. Here, and then we have offer of mitigation. New day open gap right there. New week opening gap, sorry. Huge sell off. We repriced to 75%. Or 50%. So I don't know why I said 75. We now have an order block. 1050 macro offers expansion. We ping pong within these two new day opening gaps. What are your price to? Down close candles here. We have a negation. We offer fair value. Notice what time starts the sell side delivery. $12.10, $12.50 macro, not $12.10. Black Swan repricing. Do we have SMT at these highs? I feel like we should. ES was a lot stronger. Alright, let's go to the next day. It's bank holiday? Yeah. So Asia's in a low to reprice lower on a Tuesday. This could be Tuesday low week here. We don't really have any new day opening gap though. New week opening gap. Just straight new day opening gaps. What do we have created at 9:30? What's created at 9:30? High resistance signature at 9:30. Oh, beautiful on ES. Do have SMT here. Yep. SMT created 930 resistance above true day and 830 opening price. Then we get displacement lower, fair value gap right here. This might be constant encroachment of this wick, but I doubt it. I mean, the bodies are respecting that, and we displace lower to end up in our new day opening gaps here. Perfect. Smart. Okay, so SMT here. Where do we distribute from? Wait, I didn't even see. Oh, we weren't within one. Oh, this is a new week opening gap right here. It doesn't show up on the 5 minute. Wait, it doesn't. Oh my gosh. That's gorgeous, bro. NQ doesn't trade into this. $9.30 trades right up into a. With SMT and stop rate. What is more favorable? I feel like we had SMT here at 215 lows. And now it shows up. Oh, that's gorgeous. Oh, look at where we repriced to. Column low 150 points. And here, look at where we redistribute from. I appreciate the sub. This is how we don't really get any retracement at all. New day opening gap. No retracement. New day opening gap in balanced price range. Check 30s? What does that mean? Oh, 30-second. I don't have 30-second. I don't have 30-second. My cheap ass doesn't have 30-second. And honestly, it's because I don't want to get caught up in trying to trade the 30-second, you know? But oh wait. We have a fair value gap here. I mean, I feel like if you understand the delivery of a candle, here might be a 30-second, but I don't think so because we have that wick. Maybe a 15-second. Here would probably be a 30-second fair value gap right there within that new day opening gap. Probably a 15-second within here. We generate more liquidity at a random level. Boom. Then we trade back lower to a random level. $9.50 macro doesn't really do anything. $10.50 macro is a reversal point. Displacement at $11.50 macro. We get a Sol model here. And then we don't really do much except for close off that low. Here we had earnings of some sort. What type of earnings do we have? Holy. Gotta have been Nvidia. No way Nvidia had more earnings. Or was there... Financial stability reports. I've honestly never seen that. This was not a good trading day. Bro, I'm not gonna lie. I think new week opening gaps Like low-key with new incoming gaps, you're able to trade news. I'm gonna get straight up. It's repriced too perfectly there. $8.30. What do we do? $8.30. We kind of create a high resistance signature. Just bad conditions there. I'm not really gonna do too much annotations here. I mean, I feel like I should because it's a bad condition day, but I think it's straight. Asia put in the low a day. So we had, this is kind of like what happened Friday or yesterday. No, yeah, I think yesterday. Yeah, yesterday. Since there was no low resistance liquidity generated overnight, the liquidity that we used was liquidity in the AM session. Oh, this is nice on ES. Come down. We created a low resistance liquidity signature at 9:30. High resistance created at 9:30. I'm not really gonna call that an order block. I can't. I can call this though a mitigation. For sure. Technically it's all these candles. So mitigation's offered here once we break above it. We have a nice order block here. We trade in, trade out. Don't really get too much in terms of like possible entry. I mean, this looks pretty much identical to today, honestly. Or yesterday. Oh, -3. Nice. -3. A nice deviation there. To buy side. Here, NQ might be a little bit better, and we're at a new day opening gap. I do like that a little bit better. Look here, why am I in an object tree? Hourly? Are we in hourly mitigation too? Not so much. Not so much. And NQ still has buy side to possibly reprice to. Beautiful. And an order block. On low key, like This is more of a propulsion block in my opinion. This is the order block. This 15-minute order block. That's the order block. Not that the other. Not that 5-minute. Okay, high resistance. Do you have an SMT at all? Possibly. 6 a.m. We take 6 a.m. We don't take 520 low though. Hey, we do have SMT here. That's your high resistance. Oh yeah, that would have been nice. Then you have propulsion. Does propulsion get traded to? It doesn't look like it. No. We have those two down close candles. Oh. Then we reprice to new week opening gap. So yeah, this is the order block. This is not the order block. And then 950 we trade into buy side, into new day opening gap. ES is at all-time highs. Double purge Judas. Come up, take buy side, then sell side, and then we reprice higher. I appreciate the sub. Appreciate it, bro. Or ma'am. Or ma'am. Or ma'am. And here, create SMT here. Do we take this low before? No, we don't take that low before, and then we take it before SMT. And then we get a fair value gap right here. Price trades right into into the new day opening gap right at 950. I appreciate the sub. Then we come back up. We take buy side again. Reprice to that order block. This is an inversion here. Constant encroachment that holds. Then we accumulate. We consolidate. Price isn't going to reverse from a consolidation. We come back lower. We refer to this imbalance right here that we get repriced to. Boom. And then we actually institutional order flow entry drill that. Accumulation, manipulation, distribution right within this. And then we seek a new day opening gap. New week opening gap. 1050. Oh, look at that. 1050 macro creates a reversal. And trades into the propulsion. $10.50 macro creates a reversal. Oh my gosh. And notice below 830, we used 830 opening price as power 3 because we're well above true day open, which is the 12 a.m. open. Oh shoot. I'm tweaking. High resistance liquidity. Remember, higher time frame IOF is bullish. We reprice right to that inversion right there. Oh, look at constant encroachment with that. Constant encroachment, how you can see it is that a rectangle right there. I actually end up purging buy side here. So if macro expands, market on close macro here, nothing to really concern with. I'll take a picture of that for the journal. And on to the next. That was a nice session. New day opening gap. Oh. Oh, we're probably gonna close right up here. Or down here. Yeah, buddy. 9:30 we open right here. Drawing up in the buy side. So here 9:30 creates high resistance. Then we get fair value gap in, fair value gap out signature. Above true day and 8:30 open. This is a Friday. What type of news folders? Nothing. So no news. So we want to wait for market open. No news. So we suggest that 9:30 manipulates. /23, 9:30 reversal. No news. want to see this standard deviation here. Negative 1.5. Yeah, negative 1.5 about there. I want to see this level. I want to see what we do at this level. Do we expand from that? Man, that's just gorgeous. That's just gorgeous, honestly. Right? Draw on liquidity at 11:10 during a macro. Oh, yep. We're in all-time highs, though, right? Yeah, we are in all-time highs. So that was the day that created all-time highs. Ooh, we have -4 syndication from. I want to see if this is -1.5. Almost -1.5. Almost -1. Overall, though, it's kind of like a. We do have SMT here. See here, fair value gap in, fair value gap out. We never actually repriced that. We don't create a fair value gap at all on ES. NQ is the weaker one because NQ hasn't taken all-time highs, I don't think. Oh, okay, so we just took all-time highs. Oh, okay. That makes sense. $75% offers silver bullet. Look at all these prices. That's like trippy. So all-time highs have been taken. So 930 does create high resistance. And then look what we have here. High resistance high resistance signatures. We have a 3-minute IOFED. So on the 2-minute, we actually kind of trade up within the. Right within 950 macro. If this is 1050 macro, that's crazy. That is. Oh, look at what 1050 macro does. 1150 probably here. $12.10. $9.50 macro. That's when we start repricing lower. We get a little retracement higher into order block here. Do we have SMT at those highs? Just like little fractal SMT there. Maybe from 945 high. Yeah, we actually take 945 high. So we do have SMT there. We have a smart money reversal. Very, very fractal scale. I appreciate it, bro. Thanks for the sub. 950 macro. We end up getting displacement. Institutional order flow entry drill. We have fair value gaps in, fair value gaps out. Boom. And then we're kind of consolidating here for the most part. Slowly working our way lower. New week opening gap. We reprice to. We actually get a retracement off of that. And then once we break through it, we kind of use it here, but we're referring to this order block instead. Here, then displacement, then 1050 macro ends, and then we see buy side. But oops. Here we have sell side. So this will be your sell side objective. What's that? That's London low. Do we have any like fair value gap that we draw into? No, it doesn't seem like it. I wonder where we could have drawn right into. It's not a 1 hour fair value gap. It's not a 4 hour fair value gap. It's that new day opening gap. It's hidden in plain sight. The 5-minute bodies though, look at that right there within a new week opening gap. Price doesn't spend much time up here. Okay. I think we get ahead to the next day. It's a nice session. Alright, so this is a Monday. We have a new week opening gap here. So 8:30 creates a high resistance signature. I want to see these lows here, probably. New week opening gap. Well, I guess we take buy side, or wait, where is it? That was 9:30. Then we come back down to these lows. New week opening gap. What's the news calendar? We had 8:30 news. Oh, it's Monday. We had new home sales. No red folder news Monday. No red folder news Monday. So we gotta pay attention to 9:30 if we're gonna have manipulation. Oh, ES is nice. ES is nice here. It's a little sloppier with the delivery, but what do we have? Low resistance liquidity here. Low resistance signature. I do want to look at my old journal, bro. I'm curious to what I interpreted this as. See, there's that trade I was talking about earlier. See, this was the nice market maker model, right? No, that was 215. We had swept this high and we were selling off hard on NQ. You just love to see it. It's just like this was my analysis. What, 227? So 220, 327, 427, 527, 620. 4 months ago. So I would say I've been trading ICT for like 5 months. Like realistically. But I've known about the concepts for a long time, but I like kind of like half-assed used them in my analysis. I never like really put in the work, you know. Well, I was putting in work, but I was a little bit lost, you know. I was putting work more into my here we create whipsaw here. Is this what do people actually trade with this? How is this helpful? See how the high probability soups are when we take a dealing range. It's a high probability soup right here if we have SMT. High probability soup. And you could just be looking for equilibrium of that range. That could be a model in itself. I don't like trading soups because against overlying order flow. Yes, on the other hand, we don't really have anything to refer to. IPTA doesn't really care about anything over here. No, we've taken 20 candle high here. We repriced to these lows. That's where IPTA wants to reprice to, are these lows right here. Oh, look at that new day opening gap though. That's after we take sell side though too. So balanced price range there. Gets respected. We have our changes a delivery right here on the 5-minute candle. So 5-minute order block, it sweeps. Oh, look at the repricing there right there. Reprices perfectly to the order block. Order block low. Order block open. Balanced price range holds. Balanced price range holds. Holds. And we can trust. What do we have here? Low resistance liquidity signature. Low resistance signature. Paired with high resistance signature. Here we have a volume imbalance here. Volume imbalance. Oh, look at that. volume imbalance perfectly repriced to. We have another volume balance here, but it doesn't really. $9.50 macro offers retracement. So where's 11.50? Oh, 11.50 reprices that perfectly. But we want sell side. Random displacing. Create a volume balance right within that new week opening gap. Beautiful morning session. Beautiful morning session right there. And then let's look at this. To the tick, kind of. New day opening gap respected. New day opening gap drawn towards. Look at this for value gap right here. That's within a macro. Right at it. We draw towards this imbalance. We have a big imbalance here. Pair with new day opening gap. Oh, beautiful. How many points is that? 7. Let's see this on NQ though. Let's look at the 1 minute. NQ just is not clean, you know. 9:30 we come up. Then we come lower, we create a dealing range. So we already take low resistance liquidity. It's just not there, you know. Intermediate term high right there. That's a soup. Premium or D premium. Just consolidation. Oh, notice -3 line up with constant approach. Know that. Oh, it's not actually. Got catfished. -2.5 lines up with the. Again, got catfished. I thought this was on that low. 2.5 lines up with sell side though. But I mean, even look here. We take the doing range, and then we have. We fail to take this one, or do we barely take it? We take it by a pip or a tick. So now we have high resistance signatures at the highs. We just took in a doing range here. We have 1250 macro right here. Reprices that new week opening gap, and then we seek sell side here. So this is a little model right there. Where's 2 p.m. though? 2 p.m. It's between here and here. Don't really get anything. I mean, well, shit. Why did I say that, bro? That's the problem being on live stream, bro. Once it's said, cannot be unsaid. This honestly could have been a day you take a loss. If we don't create 830 or 930 resistance. Do we have any news here? I thought we did. Tuesday? We had 10 a.m. news here. We had 8:30 news. And 10 a.m. news. And we didn't really manipulate. We liquidate sell side here. Take the sell side liquidity pool. I think I remember this day. Well, it's probably a little bit familiar, but I have so much more knowledge than I did then. But I still got more knowledge to gain. You know. Bro, we'll see where I'm at in like 4 months from now. I'm kind of excited, especially if I backtest every single day for at least 5 hours. We'll see. Balanced price range. Look at the bodies. Do we have SMT here? Okay, we do. Okay, at least this is tradable, honestly. I thought there wasn't going to be a trade at all here. 930. Let's make sure we take 855 high. Yeah. SMT, 930. We take sell side there, so there's not really a good entry here. How many points does this sell off though? Good old 60 points here. Oh, I tried to like long here on like a demo account. I remember this day. Bro, why did I try to do that? Wait, is this a new day opening gap? Oh my gosh. So propulsion, and this is another propulsion because technically anything after the order block is just propulsion. Inversions. And then after you take buy side, we end up having repricing lower. $11.50 macro. Little morning session here. We generate sell side. More sell side interest. After minor sell side taken. $12.50 macro puts in a reversal. Here we have a nice wick. Nice wick created. Oh, beautiful 5-minute order block. Beautiful, 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 beautiful. Minor buy side rest here. Oh, I thought the old high was gonna act as support here. Let's look at this doing range here. Here we have the breakaway gap here. Price uses that as support. New week opening gap, broken above. Look at the wick. Wicks respect that, and we get displacement. Where's the macro? 150 macro here. Nice model there. February 28th, February 27th there. Dang, dude, it's taking a while to get through February. I think that's where we started. I honestly think this type of backtesting is so much more beneficial than like just trying to pick a trade, you know. So right now we have sell side has been purged, so well, I know we put in failure swings here because I've been here before, but we'll see what happens. Here we just consolidate the whole day. But there could be a trade here. To sell side, then back up to buy side. Reminder, big sell side pool has just been taken though. Kind of a low probability day here, honestly. What news do we have on Wednesday? We had 8:30 news. Whew, look at the bodies there at 0.5 at equilibrium of that. And into a new day opening gap and into balanced price range. That's at the very end of the day. But theory is still holding there. 930 creates a whipsaw here. Then we come up, we reprice the lower to sell side. Then we come up to buy side. Then we reprice lower, and then hold up. So let's see from this doing range high to low right there. 25%. Come back lower, higher, lower, higher. So it's like kind of like seek and destroy you just there. Seek and destroy offers a nice 950 macro reversal more times than not, or at least from what I've noticed. Yeah, today I don't really want to watch any lectures, honestly. I just want to backtest. I just want to backtest the rest of February, and I do want to retape more than I did yesterday, more than I did yesterday. We'll see. I'm kind of hungry. I might grab some food, but I might wait a little bit too. Buy side, sell side, buy side. $830 doesn't offer high resistance. It doesn't. $930. We do have S&T at the lows. We take 450 lows. Yeah, we do end up creating 450 lows here. Honestly, just wait. Here's the model. Wait for high resistance to be created and then just take a position. So wait for high resistance to get created against low resistance. So then that's your model. That's when you engage. That'll either be within a macro at 930 or at 830. Macros as entries, looking for a market maker model to engage within. Is that too complicated? Maybe a 3-minute order block. I know there's an order block here. It's probably 5-minute. Probably a nice 5-minute. Yeah. Okay. So this is the order block I would reference because it takes liquidity here. And it's nice one big down close candle right there. And then where do we actually we get a deeper tracement into that. Right here. This imbalance here. Look at the bodies. The wicks are okay. The wicks are okay. Wicks right there. Come out, we reprice. Then we finish this market maker model here. Let's look at this swing grade. Where do we consolidate? At 50%. Low risk entry at 25. Silver bullet. Oh, beautiful. Standard deviation as well line up right with buy side. Top right. Look at that nice imbalance right there. Boom to buy side. We end up pricing to buy side. Should I make a video about this? Yeah, let's do it. NQ market maker buy model. I need to pull it up over here. Oh, bro, this monitor kind of hurts my eyes. This one strains my eyes. Uh-oh. It's not what I meant to do. Ah. I just messed it up. Nope. Ah, that's good enough. So you can destroy Judas. We come down to sell side. Forming SMT. Wait, where's that 5 minute new day opening at? It showed up on the 5 minute. right here. Oh, no shot. No shot. No shot in the PM. Oh my gosh. And then these areas of distribution will become new areas of accumulation on the right side of the curve. And that is how we pair oh, looks like we're gonna have a good trading session today. We'll see. I haven't done any as I haven't done anything yet. All right, I'm gonna present this. Present this to the teacher. All right, welcome to another market maker model. Today we had a market maker buy model, or dang it. Welcome to another market maker model. This was a market maker buy model. This was February. The date's wrong too. It's the 28th. Yeah. Welcome back to another market maker model. Today we had a market maker buy model. This was February 28th, 2024. As always, I'm a developing student, and these are just my interpretations on price. Shout out ICT, let's get straight into it. So as we see here, we end up forming a market maker model here. And as we see, this is a market maker sell model, and then this is the market maker buy model that I will be going over. I'm going over the market maker buy model because it aligns with the times that I like to look to trade. All this, although it is a market maker sell model, it doesn't really align with the times that I like to trade. But as we see here, market opens here. We have buy side, sell side taken, and then we reprice higher. So within that market open, we end up taking buy side, then sell side liquidity gets taken here, and then we take buy side again, and then we take sell side again. So I call this, and I classify this personally as a seek and destroy Judas swing. That's what I've personally called it. And then we come back down to that sell side, and then as well as that, we form SMT at the lows. So now we have created low resistance liquidity above us, and now we have formed high resistance liquidity during a time of day in which I'm looking to trade, which is that 950 macro to 1010 macro. That's what forms a reversal. Most of the times, or at least when I backtested, when we have a judo swing that looks like this, where we have seek and destroy conditions, that 950 macro to 1010 macro ends up being a better entry because maybe some traders are chopped up within this. Maybe they've taken losses. They've added positions that are unprofitable, and therefore that 950 macro is going to have more low resistance liquidity run. As we see throughout this model, we end up forming a 5-minute order block. This 5-minute order block that sweeps into liquidity into that higher time PD array, engages the higher time frame PD array. Then we come up. We have a change of state delivery. Now we've entered buy model. After we have that change of state delivery. And right here, what are we doing? We're mitigating this imbalance here. Then we're coming back lower into, we'll get in that lower chart. And then we have the 950 macro right here. And then we have the 1050 macro right here. And as you can see, these are the swing grades of this model. And right here, we have a standard deviation that lines up with buy side there. So this is what the market maker model looks like. As we see, we have a smart money reversal at the higher time frame PD array, which is sell side liquidity. Sell side liquidity is the higher time frame PD array. Then high resistance liquidity is formed here. We then create a balanced price range here. Look how much buy side, sell side, buy side, sell side. This is efficiently balanced. And then we create an inefficiency here. Market looks to reprice to that during a dead zone here. This could be an entry though. But then we come back in, and then where do we distribute from? 1050 macro up to buy side. And right here, this screen right here is a new day opening gap. It just didn't get registered on my indicator. And then here we have another new day opening gap that we then reaccumulate within. We come back down to imbalance right here into an old area of mitigation. And then we come up to buy side here. So as you see here, old areas of mitigation, old areas of selling will become new areas of buying. And as we see here, boom, right there. And then this level right here. And then we also have, we don't really have a nice clean breaker, I would say. The breaker's here, I would say, in my opinion. And then here is standard deviation. As we can see, if we just look at the swing grades, I don't think I have a 1-minute chart, but if we look at the swing grades, what do we do at 50%? We consolidate, we accumulate. What do we have? We have a stop on here. What do we have at 25%? We have a low risk entry. What do we have here at 75%? We have silver bullet. So as you see, in this implied dealing range from this high to this low, we then end up getting these nice signatures that repeat over and over again. And as we see, we have silver bullet right here, fair value gap, boom, right at 75. That's where we end up repricing higher. And here we have standard deviation here, -1 lines up to buy side. That could be a good projection. And then as we see, we have this one right here, -2 to 2.5 is like possible reversal area. And look at where -2.5 pretty much puts, well, is that high pretty much. I think it might be half a tick off or half a point off. But yeah, look at that. Ends up getting repriced too. And yeah, that's the market maker model. That was a shorter video. When should I post that? Hey, appreciate the support. Thanks for the sub. Alright, we're gonna, I'll post that at some point. I'm gonna upload it right now before I forget, and then I'll just have it scheduled. That's what I've been doing. I've just been like scheduling them like crazy. So as we see here, we come up to new day opening gap within macros. Like, oh, it just cannot be. It happens over and over again. Look at new day opening gap. Perfect. Let me upload this real quick. I'm gonna post this video. I'm gonna schedule this for the. I think 13th is the next upload that I need. Yeah. There, I've done my homework early. Bro, what? I had a market review that I posted that had. What strat are you trading? ICT concepts. Let's roll into what price action today. Honestly, I'm definitely looking for this new day opening gap. I'm definitely looking for this new day opening gap. That looks solid. It aligns with that 15-minute fair value gap too. I think that's gonna be a draw on liquidity. Hopefully, get manipulation up. We have Powell speaking at 10, so I was expecting 950 macro to be something. What is 953? It's called digital time theory. It's called a root candle. It's pretty much a hidden liquidity candle, to where there's actual hidden liquidity that rests within that candle. Those 1250 macro, we get repricing higher. I haven't done too much back testing with it and too much personal live testing and forward testing with it, but I've seen it. Yeah, the root candles. Let's go to the next day. Yeah, also I'm saying I don't really know how, maybe for like drawing liquidity. They're used for like premium discount, I know from reading the thing. Oh my gosh. What news do we have there? Probably CPI. Core CPE. I trade market maker models pretty much. Looking for 950, 1050 macros. Normally the AM session. Looking for a silver bullet expansion. Oh, I remember this day. I actually had like a decent trade here. I remember I got that. Oh yeah, it was a sharp turn. I remember this, bro. This seems like it was forever. This seems like it was just yesterday. I'm not gonna lie. It came back down to this imbalance. Bro, it's just crazy to know, like. It's just crazy to know like what you were missing. You know. I think that's a good model. For me, I don't look to enter off of inversions, but I look to use them as logic. Like for this is an inversion, but I'll use it as a logic to where we don't need to trade back in there. I remember I got like the low of this. Oh my gosh. Oh my dude, that right there. That right there is just beautiful to see. That's just look at the precision. I might make another video about this, honestly. We'll just spam up some videos right now. I need to title this. Is this the 29th? No way we're getting like... This is some good price action. New day opening gap. New day opening gap. Respection. New day opening gap. Trading MMXM. Using like where that's nice. Like before, I thought like, oh yeah, we have an order block that we repriced to. No, it's really that new day open, and it's that current. It was a current new day opening gap too, so that makes it a little bit better. Where news expands from. I low-key don't even know if this is an order block. Honestly, it kind of is. We come back down, have a stop rate, 75%, silver bullet. Do you only execute during macros? I try to. Overall, the 950 macro is gonna have the most volatility, but it also depends on the day. Like as you see here, we just had a huge expansion. We had huge expansion during CPI. CPI just largely expanded, so therefore, the 950 macro just won't be as nice. But as we see here, 950 macro does get us sell side engagement. I mean, it's just certain times of the day when macro is going to spool. 1050 macro here isn't anything. And then we go to new day opening gap right there. Boom, sell side delivery right here into the higher time frame PD array. Here we have fair value gap in, fair value gap out signature with that 5-minute order block. Then we end up seeking buy side liquidity, reaccumulating within the. I'm just gonna make this a short video, honestly, but I'm gonna film one. Yeah, I took an entry here, I believe. No, this might not be it. There was another one that looks exactly like this that I definitely. Fair value gap in, fair value gap out. That's just a change of state. It's not. It's changed. Which ones are the? Are you still asking which ones are the best? Oh, I mean it. I don't think there's a good. It depends. It depends. It all depends. I would say that the 950 macro is the most volatile, and that's the one I look for because it leads into the 10 a.m. hour. I haven't been live trading. I've just been back testing. I'm kind of newer to ICT concepts. It's been around like 4 or 5 months, so I haven't been live trading. All right, I'm just gonna record this real quick. All right, welcome back. Here we have another market maker model. This was February 29th, the day after the previous one that I recorded, and we're going to use new day opening gap to help frame a smart money reversal. And as we can see, the new day opening gap right here gets respected right there. So if you don't have this new day opening gap, this marks the current new day opening gap. This might look like it's a random level that we support off. Maybe you think it's an order block, which yes, we do come down into this order block, into the lower portion of this fair value gap. That's why this new day opening gap doesn't mean anything unless it's framed with other PD rays. But when it's framed with other PD rays, that new day opening gap is powerful. So as you see, we come back down into this last down close candle here, and right into that new day opening gap, that lower portion of this fair value gap. That's where we reprice to. And then look at the bodies of this one, of the 15-minute candles respecting this new day opening gap as well. Then we actually reaccumulate within these new day opening gaps as well, heading to buy side liquidity. So as we see here, this kind of is a later PM session of model. As we see, the 950 macro allows expansion lower. Then this is around the 1050 time, and then we expand lower into here. We create fair value gap in, fair value gap in, fair value gap out signatures, and then we head up to buy side liquidity. As we see here, reaccumulated within this new day opening gap up to buy side, and look at 50% of that imbalance right here gets respected. We see buy side liquidity, and then this is ES again, and as you see that new day opening gap right there getting respected. 5-minute change to delivery right there gets respected nicely. Then we come back, we reprice to where 5-minute order block within that new day opening gap, 5-minute fair value gap, within that new day opening gap, and then we seek buy side liquidity here. And here is lastly the 1-minute chart. I didn't do too many annotations. I just wanted to submit this into the journal. The fact that we had this new day opening gap get respected nicely, and look at that, up to buy side liquidity there. And then this is NASDAQ, and as we see, that's that 50% of that fair value gap. And we could swing grade this from low to high, 25%. We can expect to see a low risk entry. As we see here, we have order block there, and there's not really an entry here. We just create a balanced price range, trapping all these traders within this fractal here around 50%. We consolidate. We end up having a stop right here, and then we get a swing higher, and then right there, new day opening gap right there, stop rate as well, and then boom, up to buy side liquidity there. And here is lastly the 5-minute chart here, and as we can see, we have that 1-minute order block right there. Create a wick here showing that we might want to reprice higher. Once we get that balanced price range, we know for sure it's more probable that we're likely going to head to this high. It still could happen. We still could reprice lower, but the fact that we've had this just on this time frame, and this is without higher timer bias, as well. And then we get sell side liquidity there, 5-minute imbalance right there. That's the soup. Then we reprice higher. Same thing again in that 5-minute imbalance there, and that new day opening gap, and then we reprice to the buy side. So yeah, that was this market maker model, just short and sweet, simple. But you don't sleep? No, I don't. I sleep early. I went to bed at like 7 last night. And then I woke up at like 1. Then I went live. I haven't been sleeping as much recently just because, like, I don't know. We got stuff to do. We got stuff to do. We got things to get done, you know. How long you been backtesting? Not just today. Well, I mean, I feel like I've always been backtesting, but I say I've been trading ICT concepts for around 4 to 5 months seriously. And I don't know. I feel like I'm the type of guy to go all into something. Like, as you guys probably can tell, like I go when I try something, I don't want to like half-ass something. So when I say I start, that means like I really started like 4 months ago and really gave effort. And that's like a personality trait that I have. Like I don't like to half-ass something. Like if I really want something, then I'm gonna try to get it. But then that also leads to burnout sometimes, occasionally, which also isn't good for me, which is something I have. I'm uploading this video right now. Yeah, that trading and learning, especially like when you try to do everything so fast. Yeah, I would agree. Cause I don't know, like I don't want to look back and be like, man, bro, well, what if you just tried this a little bit harder? What if you did that a little bit harder? That's why I'll be live every weekday. Well, mainly, yeah, mainly every weekday for at least 12, at least 11 hours. We'll see what's like on the weekend, on the weekends. On Saturdays, I'm for sure able to do longer streams, but on Sundays I can't because I don't really go to church. And then I usually hang out with family a little bit, so. Why is it 10 a.m.? I would agree. That's why I trade them. I mean, definitely how the market operates, but it's ICT concepts are hard because they're all they're subjective. You know, not everything's like do this, do this, do this, do this, and then you have your trade. That's why I think a lot of I definitely overcomplicate them, but also it's like that because the market isn't simple. Yeah, it's all about finding a system that works for you. And I don't know why. I don't know why so many people get worked up over like who trades what. Like, bro, just trade what makes sense to you, and then stay in your own lane. If someone makes you mad, then just don't even just block them out. I didn't do a day for 229. Yeah. That's personally why I don't trade them or trade like that, because strategies like that are more subjective than like a certain price level. Like this new day opening gap is there for everyone. All right, so we sweep liquidity. Then we have an order block form here. Friday, first of the month. 8:30 we trade into that. What type of news do we have? We have 10 a.m. news. 10 a.m. news. That's nice. That's nice to see. Like the fact that we're in all-time highs, I like using new day opening gaps. $8.30 kind of creates a high resistance. Well, it does create high resistance. And we have that massive repricing lower. 8:30 creates a high resistance. Do we have a nice 15-minute, or that's what I have marked out there? I guess we can count this as the order block. Trades right into there at 9:45 with the fair value gap. Let's look at ES though. At 9:05. 720 lows. Oh yeah, we have SMG there. With 830 low. Well, around 830. SMT, we know price is more likely to expand higher, especially after this. So now drawing liquidity for us is for sure this high, no doubt. With new day opening gap. Displacement, fair value gap, right there. Up to buy side liquidity. Where's ES when market opens? That's the wrong one. ES reprices back to new day opening gap and then expands. While NQ is drawing back into fair value gap order block. $9.50 macro. Buy side gets taken. And then after that, trading day is over. Literally nothing. I'm gonna get this standard deviation right here. Yeah, we just have a grind up all day. Oh, look at equilibrium lines up right with that order block level. And then at 75%, we get another repricing higher. And then I don't think there's really anything else to annotate here. Wait. Except for maybe this wick here. Oh, wait. We reprice right back to this. Notice how the algorithm ignores this wick, kind of. And we reprice back to that high. All right, all-time highs. New week opening gap. That's definitely a bank holiday. Gotta be. No, just on Monday with no red folder news, and we're like that. Why is it not showing Monday at all? Okay, we'll just discard it. We'll just ignore it. Do we have if we have SMT here, that would be nice. Other than that, I don't know. This is more. Not as what I would look for. I think that was just a day with no news. Oh yeah. Wait, 10 a.m. creates that. We do form SMT though. I think that was just a day with no red folder news. So we do form an SMT all the way up here in a new day opening gap. Price is resistant, and then we head to sell side. Yeah, I'm gonna get some food now. Get some food, and then market opens in 2 hours, so we'll be there, and then we'll do the same thing as yesterday. And I'll go live. I think we'll go live for a PM session too. PM session backtesting, but we'll see. We'll see what happens. Alright, low key, we could watch a lecture. We could watch a, or listen to, engage into something of that sorts. Here, I can delete this. Tuesday, Powell speaks at 10 today, so we gotta be careful today. I think it would just create maybe some seek and destroy conditions. I need to find this one live stream by ICT. I'm pretty sure it was like an hour and 42 minutes, but it was such a good psychology talk. At least I'm pretty sure I remember it. It might be this. Oh yeah, this is perfect because Powell speaks at 10.
I'm favoring the downside here
my
initially,
headphones
but it's
connected. They're tweaking.
not to invoke any interest for you to take a trade, obviously. So let's go over real quick and take a look at the...
They're not working. Here we go.
dollar index. Okay, on the daily chart. Okay, and this volume imbalance in here is where I took your attention 2 weeks ago, and I maintained the bullishness on the dollar. Even through all this here, I mentioned that I'm not abandoning it reaching up into this volume imbalance and above these relative equal highs. So that sets the tone for what? Risk off. So it would be lower prices for ES, lower prices for NASDAQ, lower prices for stocks, lower prices for Forex pairs that have the name with the dollar index as the second currency in its pair name. If it's the currency pair that has the dollar first in its name, then it would be a bullish foreign currency. All during this run up. Okay, so I'm going to add the lipstick here so that we can see. We look toward this down here, then from here, we waited for the shift in market structure here. We're bullish all through here. Volume imbalance here. Rallies up, another smaller little volume imbalance in here. which we traded back down into yesterday before they rocket up into the rejection block, which is this closing price on this candle, and then the consequent encouragement of this wick, which is this level here, and then the old high, and then ultimately up into the volume bounce, which it was delivered to beautifully. That, my friends, is exactly what you're looking for. That's algorithmic price delivery. It has nothing to do with retail. And it's very interesting to see these things repeat over and over again, even though I've been watching it for 3 decades. Incidentally, for those that you're watching, if you are noticing that the stream, because I'm looking at my cell phone as a way of verifying that I can see what I should be seeing, even for the cell phone users. I know a lot of my students actually just watch things through their cell phone, which I don't understand that. You need a bigger screen in my opinion, but it's probably looking very fuzzy or like not very clear, maybe blurry. If you look in the lower right-hand corner on desktop applications for YouTube, you'll see a little gear symbol. Click on that, you can change it to high definition. For cell phone users, if you touch the video screen that's playing back right now to you, touch that in the upper right-hand corner, that little gear, tap that, and you want to go to quality. For whatever reason, on the live streams, it auto defaults to 240, which is garbage. So you want to tap on the quality, and then go to advanced, and then go up to 1440. Twitter feed. So big delivery on the upside. Even if we didn't have the PAL testimony at 10 o'clock on the heels of a large range day like that and delivering to a target, which is this here, that right there cools the jets for me for the week. Now, I know some of you, action hounds, you want to like, well, what's next? That delivered, now what? Now what? What are we doing next? Well, we're sitting still. And that's how you hone patience and self-control. And also, PAL testimony at 10 o'clock can change all this. It can rocket up even further for dollar index and send the indices and foreign currencies lower still today. Or we could have a retracement back down into this area here. At this point, I want you to understand my mentality and the position I hold once I have a weekly objective reached. I stop. I know that's hard to believe. I know you see me get in here and trade inside intraday price just about every single day. But when I have a weekly objective like this, I teach my students, and I also like to stop. Incidentally, as a reminder, this week is non-farm payroll protocol, meaning this Friday we have non-farm payroll. I don't trade that day. I don't advocate any of my students should be doing it either.
Hopefully, bro.
But I know some of you like to get on here and say, well, ICT doesn't know what he's talking about. Look at this trade I took. Okay. Do it live. Trade it live. And then let everybody see what you were doing beforehand. I just don't think it's a worthwhile venture to take on the risk that comes along with trading on the Thursday and the Friday of non-farm payroll. The reason why, and this is for those that are trying to actually learn here, not just spectate and watch IGT Netflix. In your journal, you want to be recording that the weeks of non-farm payroll, which is typically, but not always, typically the first Friday of every month. Now, obviously, last Friday, we had a Friday in March, but it didn't post as what? Non-farm payroll. So it's this week. So tomorrow is Thursday. That's the day before non-farm payroll. We don't trade that day. And we don't trade on non-farm payroll Friday itself. Now, some of you also may be wigging out right now thinking, man, that's 2 trading days. I'm not allowed to trade in. I'm going somewhere else. I'm going to use something else. I'm just going to go and do it. Okay, that's you. But as an educator, as someone that's been doing a lot longer than probably you have, I have to have rules. I have to have rules for the students that are under me, and it helps build discipline. And also, here's the main takeaway. The probabilities for precision fall off precipitously in Thursday and Friday of non-farm payroll Fridays. So the protocol for this week, every time there's a non-farm payroll Friday, your task as a trader is to get all of your business done by right now on Wednesday. The New York session, AM session. Once we get to 11 o'clock in the morning, it's over. It's done. It's in the books. You do not trade. You do not push the button. Now, does that mean you can't demo trade? No, it doesn't mean that at all. I'm just saying that if you are one of my students that have ventured into live fund trading, which I've never advocated for any of you to do that, but I know some of you have, you want to maintain this rule by not going in and trading live funds on Thursday and Friday, not from payroll. Yes, the market will absolutely move. Yes, the market will have setups. Yes, absolutely. But in my history of utilizing the things I'm teaching you, the level of precision isn't as precise or consistent on those 2 days of this week. So does it make sense for me as the author of all this stuff to push the envelope of risk in an environment that 3 decades have taught me that it doesn't shine as well in those days? So as a rule-based trader, as an analyst, I have to provide the trader in me a rule or a list of protocols and procedures to follow to keep the trader in line with the analyst expectation that's in me. Because inside of each one of you listening, there's 3 people. The analyst, that's the person in charge of what you're going to be doing, buying or selling. And the trader, that's the part of you that is going to be doing the engagement itself, the timing aspect of it. You're actually pushing the button, managing the risk, using the logic that's being leaned on as the analyst in you. So the analyst has to know what they're doing and have to have a rule-based idea. And it must discipline and, like a taskmaster, hold the trader in you responsible. And the lean by 3 people. The analyst, that's the person in charge of what you're going to be doing, buying or selling. And the trader, that's the part of you that is going to be doing the engagement itself, the timing aspect of it. You're actually pushing the button, managing the risk, using the logic that's being leaned on as the analyst in you. So the analyst has to know what they're doing and have to have a rule-based idea. And it must discipline and, like a taskmaster, hold the trader in you responsible. And the trader's responsibility is to keep the gambler, which is the third person in all of you, at bay. Keep the gambler out of the driver's seat. They're going to wreck you. They're going to take risks because they want to see what happens if they push the button. Bored trading, curiosity trading, competitive, trying to keep up with the Joneses on social media trading, that type of stuff is what gamblers do. So we always try to keep the gambler out of it. It's always going to be there. Oh, it looks like something I could get a part of right now. I missed 90% of the run, but I can get that last 3 handles. I can get that last 6 pips after it's moved 90. You know what that means. You've been there before. That's the gambler. That's the part of you that just is impulsive. So you don't want to be going into these particular weeks of the month where there's non-farm payroll on Thursday and Friday of that particular week, just pushing the button to see what happens, because you know they say every round find out. And this week historically has done damage to me. I've allowed it to do damage to me. I've blown accounts. That's plural, folks. Okay. I have no shame in telling you, while I was learning all this stuff, I literally smoked my accounts on these particular weeks because I was trying to force something, because I believed other people saying, these are the weeks you're supposed to trade. Look at all the volatility. This is where we got to get in here and make our moves. When the algorithms are really, really not keyed up in terms of precision, there's a lot more interest for them to be a manual intervention. That means a human comes in and intervenes and causes the market to go just outside of, or well beyond, what would be reasonably expected using the things I'm teaching you. So that's not a weakness to say this, okay? It's a strength, knowing where the odds are against me. Whereas the classic retail trader, they just see it as, oh, it's just another trading day, so therefore I gotta go out there and push my edge, and then their edge is dulled because the market doesn't provide the conditions that would be conducive for high probability, low risk. And that's the reason why I said all of that. If you didn't get it all, rewind it later on. That means really just pushing the button to see what happens, because you know they say every round find out. And this week historically has done damage to me. I've allowed it to do damage to me. I've blown accounts. That's plural, folks. Okay. I have no shame in telling you, while I was learning all this stuff, I literally smoked my accounts on these particular weeks because I was trying to force something, because I believed other people saying, these are the weeks you're supposed to trade. Look at all the volatility. This is where we got to get in here and make our moves. When the algorithms are really, really not keyed up in terms of precision, there's a lot more interest for them to be a manual intervention. That means a human comes in and intervenes and causes the market to go just outside of, or well beyond, what would be reasonably expected using the things I'm teaching you. So that's not a weakness to say this, okay? It's a strength, knowing where the odds are against me. Whereas the classic retail trader, they just see it as, oh, it's just another trading day, so therefore I got to go out there and push my edge, and then their edge is dulled because the market doesn't provide the conditions that would be conducive for high probability, low risk. And that's the reason why I said all of that. If you didn't get it all, rewind it later on and write that in your journal, because that's the reason, that's the rationale behind why I teach my students. That's why I myself maintain a sideline position on Thursday and Friday of non-farm payroll weeks. And traditionally, if I don't have anything on in the morning session, I'm done on Wednesday. Now I can, and I have traded morning sessions up to 11 o'clock. Sometimes it was a deviant and traded in the lunch hour, but we can't really do that today because we have what, at 10 o'clock? The Fed chair at 10 o'clock testifying. So in about 3 minutes or so, less than 3 minutes, we'll be seeing him bring his influence into the marketplace, if you want to call it that. I don't believe that's what's going on, but they like to use the Fed chair to do those things. So let's go over to ES. All right, so we're going to drop down into a 5-minute chart. It's a busy chart for an ICT chart, ain't it? That's up here. New week opening gap. Tonight I will have a video on the YouTube channel outlining what a new week opening gap is, what to do with it, how's it helpful, how to plot it, all that good stuff. All right, so initially what I was watching was, let me go to a 15-minute chart. We have a buy sell liquidity pool here, which we've swept above that. And if you look at the 60-minute chart, that's this candle's low, this candle's high, that's the SIBI, it's a fair value gap. That's what I've extended over here. Let's drop back down to a 5-minute chart. And then inside that high, we have a small little fair value gap here in the form of a SIBI. Trace up into that right at 930. Hit that beautifully, perfect.
So 930 high resistance.
Swept the new week opening gap. And now we're back into touching that 60-minute fair value gap. We had relative equal highs here, so that 930 run into that fair value gap took out the buy side. So traders were caught long.
I would think this
Looking
is
back high. Those here,
I think it is, honestly.
Most likely probably stopping them or scaring them out. This morning, I do not have a clear indication as to how I would engage it. So we're really basically just observing. If you're one of those very highly critical viewers that get to the point type thing, like yesterday was very succinct. It allowed me to cover things pretty expediently. And I don't foresee that probably happening this morning. So if you're one of those really lazy viewers, students, that's probably going to be not what we see today. And you can probably just catch this video when it's convenient for your weekend or something. But for the real students that are here to learn how to read price action, this is a really good exercise to watch the effects of the Fed chair talking. Now, obviously, it's 10 o'clock. Already 10 o'clock. What has he said? He probably hasn't even had the opportunity to say good morning yet. But look at the flurry of action in here. And here's our new week opening gap down here. If you look at the 930 high, okay, so all I'm going to be doing is pointing out things that are noteworthy for you to have in your journal and showing the points of reference I'm referring to here. And then we can study it after the day closes. But this wick here, see that? It went up into that fair value gap, cleared the buy side. Once it did that, watch what this is doing here. Where is it returning up into? Yes, it touches the bottom of the 60-minute fair value gap. Yes, that's permissible. But where are the bodies? Where are the bodies at in these two candles? In reference to this wick. Look at that beautiful return to the week opening gap. It's beautiful, isn't it? It's beautiful. So the next one of interest to me, and I'm sure you probably saw it when I was flashing my screen, which is the daily chart. Way down here. Okay, so we have to use our tools in our repertoire. Not to say that it can't crash down here. I mean, anything can happen. I'm not saying that's happening today, but that's the next new week opening gap that I have on my. So
he is looking for
if we have the
gaps as draws.
Focus on that wick right here. And draw a fill, as you can see. But ICT, I could have shorted there. Yeah, I could have. We could have ran up higher into that 60-minute fair value gap too. You have no idea. I don't have any idea what the Fed chair day testimonies is going to present in terms of volatility. But look how beautiful that retracement is off that 39.74.50 run. It's almost like it was programmed, didn't it? So this price level here is
programmed.
Oh no, I can't make that out. 39.92.75. The closing price here comes in at 39.93.75. Is that a 3 or is that a 2? I can't make it out. Let me see. No, it's 93.75. 93.75. 93.75. So the close, yeah, 3993.75. So the close comes in exactly at that price. Let me sit right up here. See that? That's probably random. To most viewers that are casually just watching, that's just randomness. But that's not randomness. That's algorithmic. It goes right to that. Now, the wick can do the damage. It goes just outside the lines. And this is how the algorithm hides in plain view. In plain view, everybody that's watching price, and there's strong deniers still out there saying that there is no algorithm controlling price, when there's absolutely so much evidence to argue the point that there is. And why all of you would even wrestle that idea is beyond me. I'm sure it's unsettling. It relieved me because it made much more sense why the market does what it does, repeatedly. Over and over and over again. So, prior to this drop off here, that candle right there is 9:55, and we started another candle at 10 o'clock. Powell didn't even get a chance to say anything. And right off of consequent encroachment, after tapping the 60-minute fair value gap that I mentioned, ran all the way down to what? New week opening gap here. Look at the beautiful delivery off of that, back up into another new week opening gap. Now, take Powell out of the conversation. Say that wasn't a factor this morning. This run up to that 60-minute fair value gap would have been a short for me. I would have smacked that as soon as it went up and hit it. I would have done that. Why? Why would I have done that? And I can say this because you've watched me call these things live now for weeks and months on Twitter. You've watched me execute using the logic that I'm teaching you. So if you're going to wrestle with this and say, oh, this is would have, should have, stuff, move along. There's other people out there YouTubing, and you can be entertained by them. But I would have absolutely smacked that as a short entry had PAL not been a factor this morning. The reason why I would trust that is because we've already done the buy side here, and it also went up into the next premium run, which is that fair value gap there. So I would feel comfortable getting short there with a stop above the fair value gap once it hit that. At one time when it was bold face green, all body, no wick at all, when it was touching that, that would be terrifying to the average trader. It doesn't make any sense to sell short into something like that, which is why it's important for you as a developing student using my concepts. You have to have the lipstick, the things that I have on my chart here. I don't have these things on my chart. It's a distraction to me to watch price with it on there because I like to keep my chart clean. But you can't do that while you're learning because you have to have the stuff on there to refer to. And it's like training wheels when you first learn how to ride a bike. It's nothing to be ashamed of. Pretty soon, in a couple months, you won't need to have the things that you're needing right now. You'll work off of a pad just like I do. This is where all my notes are written down. And I'm constantly referring to price, my other charts.
Wow,
and
look at that closure.
Which is basically what I'm showing you here. All these levels here are just in numerical format on a pad. So I don't need to necessarily have these things on my chart, and you won't over time either. But if you choose to keep them on there, there's nothing wrong with that. Don't let me discourage you from doing it. I'm just reminding you that it's very distracting for me to have it on there. But anyway, rate of consequent encroachment on that wick here. After hitting the 60-minute fair value gap low, expansion occurs all the way down to some random 39.7450 level. This entire run back down into that there. It only went 1/4 point lower than the 39.74.5 level. And that's a gap that's already been traded to. And as a reminder, as I mentioned yesterday, there's folks out there that just absolutely tore up that I'm teaching you something that nobody's ever touched on before. And it's not bragging. It's not arrogance. I want you to understand that these things have been in front of you and no one has ever talked about it. Never seen it before. They don't teach it. They don't know it. They've never traded with it before. It's done. Everybody sees a gap. I'm not saying I invented gaps. Gaps exist everywhere. But how I use those gaps and how I frame a narrative. You never hear anybody teach about how old gap from a week, weeks ago, is useful right now. You don't hear it. It's not taught. But there's logic behind it. There's logic behind weaving together a narrative that if there is no algorithm, okay, this is an argument for you to hold with yourself over the weekend. If there is no algorithm, pray tell, how does the market just randomly between buying and selling pressure sell off right at a consequent encroachment level in a wick that I teach you and drop immediately down into a level that I teach you that will be revisited again and then turn on a dime? If there is no algorithm, how is it that there are traders that don't have any information given to them in books and courses and educators? They don't teach this stuff. So how on earth did it just do this very thing and deliver exactly like it did? It takes more faith in the religion of retail logic that all came together for that to occur. It doesn't make any sense. So, at any rate, let's take a look at NASDAQ real quick. Sorry. Pretty much the same delivery, but that's not a gap. These are my S&P studies. I'm just showing the NASDAQ and the Dow while I'm looking at ES. So let's go back to ES on it. Nothing, it can mount a deeper run into that 60-minute fair value gap. Let me show you what I'm looking at specifically when I'm referring to it. I'm going to scrunch this up here. All right, so we have inside the upper portion of that 60-minute fair value gap. Should we extend above? Because we've already dipped down in here. I was pretty aggressive, and we had a nice little retracement off of the level that is the new week opening gap. When I say the new week opening gap, I'm not referring to the present week. I refer to every new week opening gap as new week opening gap. If you want to have a structure to your identification, let me go back here real quick. This order block here is what I'm looking at in the upper boundaries that we have. Go back to discussing the relationships between new week opening gaps. If you want to have like a labeling system in your own charts that want to have like representing what new week opening gap, like you can label one by date using the Sunday gap opening price. That would be your new week opening gap label. So if you're referring to it, you're referring to the difference between the previous week's Friday's closing price on settlement, okay? Which you'll hear talk about when we get into the video. And I promise it'll be a very short video. There isn't a whole lot to it, even though it is like alchemy. It's beautiful, isn't it? It's been trending on Twitter since the first day I mentioned it weeks ago, which I think is fascinating. But the labeling system that you can utilize is obviously up to you. You can call each one of these individual new week opening gaps whatever you want to keep referencing or reference them, in a manner that is helpful to you. I don't personally require that because I know if I'm bullish or bearish, I'm looking for close proximity new week opening gaps below me. So it's really not technically difficult to understand, as you'll see tonight. It's not a lot of acrobatics that are required, but the insight that it gives you, folks. Listen. When I started last year and I told you I was going to come out and teach and give you a mentorship level performance openly for free, I told you I was going to teach you things, and then we rolled into this year, and I told you I was going to show you what's going on behind the scenes, what makes these markets really work. Nobody else is teaching that. They got wonderful systems, they got profitability, they have all kinds of gadgets and setups, but they're never telling you what makes the market move. They falsely attribute it to their patterns, their things, their indicators, and it has absolutely no bearing on what makes the market up and down. I understand that I'm not everybody's cup of tea, but I have exactly what everybody's looking for. It's the truth, and it's undeniable. It's unrivaled. You can't beat the truth. You can contort it and twist it, but I'm laying it out there for you. I'm showing you exactly what you should be expecting to see in price. If there is an algorithm, these things wouldn't unfold like they do. Or if there isn't an algorithm, I should say, they wouldn't be doing these things. But because they continuously do them, there has to be a control mechanism. And the way I discovered it is I noticed that they would repeat many times within a 10-minute window. They always repeat over and over and over again within the same expected 10-minute window. And these certain 10-minute windows would occur in specific hours of the day, on specific days of the week, within specific months of the year, within specific seasonality. And the data doesn't lie. It's there. And then when you start looking at price action live, like we're watching here, and you anticipate these things unfold, you expect to see it. You expect to see these things. If there is some kind of control mechanism in here, it's not just buying and selling pressure, because to me, it makes no sense when I finally took a step back and said, you know what, there shouldn't be a free-for-all. Because that means a hostile entity could come in and crash our markets. If it was all just selling pressure, what would keep a rogue nation with lots of money coming in, what would prevent a large nation coming in, putting lots of money, or a group of nations coming in to pressure by selling short our equities market? Believe me, there are people in countries out there that are not friendly to us in the States. And that would absolutely be a weapon if it was just like they teach us it is. It's a free market. No, it's not. It's controlled. As it should be controlled. There should be a mechanism. And if it's a business, that means it has a process, an algorithm that it follows. And you shouldn't be afraid of it. You shouldn't be upset the fact that it's rigged. You should be thankful that it's rigged. That's what gives you the edge that you have.
Right now.
Because if it was absolutely 100% random, nobody could consistently beat it. Nobody could. And you should take comfort in that. My first week when I realized that there had to be some kind of control. And at first I was angry. I was like, that's why I lost everything. Well, no, I lost because I didn't know what I was doing. See the difference there? Responsibility. It's responsibility. And for many of you out there that listen to me, that are always taking shots at me about how there isn't an algorithm because you know somebody's cousin's uncle who's a bank trader and they don't trade this way. But when I'm talking about a tier a little bit higher than him or her, they wouldn't know this because they're indoctrinated with all of their learning. The Goldman Sachs boys. They only know what they've been trained to view. This is what the market does. All we're trying to do is follow these tools, these things that have no bearing on price. No. And when you strip it away, peel back the onion every layer at a time, you start seeing things that just repeat too consistently, too frequently, too precise. Look at that fair value gap. I mean, the new week opening gap down there at 39.74.5. And look where we're at right now. Isn't that beautiful? Like, that's beautiful. To see something that is completely hidden from everybody else. Outside this community, they had no expectation of seeing it going down to those levels. They had no expectation whatsoever. But you're seeing it. We've been seeing it day after day after day after day, delivering. And what's actually occurring? I mentioned it before, but because this might be your first time seeing it, some of it when you come to the channel, but a new week opening gap is a real, dynamic, fair value. It's a range between two specific price points that are fundamental, if you want to call it that. Where did we close the previous week on Friday? I mentioned it before, but because this might be your first time seeing it, some of it when you come to the channel, but a new week opening gap is a real, dynamic, fair value. It's a range between two specific price points that are fundamental, if you want to call it that. Where did we close the previous week on Friday? And where did we begin trading this new week on Sunday? Between those two price points, there's what? There's uncertainty. And uncertainty builds what? Opportunity. Where there's a difference of trading this new, if you want to when you come to the channel, but a new week opening gap is a real, dynamic, fair value. It's a range between two specific price points that are fundamental, if you want to call it that. Where did we close the previous week on Friday? And where did we begin trading this new week on Sunday? Between those two price points, there's what? There's uncertainty. And uncertainty builds what? Opportunity. Where there's a difference of opinion, that's where the trade exists. Everyone that thinks it's going higher, opposed traders thinks it's going to go lower. That means you have a buyer and a seller. That's the reason why the new week opening gap works, because there is a real liquidity movement. There's a separation between those two price points, previous Friday's close and Sunday's opening price. So what the market algorithm does, it delivers. Buyers and sellers don't take it there. You might be fortunate enough to be in a move that rides to these levels, because there is a, that's where the trade exists. Everyone that thinks it's going higher, price points, there's what? There's uncertainty. And uncertainty builds what? Opportunity. Where there's a difference of opinion, that's where the trade exists. Everyone that thinks it's going higher, opposed traders thinks it's going to go lower. That means you have a buyer and a seller. That's the reason why the new week opening gap works, because there is a real liquidity movement. There's a separation between those two price points, previous Friday's close and Sunday's opening price. So what the market algorithm does, it delivers. Buyers and sellers don't take it there. You might be fortunate enough to be in a move that rides to these levels. You did not push it there. Everyone on the trade with you in that right direction did not push it there. It's going there regardless. That's the part you don't understand. And I don't care who you are. I don't care who you worked for, who you work for now. It doesn't change the facts that this is going on every single day. And I'm predicting it. I got case studies after case studies on Twitter. And now traders are using it, making real money. Price is going to that range between Friday's closing price and Sunday's new opening price to offer fair value to the marketplace. For you and I, not necessarily. It's for large fund interest. It's to get large funds to bring their trades into the marketplace. Because what? Smart money, they're not doing one contracts. They're not trading 5 handles in a day. They're putting in size. And how do they put size on? They have to have a counterparty that is equally, if not more, interested than they are. So the market delivers it by algorithmic principles. And when that price gets delivered, because it's going there anyway, once it goes there, large funds either come in or get taken out. And that provides the counterparty liquidity for this entity that is deemed smart money, which is not bank traders at UBS, Citi, Credit Suisse. No. We're talking up above them. The folks that they're not going to be on social media. They're not going to be interviewed on CNBC. Okay, I'm sorry, but there's a whole different category that you're just not aware of. And that's who's engaging like this. And that's why it's not in books. That's why no one's talked about it before, because they're not supposed to talk to you. They're not supposed to be divulging anything. And here's this joker on YouTube talking to you about it. I'm just talking about demos. I'm just talking about paper trades. That's all I'm talking about. I'm talking about a language I created. That's all we're talking about. So we're halfway between one new week opening gap and the lower one that made the low of the day so far here. And we're about the midpoint of that long wick. So that's consequent encroachment. So I'm my eyes there. I'm watching it here. I'll be sitting like on bated breath, waiting for the video. Now, it'll probably be about 15 minutes or less of a video. It's not going to be very long at all. Be in 3/4. The low on that candle comes in at encouragement, and then look at the reaction there. Still see signatures, and that's the benefit of us being together today. That's all I'm doing. I'm pointing out things that I want your attention on when you're
Yo, what's good, Shamal?
watching every day. Every day. What prevents us from going in and pushing a button today is the uncertainty that the market maker, the market maker that is in control of the algorithm, that can stop the algorithm from delivering on its macros and manually intervene and reprice wherever they benefit of us being together today. That's all I'm doing. I'm pointing out things that I want your attention on when you're watching every day. Every day. What prevents us from going in and pushing a button today is the uncertainty that the market maker the market maker that is in control of the algorithm, that can stop the algorithm from delivering on its macros and manually intervene and reprice where that the market maker, okay, the market maker that is in control of the algorithm, that can stop the algorithm from delivering on its macros and manually intervene and reprice wherever they want it to go. And you don't know when that's going to happen when the Fed chair is talking. I don't know that.
Looks like I see putting you to sleep. I'm taking notes.
Of the algorithm that can stop the algorithm from delivering on its macros and manually intervene and reprice wherever they want it to go. And you don't know when that's going to happen. Manually intervene and reprice wherever they want it to go. And you don't know when that's going to happen when the Fed chair is talking. I don't know that, which is the reason why I tread carefully. And I don't do anything, I observe. It keeps me close to the market by watching it. It's a wonderful exercise for you as a developing student. And that way you're not becoming impulsive or chasing profits, whereas you're trying to learn the science behind how these algorithms operate. So think about the delivery from consequent encouragement down here, which I talked about at the time. It's not cherry picked, okay? I told you to watch this at the very second funny. As it was trading there. And where it delivered from here all the way back up into this 60-minute fair value gap. Where's the buy side? Resting right above here. So we went all the way down to this new week opening gap low. We're inside the 60-minute fair value gap again. We've already did the buy side here, so that's not what we're interested in. We want to see, does it want to go above this high and trade into this order block? And completely maybe come all the way back up to the high end of that 60.
Glad to say I've seen you sleep at the computer putting that work in.
Fair value gap.
Dude, that's honestly why I started
because it's
live
already
streaming. I'm be straight up. Cause like normally when I would watch these videos, I mean I started live streaming just cause like why not? And honestly, when I live stream, now I can't fall asleep.
Pierce
also, I'm just like talking to myself
below
the
these
whole
lows
time.
here? Sell side. How far can it go down below an old low ICT? How far? How do you know how far it's going to go? And it won't keep going. New week opening gaps. New day opening gaps. Opening range gaps. The gaps between where we closed yesterday and where we opened at 9:30. There's 3 specific gaps right there. I'm not going to have all of them this week, but I'll have the new week opening gap tutorial video tonight. And I don't know when I'll do the new day opening gap video, but that'll be next. And then I'll do the opening range gap video.
Yeah, I do. I trade MMXM. That's how I would like to trade. Well, it's pretty much is how the market moves.
So you'll have the details on gaps and how I internalize them, how the algorithm will refer to them. There's so much. If you just simply put down the willingness to want to arm wrestle me and stop trying to say I'm rebranding anything. None of this is anywhere. It's not in any books. You can get yourself $1 million if you can find it in print. Told you that. 1996, that's when it was codified. Sorry, that's me. But that range movement from the consequent encouragement of this wick, after clearing the sell side below this low and this low, I'm going to drop a line on it. Okay, so that way you can see. So below this low here. Oops, sorry.
Nice. I'm gonna grab some water real quick. Back already. You didn't think I would be that fast.
Okay, so we have 2 lows here that are relatively equal.
Oh, we barely purged it too.
And you always want to put it right on the lower of the low between the 2. So that's I'm a little bit below. That's okay. But from here and here. So what's resting below that? Sell side liquidity. Sell stops. Traders that would want to protect a long position, they put their sell stop below that. Traders that want to sell short, want to break out, thinking that weakness that comes in, they would see that as what? A reason to be short. So if what I'm teaching you is we attack that liquidity. And the question that comes up a lot is, Okay, how do you know how far if you want to be buying these stops? Because I teach how to do that in core content. That was also did last year on my YouTube channel. And folks, please stop emailing me asking me to join my paid mentorship. I'm mentoring you right now for free. This is mentorship. Okay, I don't want your money. I'm never going to charge your money. This is it. Okay, I mean, I'm having fun doing this. You should be keeping notes and benefiting from all of it. But the question many times comes up is, you know, how can you trust? How do you know? How do you know then when it drops below old lows to be a buyer? How do you know how far it can go? Like, where would you place your stop? Well, in this case, this helps a lot when you have information like the new week opening gap, because we would expect it to drop down. This was in the chart. It wasn't off screen. It was mentioned to you that this is an interesting level. If we drop lower, this is where it's going to likely draw to. It's below these relative equal lows. So below here is sell side. So there's layered sell stops below these lows that you don't know. And the depth of market, the DOM, those orders can be spoofed. Just because you see them prompting you, saying there's this many willingness to be a seller or buyer at a particular level, doesn't mean that order is going to be there when price gets there. Spoofing is a real thing. Spoofing is where they put an order there, and then by the time it gets close to it, they pull the order away. So it's a gimmick. Okay, I'm sorry if you like to use that tool and it's helpful to you, that's great. But don't argue and say that that's the reason why the market's moving around, because it's not. But below these lows are sell side. So how far can it drop down below old lows? New week opening gap, new day opening gap, opening range gap. There's your three tools. How far can you trust a move above an old high for a turtle soup? I just taught it to you. Oops. Magic can come out of nowhere, can't it? So the market drops all the way down through relative equal lows into some random level, new week opening gap, goes one tick outside of it. Why? Remember I was teaching you, it likes to create these little mohawks, okay? These little mohawks that overlap a little bit. Why? Because there has to be what? The bid and ask difference. So if a trader wants that 39.74 and a half, it has to trade where? 39.74 and a quarter. And that's what you got here. Everything makes sense when you understand it that way, instead of taking your price patterns and animal harmonics and Elliott wave things and try to cram all that stuff into a reason why price is going up. It has no reason. That has no basis at all for why the markets are going to be booking this way. It's going to go up for buy stops, or it's going to go up to redeliver to an inefficiency like a fair value gap. That's it. It's either going to go up for that reason for longs to sell their long positions too, or it's going up there to start a new sell-off. So that way shorts can be implemented, and then it's going to be looking for an opposing liquidity. The market goes down for sell stops. It goes below an low or an old lows, or it goes down to an inefficiency that it will reprice to. That's it. If it's not doing that, guess what it's doing? Consolidating. Is that hard, folks? I get complaints all the time from people that don't really want to learn. Or they sell something. They have a competitive nature because they're trying to sell their thing. And I'm out here teaching what makes the market really move, and it's booking perfectly to a tick. And they'll say, I'm overcomplicating things. I'm not complicating anything. That is absolutely easy. It's totally three conditions. It's going up for one of two reasons, going down for one of two reasons, or it's consolidating. I teach you when it's going to consolidate. When we're ahead of big news or event like this, we don't know what Powell's going to say and how the market makers are going to utilize that. So what is it doing? It's consolidating. We're not trading. Why? Because it's likely to do this. And if it does move, it's uncertain. So you can't really trust it. So there you go. Now you know when the market's going to consolidate. I just taught you. I've taught you before, but I just reminded you this is what it looks like. But when you're bullish, and when I'm bullish, I'm looking for one of two things to happen. It's going to go up to buy stops above a high or relative equal highs. Or it's going up to a premium fair value gap, some kind of inefficiency where the market has dropped in the previous, I don't know, it could be as far as 60 days back. Some old high, some old price decline where there is a fair value gap. It's going to go up into that level there to reprice. That's the only two reasons why price is going to go up for me. That's it. It's simple, isn't it? It's very, very simple. That is not complicated. No matter how much you want to torture it, it's never going to submit to being complicated. That's easy. It's going up for stops or it's going up for a fair value gap. Boom, done. Over. Simple as that. Are you bullish? Okay, you're looking for one of two things. Is there a fair value gap? Nope, there ain't a fair value gap. So what's it going to go for? The stops, baby. It's going to go right up into those buy stops. Just like you're seeing it happen right there. Is it complicated when you look at it that way? Honestly, I'm asking sincerely. Because I don't believe it is. I don't believe it's complicated. It's very simplistic. And it's nothing that you should be wrestling with and trying to feel overwhelmed with. But you're trying to learn it too fast. And you can't rush it. It takes these types of things here, sitting here and watching price action. When we were down here, okay, I said, watch that wick. It's nothing that you should be wrestling with and trying to feel overwhelmed with, but you're trying to learn it too fast. And you can't rush it. It takes these types of things here, sitting here and watching price action. When we were down here, okay, I said, watch that wick. Okay, that's not cherry picking. That's me taking your attention right to a very specific price level. Not a zone. A very specific price level. The midpoint between the closing price and the low of that candle is consequent encroachment. And I told you, as this candle was dipping down here, I said, watch that level right here. And I said, we would want to see what? We want to see it trade back above, deeper into that 60-minute fair value gap, which is that pink shaded area. And more specifically, aim for the buy side liquidity resting above here. Why? Because we've already worked and utilized this fair value gap multiple times. So if it's going back up here, it's not going back up here for this. It's going back up for what? The buy stops resting above that. Is that complicated? Was that complicated at all in my delivery about it? It's not complicated, folks. That's not complicated. What you're feeling, if you think it's complicated, is you're feeling this insatiable desire to be able to mimic what I'm doing immediately, and that is not going to happen. It takes time. It takes time doing what we're doing here, reading price action. At all in my delivery about it. It's not complicated, folks. That's not complicated. What you're feeling, if you think it's complicated, is you're feeling this insatiable desire to be able to mimic what I'm doing immediately, and that is not going to happen. It takes time. It takes time. Doing what we're doing here, reading price action when there's no trade involved. You're not influenced by the profit or loss. You don't care. You're indifferent to it. And that's exactly what you need to be doing while you're learning how to trade. You need to learn how to read price first. And no educator pushes this part because they want your money. They want your subscription. They want your everything to paying them. I don't need that. I'm giving you my time for free. I could be out here doing whatever I want to do right now, and I'm spending it with you. Who's making the greater investment here, me or you? That's what it boils down to, because a lot of you aren't really trying to learn. You want something to be easy, 1, 2, 3, watch a video one time, and you'll be able to go out there and do it right away. And I'm sorry, I don't have that for you. You can't get this level of precision with watching a video a couple times, and there it is, you got it. You got to be in the charts. And that's why I, unfortunately, separate and divide the people. I'm very divisive, and I don't shy away from that, because I want to know right away if you're a weak-minded, impatient person, and you can't listen to the lectures and jawboning, you won't make it here. So leave. The ones that go through this, they're the ones that make every one of these people that I'm going to be interviewing that make money with real money. They listened. They did the things I told them to do and didn't do the things I told them not to do. That's what separates them from you, what they're willing to put themselves through. These markets are extremely complicated, but I have removed that complication. I've applied a science to it. I've literally codified a logic so that way you can go in and see exactly what to anticipate, when to expect it, why it should happen. I covered every base for you. Every base. There's no reason why anybody watching these live streams do not sit there and think to themselves, what the hell am I doing? Why haven't I been doing this? This makes perfect sense. This is exactly how I want to trade. I want to see the market like this. This is like knowing what's going to happen. And that's why it's called futures. We're predicting the future. Not everybody can do it, which is the reason why the majority of people lose. But I have a transferable skill that you can get from me. And all you have to do is show up. Just show up. There's no PayPal. There's no credit cards. No coupon codes needed. No Black Friday sales. I love this. I live this. This is my entire life. I'm passionate about it. I'm passionate about teaching. I love transforming people into financial dynamos. And you're about to see some of them. Some of them have done extremely well. Others, very, very well, but more than not, you're going to see them in their own face, their own expressions, share what it was like for them. And I'm going to ask them questions. Some of the questions you guys gave me as a list of things that you would like to ask if it was you asking a profitable ICT student. Because I didn't want to just go in there and here's my cherry-picked questions. I'm giving you all an opportunity to go in on my Twitter and tell me what questions you would like to see me ask them. I don't want to do longer than an hour. I think an hour is really a lot, but I'm going to present each one of the students that have reached out to me. I have a lot of them that email me. And it's not the people that's done spreadsheets. Okay, these people have made money. They have broker statements. They have interviews with funded companies. They have cash withdrawals and receipts. So we're not talking about people that don't done those. Okay, we're not talking about market replay reports on NinjaTrader. We're talking about real money. That's what I asked for. That's what you all wanted to see. And they're all going to sit down face to face with me, and it'll be a pre-recorded. So that way everything is professionally done. Nobody can interrupt this. And if I get my children or my dogs come in, I can edit all that stuff out live. I don't want to be distracted by that. And the questions will be emailed to all of them. So that way it allows them to have their answers prepared. Like when I was being interviewed by Corbs, like I didn't know what that guy was going to ask me. And some questions, if a person is shy and you may be talking about money isn't a comfortable thing for some people. Other people are like, I can't wait to get on ICT's jam and flex. I can't wait. That's cool. But not everybody's like that. And it'd be easy for me to cause some kind of a delay or have the expression later on, shared on another comment in the video or a Twitter post where they said, oh, I wish I would have remembered this. If I asked them, say, what was your worst trading day? Because that's one of the questions I'm going to ask. Like, what was your worst trading day and how did you deal with that? And how do you deal with losing? Like, what's the procedure you go through? Those are questions that if you aren't prepared to talk about that, and it's a wrestling match that you've gone through, it might cause you to shy away from being honest. And I want the questions in their hands first, so that way they can wrestle with it, talk about it with themselves, and say, okay, he's going to ask me this, and people are going to hear me talk about that. How do I want to respond? I don't want to be shell-shocked. I don't want to do any kind of gotcha questions, okay? Because that's like the thing that everybody wants to do. I got you. I got you out there. I embarrassed you. I'm not trying to embarrass anybody. I want them to be 100% honest, and I want the interview to be organic and no surprises, because I think it would be unfair for any student, any person being interviewed, to get a question upside their head, say, oh yeah, by the way, how many times has your spouse stepped outside the marriage? That type of thing. Not that this would be like that, but you know what I'm saying. Like things that would be unsavory for an interview. We're here to watch people give a testimony on how they make money, what they do, how long did it take them, what did they have to struggle through, what's their goals, what is their routine in the morning, or what session do they trade? These are all questions I plan on asking. And some of you, I've seen others questions that I didn't really think about that are really good, and I'm going to utilize that. So I have to find a way for them to have their responses in mind, okay? So that way we don't go over an hour. I don't want to be, I'm not going to be doing a lot of talking. The only thing I'm going to be doing is asking the question and prompting, keeping it moving along. But I want the student themselves talking. I want to hear, this is my opportunity, more so than you. I'm interested in hearing their testimony. Like I would have been willing to do this for private reasons, but I've made it public that I will be doing it and sharing it publicly. So they all know that it's going up on my YouTube channel. So if you're afraid to show your face, you're going up there, and I want you to give me permission to do that. If you don't want to do that, then obviously the interview ain't going to happen. I will not be doing it on Twitter Spaces. I don't think that's genuine. I could be hiring people. You know what I mean? Like anybody else out there could claim and say, oh yeah, he's hired somebody to do that. You don't see the person. You don't see their expressions. You don't see their emotions when they're talking about the good and the bad experience. I want you to see, which is exactly why I watch YouTubers when they live stream. I want to see their face. I want to see the expression when they talk about things that they were successful in, because their face will tell you. I want to see their expression when they talk about the painful things, because their face is going to tell you. When you're hiding your face and you're talking about things like that, it's hard to get to the root of what they had to go through. And if we're going to talk about it, let's really talk about it, right? I have a lot of respect for anybody that would be willing to do this. And I have a long list of people that have reached out to me. So I have interviews for months. And don't be upset if I haven't reached out to you yet, because there's a lot of you. I promise you, if you email me and you want to do the interview and you have proof that you're profitable with broker statements and funded account withdrawals and interviews with the company that funded you, you are absolutely 100% invited to have a conversation with me. I want to hear your story. I want to hear your testimony. And everybody else, I'm sure, would love to see that. If that's something that you want to see, and you're interested in seeing, give this video a thumbs up. Let them know, because they may be sitting on the fence about it. Maybe you're shy about it. Like, maybe what I made wasn't enough money. Listen, if you're making money, don't think that there's a threshold. The first two guys are obviously behemoths. They've taken pretty sizable, chunks of money out of the marketplace. I'm only using them first because they were the first ones that sparked this whole interest. And I have people that have done 80,000, 50,000, 40,000, 100,000, 200,000, 300,000. You're going to see it, folks. These people have receipts, and you can't argue with that. They are doing it. And that, to me, is very inspirational as a mentor, because they did that on their own. I never one time told them to take any of those trades, and I never told them to trade with my funds. They made their own initiative, took their own initiative, and they did themselves. It was organic, 100% organic. And that, to me, is a maverick. That, to me, is a dynamo. That, to me, is awesome. I mean, that fires me up, because they took the initiative to go out there and do something. They didn't listen to the naysayers out there and say, oh, this stuff is complicated, oh, this stuff is fake, it's a fraud, it's this kind of thing. You're not going to convince these folks. They're pulling down money. Spendable money. Not market replay reports. Not demo profits. Not paper trading. Okay? They're paying taxes on this money. Big difference. Big difference. And I was surprised at the response I got. I mean, it was a lot. I may have to do more than one a week. I mean, it's just a lot. I mean, I guess it would be reasonable to expect that, with such a community size of ours and so many people now getting into it. But at any rate. So while we didn't see a barn burner of a move this morning, and we didn't have a trending model, I gave you something real time to observe. We watched the new opening gap below. And then I mentioned that we were trading down here, watch the consequent encroachment there, and then we were going to see it run up into the upper portion of that shaded area, which is what we did, and more specifically take out the buy side here. So we've done that. So the difference between that would be, we'll call it 81. So 81 to 4,002. 20 handles or so. That's not bad. What would 20 handles do for you? What if you just got 5 handles out of that 20 handles? Which is what I teach all my students to aim for as a very low rung objective when you first start out. It's easy to see 5 handles in a day. Several times. But you aren't going to see these types of setups just because you watch the video. Like, you have to know a lot of things. You have to be in the charts, watching it, paint, key off the specific times of the day. Look for things that have already occurred, which was what I outlined, the sell side below here. These relative equal lows. We went down below it here. Beautiful delivery. That's precise. You can't deny it. Rolls back up in, and then one more time tries to make an attempt to go down here, but there's no reason. Why is there no reason, ICT? How could I trust that? How did you trust to talk about it? Because you did it wrong in front of everybody and they couldn't laugh at you. What I outlined here, the sell side below these relative equal lows. It goes down to a logical level, not some random place, not some random zone. I didn't refer to anything harmonic down here. These levels were already on my chart when it went down here. And then taking your attention to that level right there, this failure swing, you can now anticipate them if you have the backdrop, the foundation behind it, that we already went below these lows for sell side and it went to a level that would be expected. Think about what's going on here by doing that. I'm stating that the algorithm will go back down to this level, below these lows, go there and be content with that, and then look to do what? Reprice for an opposing liquidity or inefficiency. We had both buy side and the remaining portion of that 60-minute fair value gap in the shaded area. I don't need it to go all the way up to the top. I just need to go back to the buy side here. So smart money was buying below these lows. Notice it's doing that when it goes down here. This area here, which is the midpoint of this wick. Let me go back in case you guys just showed up. We're looking for this new opening gap down here. It delivered it at 39.80 and 3/4. It came down to 39.50, 39.80.50. That's the low. Look up here in the upper left-hand corner. That candle's low is 39.80.50. One tick below consequent encroachment. That is below this low and this low. So the algorithm is remembering what? It's referring back to this low and this low because they're relatively equal. It does not know, listen folks, listen. It does not know your stop. It doesn't know my stop. It doesn't know how many stops. Your broker does. But the algorithm has no idea. It doesn't reference it like that. It just refers to these points, these PD arrays. So the market does what? It reprices back down below those lows, which is a discount, and consequent encroachment. They're all measurable. And there's no need to go back down to that low. Why? Because already repriced to the new week opening gap. And done what? The sell side has been purged. This is just returning back to a point of reference for smart money to accumulate longs. If they're going to buy here in their quote-unquote smart money, and they are using what I teach as a market efficiency paradigm, that means they're going to buy stops that are below the market in the form of sell side, and they're going to distribute their long positions to buy side that's resting above the market. Willing buyers at a higher price. That's these stops right here. We're looking for this new week opening gap. Prices back down below those lows, which is a discount, and consequent encroachment. They're all measurable, and there's no need to go back down to that low. Why? Because already repriced to the new week opening gap. And done what? The sell side has been purged. This is just returning back to a point of reference for smart money to accumulate longs. If they're going to buy here in their quote-unquote smart money, and they are using what I teach as a market efficiency paradigm, that means they're going to buy stops that are below the market in the form of sell side, and they're going to distribute their long positions to buy side that's resting above the market. Willing buyers at a higher price. That's these stops right here. So they're buying sell side liquidity below these lows here, and consequent encroachment. They don't fear the algorithm repricing down here because they know it's already done its job. Big, huge step forward in your understanding about price action if you can see that. So if they buy here, and I talked about and consequent encroachment. They don't fear the algorithm repricing down here because they know it's already done its job. Big, huge step forward in your understanding about price action if you can see that. So if they buy here, and I talked about this live, it's not like I'm going back in time because it's already happened. I said this live here for you so that we can see it. The logic is real, folks. It's real. If they're buying that, what are they holding for? They're not holding for harmonic patterns. They're not looking for Elliott waves and all that other stuff. They're not counting waves. They're not doing any of that stuff. They're simply looking for the inefficiencies above the marketplace. Where is it in here? Nowhere. Here, we've already done that several times. Buying here, they're going to go exactly where I said it was going to go. The remaining portion of that 60-minute fair value gap up here that hasn't been traded to, once it went lower here, we've only delivered one time here. We went up to a quarter of it here, which is, again, not random. Then it went to halfway, consequent encroachment, and then ran through it. Like I said, that's where the buy side is. So smart money buys, discount, sells to a premium. Buy stops that resting above here. They knew those buyers wanted to buy the market when it was down here. When they're down here, smart money, the paradigm shift that you're being taught to have in looking at price action, because it's algorithmic, is you're buying it here with the same mindset that they have. Smart money sees this as buying sell stops at the most opportune time. It's the precise time, folks. It's precise. You can't make it any better than this. The logic is right there. And buying that with the expectation of seeing go where? Right to those buyers that want to buy high. Now, they don't want to buy high to buy a long position. They have they have a short, and they're holding on to their position here. Maybe there wasn't a lot of shorts. It doesn't make a difference because the algorithm doesn't know the level of float that resides above that. It means the number of orders. How many buy stops are resting above that high? I don't know. You won't ever know. The algorithm itself does not know. Buying it cheap, selling it to people that want to buy it higher. Why? Because I'm targeting their inability to know how to trade. I'm targeting their shield, their defense. I'm busting it in like a SWAT. I'm literally going through it. I'm teaching you how to do that. I'm sorry if it doesn't meet the nicey nice feel that you think investing is supposed to be about. It's not like that, folks. This is war. And when you look at the charts, I have absolutely no moral conflict at all about taking your money or anybody else's money when you're on the wrong side of the marketplace, because you all sign the same risk disclosures when you open up your account. Everybody knows that you're likely to lose money. So if I'm buying down here, I'm doing what smart money's doing. I'm told you that that's what's going to happen there. From here, watch that. And we want to see it deliver up to this area again, but more specifically, the upper half. Why? Because it only went to here, leaving from this high up to the high shaded area here. That's not been repriced to. We only passed through one time here, then up to a quarter. So think about it like this. The range on that hourly fair value gap has been repriced to here, right there at that moment. Then this high here takes it up to that level. So the remaining portion of that fair value gap, in my mind, I'm seeing that range left. I'm ignoring all this. So you're looking at all these things trying to guess which one I should have been looking at. I'm teaching you how to internalize it, because this is the part that the algorithm sees now. It doesn't need to look at all these other highs. This is the one that matters now. So we only passed through one time here, then up to a quarter. So think about it like this. The range on that hourly fair value gap has been repriced to here, right there at that moment. Then this high here takes it up to that level. So the remaining portion of that fair value gap, in my mind, I'm seeing that range left. I'm ignoring all this. So you're looking at all these things trying to guess which one I should have been looking at. I'm teaching you how to internalize it, because this is the part that the algorithm sees now. It doesn't need to look at all these other highs. This is the one that matters now, because it has traded up inside that old 60-minute fair value gap, but it's left in this portion of it where it has not redelivered to it. It's only been offered sell side. So the efficiency model is that price needs to trade up into that area and deliver price that way. It does two things. It does that redelivery and goes right for the buy stops I told you it was going to aim for. Now, isn't it convenient? Isn't it convenient that the market just so happens to run right up there, clear those buy stops, and now we're right back in the middle of the range again? Hello? Hello? Are you paying attention? Are you paying attention? Are you playing with your Game Boy? Are you texting your girlfriend? I'm listening to this. It doesn't need to look at all these other highs. This is the one that matters now, because it has traded up inside that old 60-minute fair value gap, but it's left in this portion of it where it has not redelivered to it. It's only been offered sell side. So the efficiency model is that price needs to trade up into that area and deliver price that way. It does two things. It does that redelivery and goes right for the buy stops I told you it was going to aim for. Now, isn't it convenient? Isn't it convenient that the market just so happens to run right up there, clear those buy stops, and now we're right back in the middle of the range again? Hello? Hello? Are you paying attention? Are you paying attention? Are you playing with your Game Boy? Are you texting your girlfriend? I'm listening to this guy go off on YouTube. No, you need to be paying attention, taking notes. Folks, this stuff repeats every friggin' day. Every day. I talk about it in Twitter. I tell you exactly what candle to look at. I tell you exactly what it's going to be aiming for. I've been doing it for months. My private students have watched me call this on a daily chart, just the same way. And it can be done on a 1-minute chart, 5-minute chart, second chart. Yes, that's less than a minute. You cannot, absolutely cannot find anything fucking better than this. I'm sorry. This is perfect. This is the market. And if that upsets you, I'm sorry, but you're going to have to grow up. Because if you really want to know how to do this, if you really want to know how these markets book, you came to the right place. Mr. Wizard's World. We're here. We're here every day talking about the technical science and the stuff that really works. And it's undeniable. It's unrivaled. The precision cannot be found anywhere else. And that's awesome. It's encouraging. When you see it, when you finally get your hands on it, and you see it unfold day after day, week after week, month after month, year after year, it's infectious. It's intoxicating. You become an alcoholic. You can't imagine doing it any other way. Even in a sloppy range like this, folks. Even in a sloppy range just like this. It's not chaos. It is not chaos. It's all scripted. Now, on better days, when we don't have the effects of the Fed chairman potentially saying something that could be utilized as a smokescreen and repriced completely outside of the scope of what would be reasonable, we can see things. It's not chaos. It is not chaos. It's all scripted. Now, on better days, when we don't have the effects of the Fed chairman potentially saying something that can be utilized as a smokescreen and repriced completely outside of the scope of what would be reasonable. We can see trending days and keep on adding to the position until it rolls to the far extreme of the daily range, high or low. Some of you might like to think that that's the only way you're going to trade and that's your model. Wonderful. That's nothing wrong with that. That's exactly what I'm doing this for. You're going to find your model before November. You're going to know exactly how you, not everybody collectively, how you yourself, the individual watching this right now, and every time I do a live stream, you're going to learn the thing that you resonate closest to, that makes the most sense to you. You're going to see something that says, you know what? Damn it, that's exactly how I see things, and that makes perfect sense. I'm doing that. I don't care about the fair value gap. I don't care about a breaker. I don't care about new week opening gaps. This is what I'm going to do. Wonderful. And when you get there, bloom where you're planted. Don't tinker with it. No matter what else I teach, don't tinker with it, because you're here to learn how to make money. You're not here to play video games, okay? You're not here to impress people on social media. You're not here to dance for people because they want to see you prove that you can make money. Screw them. You have bills to pay. You have bills to pay. You have ends to meet. You have places to go to and people to take care of. You don't have time to be dancing around for people that don't matter. None of these people matter. It's going to demand you. This is what I'm going to do. Wonderful. And when you get there, bloom where you're planted. Don't tinker with it. No matter what else I teach, don't tinker with it, because you're here to learn how to make money. You're not here to play video games, okay? You're not here to impress people on social media. You're not here to dance for people because they want to see you prove that you can make money. Screw them. You have bills to pay. You have bills to pay. You have ends to meet. You have places to go to and people to take care of. You don't have time to be dancing around for people that don't matter. None of these people matter. It's going to demand you to do something for them. You are here to develop a skill set while you can, because this year I'm done. I'm done. The second Friday of November, we're done. ICT's done mentoring. There's no more mentoring, okay? So you have to show up. You have to take notes. You have to put the work in. I promise you, I fucking guarantee you, you will absolutely know what the hell you're doing come November, but you have to show up every day. Stop dancing around and adding shit to this. Oh, I'm going to bring supply and demand thing to this. I'm going to bring Elliott Wave to this. Stop. Leave all that stuff at the door. If you want to pick it up when we're done in November and add it back to everything else, go right ahead. At that time, I don't give a shit. But while we're doing this, this is all that matters. This is it. This is the truth. Nothing else matters but this. You cannot argue. You cannot resist it. It's being shown to you beforehand. You guys bitched and moaned. Oh, you'll never see him go out here and live stream. You'll never see him outline all this stuff because it doesn't work. Dude, I'm doing it every fucking day. Every day. Like clockwork. You can set your watch to me. It's perfect. That's how you would expect it. If it was an algorithm, wouldn't you expect it to be like this? So
it's a nice, yeah, for sure.
You're thinking, what the hell just happened? This guy usually put me to sleep when I'm watching his videos. Oh.
This is a good live stream.
Oh yeah. Well, this is what it's like when I'm live. I'm bipolar. And if that bothers you, go somewhere else. I can't not be me. But we're talking about something that I'm passionate about. I'm absolutely passionate about this. I'm passionate about your success. I want you to succeed. I want you to make money. I want you to stop working and do this on your own. Carve out your own fucking paycheck. I want you to have that. Don't you? Don't you want that? Are you here just playing around? Because if you're here just watching shit on YouTube because you're fucking bored, you're wasting your time. You're wasting your time. This is going to keep working. Until they take away the markets entirely, it's going to keep working. The market's not going to change the algorithm. I ain't changing shit. On your own. Carve out your own fucking paycheck. I want you to have that. Don't you? Don't you want that? Are you here just playing around? Because if you're here just watching shit on YouTube because you're fucking bored, you're wasting your time. You're wasting your time. This is going to keep working. Until they take away the markets entirely, it's going to keep working. The market's not going to change the algorithm. I ain't changing shit. It works.
So I'm confused. Is it like it's his algorithm? So is he the market maker? That's in control of all price? There's no way.
Perfectly. Is it going to be hard in the beginning because you have all these other things that you're trying to wrestle with? Absolutely. Just like it was for me. I had all kinds of dumb stuff. Books and courses and things that I thought maybe.
I would say around like a year and a half, maybe 2 years. But I would say like 4 months of being serious about it.
Things go up and down the marketplace. It's all dumb. It's stupid. And some of them have really good marketing. If you think, wow, this is it. This is the thing I've been looking for. No, it's not. It's the thing you're being distracted with right now. And when you see, unfortunately, a little bit of success in it, and you falsely attribute it like a religion. Oh, the market went up because my harmonic camelback said it was going to go up there. Man, get out of here. Get out of here. Animal patterns have nothing to do with billions of dollars at risk. Okay? I'm sorry. It doesn't work like that. Doesn't work like that. The market's going to go where the money is. If there ain't the money in there, they're going to engineer it. That's the way it works. Above that high right here, buy stops. Somebody's short. We don't know. Retail Rick, he's short here. He's going to put a protective stop loss in there because the books say put your stop loss right above the high. He feels great when it goes down. He's going through all this chop. He's thinking, okay, maybe it's just one of those moments where I have to wait. ICT talks about this right here as a fair value gap. I got to trust it. He don't know what he's doing because he watched 3 videos and now all of a sudden he's a professional, right? The market drops down. He's thinking, all right, I'm all in now.
Hey,
I'm adding to it. It's great. Go watch TV. Go play golf. I'm going to be good for the rest of the day. My stop's in place. What do you make? A mistake. He traded with.
I saw a video where you streamed for 12 hours. That's crazy. How do you stay focused for that long? Honestly, it's because I was on live. If I wasn't on live, I probably wouldn't have been that focused. I probably would have been like on my phone and stuff. I mean, even then, I have to go to the bathroom a lot. I'm not gonna lie, because I be drinking water.
Logic, it doesn't work. He doesn't know about the new week opening gap. He doesn't understand. Look,
I streamed for like 19 hours. Day 5. That's why there's no day 5 video. Because I streamed for 19 hours, but it wouldn't be able to upload to YouTube, so I was kind of pissed. So it can only be 12 hours. So I guess I'll have to do like 2 parts.
Liquidity. He doesn't understand the facts that this day is going to be consolidation because of the Fed. The market's already delivered this week, folks. It went to that dollar objective. It's non-farm payroll week. Who's in a hurry right now? Who's in a hurry? What big money entity was going to think to themselves, you know what I need to do right now? I need to take all of our customer assets and put it at risk because non-farm payroll Friday is lit. We got to get in there and make all the money on Friday. Who's in a hurry right now? Who's in a hurry? What big money entity was going to think to themselves, you know what I need to do right now? I need to take all of our customers.
I appreciate it. I will for sure. I'm trying to keep on doing this.
Customer assets and put it at risk because non-farm payroll Friday is lit. We got to get in there and make all the money on Friday. Let's get in there ahead because, you know, it might be a big mover. I'm sorry, but that's not how this business works. Sorry. A lot of you bring comic book logic to trading when you need a PhD level education. You need to understand how the human mind thinks, how it behaves under pressure. When it's in reward, they feel like they can't lose. And that's why you see these sudden rips other direction. They don't want to give them the chance to realize they're wrong and collapse their trade and before removing what? Just like spoofing on the depth of the market. They don't want them to pull those orders. So what happens? They have to run for them aggressively and quickly. Otherwise, they can't participate and utilize them as counterparty to their selling of their long position they accumulated down here where I told you.
Bro, these live streams, like the second time listening to them, like after you go through more, it's just like it makes so much more sense.
chance to realize they're wrong and collapse their trade and before removing what? Just like spoofing on the market, they don't want them to pull those orders. So what happens? They have to run for them aggressively and quickly. Otherwise, they can't participate and utilize them as counterparty to their selling of their long position they accumulated down here where I told you. Folks, that's not complicated. That's not complicated. That is not complicated. What's complicated for you is you want to push a button and take a trade and make money right now. Because that's the only definition for you that this works, is if it makes you money right now. The few times that you've spent with me so far this year. You're going to fail if you have that mindset. You have a lot to learn. You should not be trading at all this year. If you're here to try to learn, that means you're not trading. Close your live account. Don't even leave it open, because you're going to do something impulsively. You're going to see me doing a series of weeks around on fire and moves that you never would have imagined being seen and called out beforehand in detail. You're going to see that. You're going to see me pushing the button too, folks. And I don't want you being led into taking that as a live trade. Because even if you do make money,
I'm not. I haven't really tried either. The reason being is because I'm learning, and like, just listen to this.
If you're here to try to learn, that means you're not trading. Close your live account. Don't even leave it open.
Just listen to that.
You're going to fail if you have that mindset. You have a lot to learn. You should not be trading at all this year. If you're here to try to learn, that means you're not trading. Close your live account. Don't even leave it open, because you're going to do something impulsively. You're going to see me doing a series of weeks around on fire and moves that you never would have imagined being seen and called out beforehand in detail. You're going to see that. You're going to see me pushing the button too, folks. And I don't want you being led into taking that as a live trade. Because even if you do make money, you're not learning from that. As much as you painfully need more money, like everybody else in the world, you don't learn this by putting real money at risk, because you're going to be worried about, am I going to be wrong this? This time, if it's moving a little bit, I'm trusting it. I've been here before, but it's retracing a little bit. Oh no, I can't. I think he's probably wrong. This is gonna be the time he's wrong. I should have never took this trade. You're gonna click.
Hey, appreciate it. Hey, good luck to you too, bro.
It's still gonna go in my favor, and you won't be in there. But you've taken a loss because you got out while I was in a retracement above the entry or below the entry. Reference to a long. That's why copying people is stupid. Copy me is dumb. If you're going to try to trade, that's the stupidest thing in the world. Now, if you don't want to learn how to trade because you know yourself better than anybody else would, and you know you're not going to be disciplined, and you just want to have someone that's skilled, that provides signals to you, there's absolutely nothing wrong in that regard. There are people, even in my community, that are just like that. They just don't have the rule-based ideas that, or discipline to maintain a rule-based strategy and say, I'm not doing something right now because the rules say not to. They exist even in my community. Human beings are people that are spread across a diverse spectrum. And just because they are in my community, they hear the same videos and watch the same thing, listening to me right now, it doesn't mean that they're going to be responsible. There's lots of irresponsible students of mine. They want to blame me for the things that they did when I had no business talking about anything for them to take a live trade, especially Forex, and they're taking trades in Forex, which I'm not touching on right now. I took a trade because you told me this is what happens. That's a trade that you took. You took that. Own it. You're going to have to do that the rest of your life as a trader. You can't fault everybody else but you. When you do it wrong, own it. There's an opportunity to learn from that. Love the fact of being in these charts. If you don't like watching real-time price action, backtesting old price moves, and studying every small little detail about it, I'm going to tell you something. This is honest to God's truth, and I'm telling you, there's no other way to describe it but this. If you don't love that part of this, you will not be profitable. You will fail. You will blow your account. You will fail your funded account challenge. You will fail to keep your funded account, even if you got it, if you don't love this aspect of it, because that's what this is, folks. You got to look at these candlesticks and love it. You got to love it. You can't stand weekends. You want to see these candles paint. And when they're not painting, you're fucking miserable. That's just the way it is. That's what makes a trader a trader. Because if you don't have that level of passion, you will not endure losses. Yes, they're going to come. Even with my stuff, you're going to lose. I lose. You're going to lose. It's normal. It's a transaction cost in this business. And unfortunately, most people that come in here are not equipped to see the adversities that come with embracing uncertainty. A lot of folks can't do it. How do you know? How do you know? I already taught you. I told you. But that won't suffice for some of you. You want to know where it won't ever hurt you, where you won't ever take a loss. That doesn't exist. And if you think that exists, get out of here. Get out of here. Just go. Don't even watch any more of my videos. Perfect trading, perfect never losing trading, getting out the highest high and out the lowest low every single time, knowing every single move, being a part of every single move. Nobody can do that for you. You have to sleep. You're going to get sick like I did last week. You're going to have a family to take care of like I do and like you do. Some of you have jobs still. Some of you run businesses. Some of you run school. You can't be in every move. It's impossible. So how often are you looking at things unrealistically and pressuring yourself with things that don't need to be worried about? Those are not big stones. They're small little pebbles that you easily just take your shoe off, drop the pebble out of your shoe, put your shoe back on, and keep on walking forward. But many of you are just trying to do things well beyond what I'm outlining for you. Expecting yourself to know how to do it too soon, when I'm not expecting that, and I'm the instructor. It takes time. It takes time, and you have to allow your patience to form and build responsibility. And if you can't do that, it doesn't mean these concepts fail or that they've changed the algorithm or it's become the new retail. It just means that you aren't ready. That's all. It took me years to get an understanding, to know what it was I was looking for. And then even after that, I tinkered with it, which is why I told you earlier. Once you find your model and you're comfortable with it, even though it doesn't deliver every single day for you, don't abandon it. Learn how to trade with that one model, because it will teach you how to allow yourself to broaden your expectations and your understanding with other models that I teach in other tools. But you have to do one thing well. You just need one thing. Buying a fair value gap, shorting a fair value gap, shorting a breaker, buying a breaker, aiming for buy stops, or aiming for a premium fair value gap if you're long, and reverse it for being bearish and short. It's simple, folks. That stuff is simple. Just because I have a lot of tools and a lot of weapons in my repertoire and a lot of concepts doesn't mean I'm bringing everything to every chart. You're only trading what's in the chart. That's it. If it's not in the chart, you're not referring to it, right? So how hard is that? That's not complicated. But anyway, I gave you something real time. It panned out perfectly inside of a day that was already predetermined to be choppy and listless because of the Fed chairman talking. You have to know your economic calendar, folks. And then tomorrow, being Thursday, day before non-farm payroll, Friday being obviously NFP, it's a day where it's a gamble. And it can take it any way you want. And I don't have tools that deliver a high degree of probability that I can trust, because I think that those events are highly manipulated. That means there's manual intervention. Manual intervention, ICT can't beat that. Okay? I can't. And there's no shame in that. You want to be told where the limits are, right? You would want to know. I would want to know that. What are the strengths? Everything I talk about, how it's unrivaled. But what are the weaknesses? There are certain times of the month around certain calendar events that precision will evade you. It doesn't matter how long you've been trading. It doesn't matter how good you think you are, because I'm the author of this stuff, and I'm telling you, precision will escape you on these days over a large sample size. Once in a while, yes, I can get out there and call the low, trade the low, run up to near the high of the day on non-farm payroll. I can do those things, vice versa. So my students can do some of those things too. But does that mean it's a steady diet of every non-farm payroll we can do that? No. Sometimes the non-farm payroll event is a moot point. It just doesn't do anything. It looks like this right here. A little bit of a squirrely move at 8:30 and then doesn't do anything. And other days where it just really takes off and runs and runs and runs and runs, and who cares if it does? One day isn't your career. One trading day does not, and it should not, encapsulate your career. But you trade like it is. Every trade. It's a make it or break it. You got to do anything. And other days where it just really takes off and runs and runs and runs and runs, and who cares if it does? One day isn't your career. One trading day does not, and it should not, encapsulate your career. But you trade like it is. Every trade. It's a make it or break it. You got the Rocky theme playing. Come on. It's a trade. If you lose, who cares? If you win, who cares? You're indifferent to the outcome. That's how professional traders conduct them. You got the Rocky theme playing. Come on. It's a trade. If you lose, who cares? If you win, who cares? You're indifferent to the outcome. That's how professional traders conduct themselves. They don't care about the outcome. They're not over leveraging because they need a big monumental win to share on social media to get a dopamine hit. Their likes up. They're in this to make money consistently and manage risk If they take a loss or a series of losses, it's okay. It's part of it. They're not sharing it on social media so that way they can compound the pain. And equally so, you're not sharing your winners so that way you can get a sugar high. Because as soon as you do that, this is what's going to happen. Yeah. Yeah, man, that was amazing. Then you take the next trade, and that trade loses. And then you feel bad because you're like, oh, my sugar high's gone. Let me get it back. And you lose again. And now you were up 4% on the day. Now you're down 6. You ain't sharing that on social media, are you? So don't provide yourself a means of being deflated by inviting social media to judge your performance. It's personal. It's absolutely personal. So don't provide yourself a means of being deflated by inviting social media to judge your performance. It's personal. It's absolutely personal. And if you're learning and you don't know how to trade, the worst thing you can do is share your results while you're learning, because you're not going to get the advice that you're hoping for. You're not going to get the feel-good, warm and fuzzies. Somebody invariably is going to be jealous. And they're these miserable creatures. They're going to come up to your post, creep in there like a snake, and talk about how what you did was not good enough. It was stupid. That's nonsense. You got lucky. They're never going to tell you what you think they should or what you want them to do. Just like your family isn't going to, they're not going to understand what you're doing. They're not going to believe what you're doing can be profitable because they can't accept the fact that if you are, you're going to be doing better than them. And that's the way friends and family operate. They can tell you to your face they love you, but they love you only as long as you are just like them. And when you start crawling out of the depths of mediocrity, and they can start reflecting on how they've made mistakes and not really pursued anything in their own personal life, and you're succeeding, and they're still freaking lazy about doing anything about it, they're not going to cheer you on. Don't ask for outside cheerleaders. You need to be your own cheerleader, and that's done in your journal, your trading journal. That trading journal that you're building this year, that's going to be the best damn trading book you've ever read in your life, and you wrote it yourself. Because it's going to have real experiences that you were there. You back tested that. You watched that live session. You called that move. You saw it. And eventually later in half a year, you'll be paper trading it. So that way you'll have a real engagement with it. That's encouraging. That's the stuff that you want to build yourself up with. Things that you had your hands all over. Not, let me borrow this guy's momentum and copy his trades, and if he makes money, I make money, and I can feel like I'm a good trader. That's not trading. I'm sorry, that's not trading. That's mimicking. And I have a disdain for that. I can't stand it. Because to me, it makes no sense why anybody wouldn't just go through the struggle. Because it is to learn this. Whether you learn from me or somebody else, I mean, it's hard. You have to look at yourself through a mirror that these markets will provide for you, and you're going to discover that you aren't the person you thought you were. You're going to have character flaws that are absolutely shocking to you. You're not as patient as you thought you were. You're not so disciplined as you thought you would be. Not, let me borrow this guy's momentum and copy his trades, and if he makes money, I make money, and I can feel like I'm a good trader. That's not trading. I'm sorry. That's not trading. That's mimicking. And I have a disdain for that. I can't stand it. Because to me, it makes no sense why anybody wouldn't just go through the struggle. Because it is to learn this. Whether you learn from me or somebody else, I mean, it's hard. You have to look at yourself through a mirror that these markets will provide for you, and you're going to discover that you aren't the person you thought you were. You're going to have character flaws that are absolutely shocking to you. You're not as patient as you thought you were. You're not so. Disciplined as you thought you would be. And that provides opportunity for you to improve upon and build yourself up. A consistently profitable trader, let me explain something to you in closing. One of two things is going to happen. You're going to do very, very well this year in learning how to reprice. And that is going to result in one of two things. You're going to turn into the biggest prick that you could ever imagine because you're gonna have a skill set that you can literally sit down any given day of the week, go in there and make what you make a month in a trade. And you're gonna know that you can do that any fucking day you want to. That is power. That's power. That brings a level of confidence that you can't even understand right now. And conversely, there's going to be the other half of you that's going to learn this, have that same aptitude, that same skill set, and you're going to think to yourself, wow, what a wonderfully blessed position I'm in right now. I am so thankful that I have this skill set right now that I can not only impact my own life, my personal family's life, maybe even a friend or a stranger. And you're going to conduct yourself in a manner that isn't ugly, that people aren't going to look at you and say, wow, you're an arrogant douchebag, even if you are good at trading. They won't have anything bad to say about you because you're not conducting yourself in a manner that draws attention to yourself like you're some kind of fucking hero. That's the problem in this industry. Okay, we need less of that. And I'm hoping that what I'm creating with all of you, yes, you're going to be monsters, you're going to be savages in the charts, in your trading, yes. I don't want you to be a social media douchebag. A lot of men can't wait to do it, but that would be an embarrassment to me because I did that stuff. And it's embarrassing. It's shameful. And you're not going to win the majority of the community doing that. You might have some young hotshots that want to be just like you because they think that that's strength, that's influence, that's power, that's clout. When really, in all honesty, it's shit. That's all it is. It's trash. It's trashy. Nobody really has any respect for anybody like that. And if anybody does, it's fainted. It's fake. It's because they want to try to get something from you. And once they get whatever they want to try to get from you, they're not going to worship you. And nobody should be worshiping anyone. And I'm on the top of that list. So this skill set you're learning this year, don't try to aspire to be some kind of egomaniac. It's going to be hard for some of you. Really, really hard, because you're going to find a skill set that, number one, you didn't know existed, and you're going to be able to have the ability to make money that you've never seen before. And it's going to make you feel like you're something that you really aren't, because you are growing into new money. And that was an experience I went through when I was a younger man.
Hey, thanks for the sub, Jacob.
New money makes you think that you're better than you really are in all aspects. And it makes you a very toxic, ugly person. But you won't see it that way. You're going to think that I should be arrogant. I'm justified. Look at all the things I can do now. Look at the money I can make. I'm better than that guy, that guy, that guy, that guy. That shouldn't be your motivation. It wasn't my motivation initially, but when I found success, it made me think that way. Because you're a very toxic, ugly person. But you won't see it that way. You're going to think that I should be arrogant. I'm justified. Look at all the things I can do now. Look at the money I can make. I'm better than that guy, that guy, that guy, that guy. That shouldn't be your motivation. It wasn't my motivation initially, but when I found success, it made me think that way. Because I was a weak young man, constantly seeking validation. And as a 50-year-old man, I still seek validation because I can't get it from a family member that's passed away before seeing where I am today. So it aches in me. So if you never start it, you won't fall victim to being drugged back into it again. Because the public isn't going to give you what you think. You think they're going to worship you and lift you up on a pedestal. That's so short term, and it's not even worth it. Living your life principally oriented, purpose-driven, trying to make a positive impact in other people's lives, not trying to shit all over because you think you're better than everybody else. If you see anything in me, understand this. I'm absolutely convinced that there is not one single trader on this planet that can do this better than me. But in that same sentence, because I know that, doesn't give me the right to talk down and shit on everybody else. I'm giving you my time. I'm giving you my life's work because I want to help you. I want to see you do well. I want to see what you'll do with it. And I know, just like I've been talking about the last couple of minutes, some of you are going to abuse that power. And you're going to regret it later in life, like I did, because you acted like a fool. Because you wanted to be significant. The significance is helping other people. Helping other people be better than where they are now. And that feels way better than anybody saying, you're the GOAT. Dude, you're the GOAT, man. You're the GOAT. I ain't no fucking GOAT. Don't call me a GOAT. That pisses me off. I can't stand that. I'm not the king. I'm not the GOAT. I'm not the greatest of all times. I'm ICT or Michael. That's it. But a lot of people out there want to be called the GOAT. And they don't have the accolades to justify it. So with that, hope you got something out of this today. Hope I didn't bore too much of hole in your attention span. I'm sure some of you already logged off thinking, okay, this guy's just rambling on, but the market ain't moving, but it did what we were looking for. As small, as searchable as that was, that's all that was necessary for today. And when it does it, you stop. You move to the sidelines and be content. Even in your studies, be content with that. Close your charts, annotate them, and think to yourself, wow, we had a laboratory experiment today. We watched live price action. It behaved in a manner that was reasonable. It was expected. It made perfect sense. And now that it's done it, it's right back inside the range, where everybody else is trying to figure out what it's going to do next when you don't need to worry about it. Isn't that power? Doesn't that give you a sense of calmness? There's no necessity for you to know what it's going to do next because the profile of this day indicates that it's 50-50. So if it's 50-50, is that high probability? No. You're trying to gamble. You want to have a move. It needs to be doing something because you are in front of the charts. It owes you something. No. Turn your charts off. Go do something else. Be content. Even if it moves a lot from where we are right now, who cares? Go back in tomorrow. I won't be live streaming tomorrow, and I won't be live streaming on Friday. I will be doing video work, so that way I can catch up the lectures. Because I've been doing these live streams, pouring into you through that, but I want to do pre-recorded lectures too. So I want to get back to doing that and populate the channel for the 2023 mentorship lessons and such. So that's what I'll be doing over the next couple days, and also doing some interviews with some of the professional students. So I will bid you a farewell. Have yourself a very pleasant afternoon, evening, wherever you are, and until talking to you next time, be safe.
Hey, that was a good lecture. We don't have time. I don't have time to make notes. We're just gonna go straight into the charts. Okay. Okay. 8:30. I think we're gonna manipulate down to a new day opening gap. We're setting the stage for Powell. We're setting a dealing range to be formed here. That's what I see. We have both buy side and sell side. That is looking like we're gonna manipulate one side of this range. Now my headphones, same bias. I need to. I want to do more. I need to do a little bit more. You know, I'm not just gonna open the chart and just say, yeah, here's my bias. I want to see a little bit more. I want to see dollar and I want to see YM possibly. So we'll get right into that right now. And then my bias will probably be developed right as the markets are opening. So this is good timing. I'll say like 20-30 minutes is good amount of time for bias. All right, so basically I see this, and we barely purchased low, like equal low right here, or actually equal lows. So we have equal lows and we have equal highs. So it's literally whatever side of the range gets taken first. Ideally, I would like to see buy side get taken first, just because that would take us above true day opening. But we also have 8:30 opening down here, so we could take this then head higher. So we'll see. Let's look at NQ. NQ is kind of the same. I mean, we barely purchased low here, and then we have buy side that rests above here. So we've left equal highs and lows. And same situation. You know, I think it's a kind of 50-50. You can delete that. Let's look at the daily chart. So on the daily chart, I'm expecting to see some form of manipulation. I'm going to mark out this high here. I think that'll be a significant level at some point. Same with ES, I'm going to do the same thing. Okay. Oh, if we look at ES is looking like we might sweep this high here. Then I'm going to mark this low here. I'm looking for this new day opening gap for sure. We also have as much as this new week opening gap, and notice here how we had sell side that rests right there. Let's look at anchored IPTA. I am kind of looking at this low here, but I don't know. That might be a reach. That could be a sell side draw there. IPTA low. Okay, I need to clear my charts, bro. My charts feel like they're heavy. You know, maybe that's just me, but I get like emotional attachment to my drawing sometimes. I don't want him to leave, you know. Definitely looking for new day opening gap on NQ. That's in line with this 20 candle low right here. We don't really have anything else other than that. We have these lows that exist down here. But I would be looking for that high first. We have a wick on the hourly candle, so that's implying that we might want to take buy side first. Let's look at YM. Yeah, remove this. Okay, YM. I don't know if anytime I like look at YM, I remind myself why I don't like to look at YM. And I say that every time, but it's kind of true. Like, look at, is this even a candlestick chart? Like, what is this? We've come up and we have taken this high within this daily imbalance right there. So we have 75% of that daily imbalance that we've drawn into. We also have nothing there. I had like I had something on the hourly. I think I had something like that we actually like drew into. So as you see, we have swept this buy side liquidity pool, also in an imbalance, but we barely purged it. Did we? We did. And we have big displacement lower, so for us to come all the way back up to that high, I just think it's less likely, but who knows with this. I'm not going to really incorporate into my analysis. It could lead to consolidation today. Let's look at dollar. Dollar off that daily mitigation block. We have constant encroach for this wick we could draw up into. So we could have high dollar, which could lead to lower indices. I'm looking for constant encroachment of that on the daily. Overall, dollar's just in a big consolidation. So I would be looking for this level right here. We also have a 4-hour imbalance right here. Overlaps with this wick. we haven't traded back down into this potential order block here on the 4 hour. What about the 1 hour? The 1 hour, we have these two down close candles here that we have barely purged into. We might want to see a deeper run into this, give another opportunity for potential buys if this is bullish. Obviously, dollar is kind of tricky right now. So, that being said, this is just consolidation. Ideally, I would want to see us draw into these lows down here. So, I would more submit to that. The fact that this order block didn't hold. So, I would honestly be more submitting to lower prices, which would be probably higher prices on not forex, but indices. But for the meantime, we could see some upwards retracement here. I am going to note this volume imbalance, but we also have this here. So this would be a better depiction. Hey, appreciate the sub. This is how I'm gonna internalize that. Alright, let's look at EU. I don't like euro at all. I don't at all. We just come out. We took an internal buy side. I want to see snappy delivery. We could trade back into that mitigation block like maybe one more time, but other than that, if that doesn't happen, I think the objective, I think the draw on liquidity could be this. But I also don't really trade forex, but we'll just look at it for study purposes. I know there's a lot of stuff on that chart. I apologize. GU is looking like we might want to draw into here. I'm not gonna lie. What is that? It's a daily mitigation. This looks a little bit too fast. Like I feel I'm expecting to see a retracement here. And today, especially if we form a swing high here, we could see that retracement. But this could be another buying opportunity. Is that a weekly order block? No, it's not. It's a monthly. Ooh, a monthly. Okay, we'll see how this month closes, but that's in a while. Has ICT ever shown a broker statement? I don't know. I don't really care either. Is this a different ES chart than what I was looking at before? I feel like I'm tweaking because I didn't see any of this. Bro, what? That's creepy. But yeah, I'm definitely looking for this imbalance. We've engineered this imbalance. Right below these lows. I think that needs to get drawn into. We also have this imbalance here that I'll be looking at. And then obviously equal highs that exist. So we're just held within this consolidation here before manipulation, because in order for, since Powell speaks today, I'm expecting to see manipulation. He testifies right at 10. He testifies tomorrow too. 4-hour Bissy. Yeah, that's also likely draw. And I don't expect this order block to hold. I don't see that as an order block. But I also don't see this as like a means that we're already going to head to these areas in price. I think we're gonna consolidate here, and then throughout the next 2 weeks we could have a sell program. But I'm anticipating, me personally, I'm anticipating maybe August to start some sort of sell model. I'm looking for this imbalance here, this new day opening gap, this new day opening gap here. If we just end up displacing higher, then that'll be what it will be. That'll be what it be. Yeah, for now, I want to see what price does, but it's looking like we could manipulate these highs to come back lower. Let's check dollar 15-minute too. Never did that. Dollar looks pretty dry here. I don't know if I like Asia low day. I don't think that's a likely profile. So dollar might need to do some manipulating here, which would go in line with this manipulation higher here. How we put in a swing high on the hourly? We put in a swing high on the hourly chart on dollar, so that could align. And then we have that hourly, that hourly order block I've been talking about. I would actually like that, honestly. We'll see if that happens. We have these two down close candles that we could draw into. We have a swing high made here, right above this high. Engineer, whipsaw. I would like manipulation above true day. That's ideally what I want to see. Drawing back into new day opening gap. Alright, let me get my other charts opened up. I'm gonna have an hourly chart up here. Yeah, I think that's the best. Sorry, give me one sec, and then we'll hop into lower time frames, and then we have 10 minutes till market opens. Dang, low-key, I need to give myself like 40 minutes for just some top-down analysis. Hey, good morning, good morning. How are y'all doing this morning? I haven't even talked. I haven't asked. Okay, so we look on the 1 minute, in the 5 minute. Where is the low resistance liquidity? I think low resistance liquidity exists above market price. So I would want to see us draw into buy side here. Here we have an order block right here. It makes sense. I mean, we barely purchased this low, so there's nothing crazy about it. Two ES charts. Okay. What is going on? Yeah, ES is really putting those equal lows. I'm fumbling this morning, bro. I feel like out of sorts. That order block there. I don't expect to see retracement. I just want to see buy side get taken. Obviously, I don't really care to trade right now. I think this could hold to see buy side, but at 9:30 opening, we could see manipulation as far as into this new day opening gap. And that could be the profile we have, that we go into new day opening gap all the way up to buy side. That could be a possible profile. We could come up, take these highs here. Maybe do we have a 15-minute fair value gap? Yeah, we have this 15-minute fair value gap right here. So this is what could happen. We could just possibilities come into this imbalance and volume imbalance right here. Manipulate. And then seek that new day opening gap to then reprice to buy side. Overall, that's kind of what I would favor, honestly. Same kind of thing on ES, but ES doesn't look as nice at all. We'll see. Overall, my areas of interest are lower. So either I want to see manipulation higher than possible displacement lower, or manipulation lower than displacement higher. But overall, what we're looking at, I would expect to see manipulation higher, to be honest. Got you. Just got off work, getting ready to get some sleep after the market open. Nice. The grind of the day to day. I got you. We'll see where the direction is going after news. Yeah, Powell's speaking at 10, so. I mean, it's kind of perfect because if you were just watching or you're rewinding, I was watching ICT lecture on Powell speaking at 10 a.m. So that's exactly the type of profile that we have today, which can lead to consolidation. What type of news do we have for the rest of the week? I haven't really been that much in tune with what type of news that we've been having. Oh, he speaks tomorrow. We went over that. So he testifies tomorrow, and then we have CPI and then PPI. Low key, I'm just expecting straight consolidation today, honestly. I'm expecting a more consolidation profile. The fact that we have CPI the rest of the week, this can be a consolidation profile. Because we have to engineer something for CPI most likely. And I would assume that CPI would just distribute all the way into all-time highs. I would assume that CPI would distribute lower, honestly. Especially with the big news event like that. So we got to be engineering something today and tomorrow for that. So keep in mind you got that CPI. Now let's look at the 1 minute. Overall, low resistance liquidity at highs and low resistance liquidity at the lows. So therefore, I need to wait. I'm predicting this now that the 4-hour BTC will turn into Reaper. Then all-time highs will be ran on ES. 4-hour Reaper, that 4-hour turn into Reaper, and then be ran. Honestly, don't know too much about the Reaper, but someone was talking about it when we were on stream. But it's pretty much. Is Reaper will that is it common for that to occur intraday, or is it more like higher time frame? Obviously, price is fractal, but like, does it happen much intraday? I don't know too much about it. I don't really use it as a PD array of choice. So you go to college? I do not go to college. I graduated last year. So I've been out of high school for a year. I haven't made shit for myself. Gotcha. Good choice. I mean, I guess we'll see. The reason why I didn't go to college is because, like, I didn't know exactly what I was going to study, and I didn't want to. I'd rather do something that I'd have more passion with. It's something that I would enjoy doing more, like this. And also, I don't want to work for someone else. I'd rather be disciplined myself and start my own business, create my own way and path of life, which is going to be hard and difficult, but I think it'll be worth it. So I guess we'll see. So that's why I'm working so hard. That's why I'll be doing these types of like 11 and a half hour streams every single day, 12-hour streams every single, mainly every weekday, and then I guess we'll see how weekends go. Sundays I definitely can't because Sundays I go to church, and then Sundays I usually hang out with my family and stuff. I'm in mad debt. About to graduate next year. Got 2 more semesters left of nursing school. Nice. So what? Are you gonna try to pursue trading? I wish I took trading seriously in high school and not finished the first year of college. I mean, it is the way it is. Looking back, like you can't make things be perfect. That's why I don't want to live with regrets. The fact that I didn't take this opportunity. The fact that I didn't take this opportunity seriously. Our ES is now kind of like barely is coming into this high, into this 15-minute imbalance. Yeah, this looks dry. We do have a volume imbalance here. I'm gonna note it. Yeah, we also have one there. Dang, we got volume imbalances everywhere. What model do you use? I trade MMXM. Or I try to trade it MMXM. MMXM. That's mainly what I look for. Is that a model? Or is that's pretty much the market though. But yeah, I take both seriously, knowing we can honestly call it quits with the trading money or have both a career and trading career. I would say, I mean, it does it like honestly, bro. Like, this is my opinion. Like, you can still swing trade. You can still there's ways to be engaged in the market without like having to be intraday. You know, MXM is life for real. Our market's right about to open. It's looking like we want to manipulate lower. I'm only looking at this order block. And I don't like this order block level. This isn't an order block on ES. So I would prefer to see manipulation lower. SMT is life. I don't know. Me personally, like, I'm not like anyone crazy. Like, I'm obviously working to become someone good. But I got too caught up in SMT. I got too caught up in SMT and turtle soup. I'm not gonna lie. And originally, a mentor I had, like Justin Whirling, I was in his Discord for a minute, and like it was cool, but like he mainly trades soups using SMTs, and like, bro, I think that just got me too caught up. That got me too caught up with trying to catch like tops and bottoms of moves, and like especially me, bro. I I don't have that like desensitization of like just trying to sell or buy in a discount or sell in a premium. Like that was scary to me. And I would say I need to see. Sorry, we came down into this order block right here. Now we have a fair value gap in, fair value gap out on the 1 minute into that 15-minute fair value gap. So I want to see what we do here. If we respect this and then continue to displace, I'm looking at this low and then possibly lower targets. Swing trader here, just be aware that you'll be thinking about. Yeah, that's true. I can't do. I mean, I guess I could. I have in the past. Like I've had like call options. But honestly, that was like kind of gambling, bro. So that I was thinking about it even more because I didn't have a solid bias. All right, we took buy side here. Okay, we have equal highs there on ES, so I'm not gonna say that's an SMT. We just take equal highs here. We're just taking equal highs. Overall, I just want to wait personally. I mean, there's no need to rush it. There's likely going to be better opportunity than this at market open. Kind of just let this play out because now it's looking like we do want to reprice higher. So we'll let this do what it wants to do, and regardless of what happens, we're cool because waiting for it later. And this down close candle with that volume imbalance there on the 3-minute. Also that tiny fair value gap there. And we have low resistance liquidity that rests above market price. And we're also generating low resistance liquidity here. So I want to see one of these two get taken first. And it's looking like buy side's going to get taken now. Look at 830 price, 830 opening price on ES. Look, he acted as support. I don't have my indicator on NQ. All right, we just purged buy side here. Okay, buy side. So now I'm looking for sell side objectives. If we just keep on displacing higher, bro, I simply just won't even try to look for this. But notice ES is still within this range here. And ES has equal lows here. Drawing out the fair value gap with the order block. Which on ES or NQ? Guessing NQ. Oh, I mean, I don't really care to get active within this. Me personally. I don't care for this because we have low resistance liquidity at the highs, low resistance liquidity at the lows. I mean, yeah, we have barely purchased, so it's probably more likely that we are to head to buy side, but I don't really care in catching this trade, personally. Like only a 30-point move as well. I just don't think it's worth it. ES just took buy side, and NQ is getting comfortable above this fair value gap. NQ is actually displaced above it, so we'll see it. We'll see if ES wants to get comfortable above this. If we start creating fair value gaps above this, that signifies we probably want higher prices. But let's see. I need to open my tape read journal. I want to see the insight this 50% gives us. Overall, I'm waiting for at least. I want to see what's gonna happen. I mean, regardless, I don't think this is a trading morning. It's just something to study, but I'm definitely looking towards new day opening gap. I definitely want to see that get drawn into. Well, if we just keep on seeing higher prices, I think that's cool. What's good, What's good, Joseph? Good morning, brother. It's like afternoon for me. It feels like it, bro. We've been streaming for quite some time. It's already been 7 hours. Jeez. All right, yeah. I think lower prices are valid. I don't know. I'm waiting for 950. 100%. All right, we have created a bearish fair value gap. Still dropping down into that volume imbalance though. I'm submitting to the fact that we want to take low resistance liquidity. And I don't think we're just stopping there. If we are. Yes, it's within a gap here. We now have a balanced price range, so I wouldn't expect that constant encroachment to get traded to. Well, let's see how this candle closes. Has about 30 seconds. I just think it's unlikely that we I want to see speed. But let's see. Let's just wait. Let's see. That could be what is in store. I don't want us to get comfortable here. This is a balanced price range. Ideally, I would want to see displacement. We have a wick here, and then this is. I don't think anything to trade for sure. We might want to come back up and take these highs on ES. Form a breaker. We haven't formed a breaker yet. This breaker would be here, but I'm anticipating the breaker to be here. And this to be a mitigation. Let's see how this 15-minute wick forms. If we do form one, which I'm guessing we probably will. I'll mark constant encroachment of that. Notice how on the 15-minute we're still holding that fair value gap with the volume imbalance that I had marked out. Yep. Dollar could be playing out to script. DXY could be playing out to script here. What is that level? Dollar's falling script. Yeah, I like this. I like this. I think this is likely. We'll see these sell side objectives here. One minute 60 is what. Yep. I would submit to this honestly, but it's Powell speaking. Who knows? It's not like there's any strong bias here. It's just consolidation on the higher time frame right now. We're at all-time highs. There's not really much that you can really justify out of this. Like, we're not even within a higher time frame market maker model. We've just consolidated, accumulated, now we've manipulated. Now we're looking for possible distribution here. We're now back up within this last up close candle here, so I would expect this to probably hold, but we'll see if we want to. ES looks like we might want to form SMT, possibly. ES doesn't have a solid level that it really wants to displace lower from. Therefore, we could create SMT, but I do like this on ES, on NQ. Screenshot that, add that to the journal. Oh, look at GU. Wow. That was like already manipulated and it is displacing. In a new day opening gap here. Bro, why is it not save my Dang, I'm messing with my indicator more than reading price. Like, what happened to my original new day opening gap that was like yellow? I know I had it on the chart. We could be farming SMT. I guess, well, likely scenario. 950 macro just opened. See if we see distribution off the propulsion. Like a constant recursion of mean threshold of that propulsion. ES looks lackluster right now. Yeah, that hourly candle looks bearish. In my opinion. The big man speaks in 7 minutes. Alright, mean threshold just got disrespected. We're like gonna take. We might take highs again. I still want ES to come up and take this high here. Form SMT. We could reclaim this order block. I've done that before. I don't know. I've always fumbled. I've always done it the opposite way though. Like whenever I used to trade options, I would like. I swear I used to like try to be in a call and then I'd be in a put, and I actually would have made money. That's funny. W's. I don't like anything. I guess we'll just see what happens. We did have an immediate rebalance on the 15-minute, so I kind of want to see 1050 macro. Uh, this kind of is an order block because it did take this low here. Powell stepping the stage. I don't know. This just seems suspect. I don't. Bodies are disrespecting mean threshold. Very, very like Powell speaking, bro. And then I feel like it's gonna be like the same thing yesterday. It's gonna be a clean 1050 macro. Low key, DXY respects New Day opening. Oh, that's the current New Day opening gap as well. That's why I don't like using dollar too much in my analysis, because dollar is displacing higher. Yes and NQ are maybe DXY and YM are more correlated, which I think is honestly the thing. Well, YM's in a deep premium right now, so that would probably lift the way for higher prices. We'll let the incitement fade from Powell. This kind of looks like DXY a little bit. That reminds me of this like sector price action. So I think we're gonna run it back up to new highs just because of that. Let's see if this possible SMT holds. So if this order block breaks, consolidation. All right, smart money intention is lower prices. Nine thirties create high resistance. Now just I'm submitting to lower prices. Let's see how long we spend in this dealing range if we do. Equilibrium of that dealing range just got hit. I think lower prices are more likely. We now have an intermediate term high. SysD, a bullish SysD, or which one are you looking at? Because we now have had a bullish SysD. I'm waiting for 1050 macro now. Now we have a balanced price range. Now we have an inversion. I expect that to hold, honestly. But I've also said that about everything on this chart. That has not held. So I'm just looking at this dealing range here. For sure. No, there's nothing that's here, honestly. It's just Powell consolidation. Look at price after that balanced price range was formed. We did drop down in that 5-minute order block. Buy side liquidated. We've just taken a previous dealing range, and we still have SMT though. I don't have the 15-second chart. I honestly don't think the 15-second chart is necessary. That's too scalpy for me personally. I think that 15-second chart will just get you caught up. I mean, even the 1-minute chart can get me caught up with the higher time frame bias. They're waiting to do things. They don't, because of Powell speaking, and we have CPI Thursday. That's what I think. It's cool. Sometimes you won't get filled. Don't worry. Tomorrow there's gonna be opportunity, and probably better opportunity than this. I think we'll consolidate. Big range right here. Consolidation. I'm gonna type out my notes until there's something like till that 1050 macro. That was a good lecture. The previous lecture was nice. Notes. Well, I did not interpret it like the first time I watched that. I did not interpret any of the technicals. I didn't get any of that. Hold up, Loki. I need to switch this, bro. My neck is hurting. The 8:30 order block. Yeah, it did. Right as I close my chart, we start. We now take in buy side liquidity. We have SMT. I'm kind of bearish here, but we have just consolidated here. I would take it buy side. If you have just taken this dealing range high, this could be a high probability soup with SMT. Look at right where we closed that candle, though. Is that a coincidence? I don't know. claiming that inversion, reclaiming that order block, or we're claiming that order block. We never reclaimed it. Overall, I think this is like a low probability trading day. A low probability. Like I don't know what this wants to do. This is outside of what I usually like to trade. I usually like to see 8:30 or 9:30 create something, and this is not what has happened at all. 8:30 or 9:30 has not created anything. Therefore, we could look for PM session, possibly do something. I think PM will be a little bit better, but I probably won't be live to look at PM. Actually, I'll definitely wait. This candle just closed like through all those candles, and notice we really end up displacing at that last candle of the 5-minute. Alright, let's see if we engage sell side like anticipated in this new day opening gap. I think the probabilities are shifted higher to the PM session today, just to be able to see what happened. Let's see if our draws get met. Or when our draws get met, let's see what happens. I'm definitely looking for that new day opening gap. Here we have mitigation offered. The 5 minute candle is closed. Definitely look for a new day opening gap. Low hanging fruit. I don't think we reverse here. I do like this sell side objective though for today. I think that this sell side objective is probable, was likely. Five-minute buy side taken with SMT here. We reprice to a certain level. I mean, even though I don't think this is the ultimate low. It looks like we could actually be respecting that. Dang, that's still 40 points. Wow. Oh, and we have SMT here. Okay, we got about 14 minutes till the 9:50 macro. Or 10:50, not 9:50. We have a nice original consolidation here. We could be coming up to mitigate this fair value gap. Which is likely what's happening. Yeah, I think we're heading to these highs. Here, we'll pull up this Twitter space. I was actually listening to it right now.
You never handled an AR-15. Never broke it down, never cleaned it, never did any of that stuff. Well, until you do it, you don't know, right? I'm trying to be funny, obviously, because I'm not a pilot. But I couldn't do that.
I honestly, I know I'd flip out. There's no way. First of all, I could not have the focus. You wouldn't want me. You wouldn't want Ratchet ICT flying your ass anywhere in an airplane, because we're probably going to get down real fast, and not the down you want to get down with. So, so then imagine, class, are you seeing a reason to invest your time in whatever it is that you're looking at, or in this case, listening to? Because if it is not capturing you, overtaking you, and subduing you, and holding you and your attention, because you see obvious signs of professionalism, precision, logic that makes perfect sense, that is explained before it happens, not ambiguous, not 50-50, not it might do this, it might do that, which is what everybody that doesn't like me will say. But they're leaving out the parts where I say, but this is what I want to have.
Look at ES, we swept liquidity here.
This is my setup.
5-minute imbalance, reprice
If I'm
2.
wrong, this is what it's going to do.
While
I won't be in the trade. I won't be
tracing the
hurt
new
by
week,
it,
new day opening gap with SMT, with these
That's what
highs
you wanna
left
learn
here,
from. A
with
person
a
that can
consolidation
obviously
profile.
outline what makes this work? How will you fail? How can I do certain steps to avoid failing? Avoiding entirely is impossible. But much like when you're in flight school and you're trying to learn how to fly, what's one of the things they put you through as a pilot? You ever think about that? They take you up there and they tell you to turn the fucking engine off while you're in the fucking air. Like, what? Are you kidding me? But hey, they got to teach you how to do what? A controlled landing. You might take off. It might be beautiful. You're up there in the sky. You're sailing around, looking down, thinking this is great. And then your instructor says, oh, by the way, today's the day where we tell you to turn the fucking engine off. Figure it out. And I'm sure that there's a great deal of anxiety when it happens. I'm sure that, everyone that thinks that they're going to be ready for that moment, because everyone that goes into flight school knows that that's coming. And maybe they don't have it unannounced. I'm trying to, be funny, obviously, because I'm not a pilot. But I couldn't do that. I honestly, I know I'd flip out. There's no way. First of all, I could not have the focus. You wouldn't want me. You wouldn't want Ratchet ICT flying your ass anywhere in an airplane, because we're probably going to get down real fast, and not the down you want to get down with. So, so then imagine that same thing occurring in trading. That's what's happening when you get out there with live funds, live money, listening to people that tell you to get out there and trade sooner than you should, when they themselves can't prove that they're doing it right either. And you can't build your faith in anyone based on, here's a trade I took. Here's a trade I took. Approach to selling something is the worst possible thing in the world. But unfortunately, in this industry, looking through the looking glass, you're going to look for what you want to see, especially if you're really new. And what I try to do is be, number one, responsible as a mentor. I'm not trying to take anyone down the primrose lane. And if I was a fucking fraud and a failure at doing this, you would have seen it by now. You absolutely would have seen it by now. My calls would have been failing miserably. They would not be going exactly where I said it was going to go, when I said it was going to go there. So I'm a little bit different. I'm cut from a different cloth to everybody else. And that's fine. That's exactly how I want it to be. I'm not going to teach everything, because that makes me who I am. I'm not obligated to do that. But I can teach the rest of my life, and that's fine. That's great. I'm keeping my promise. But I didn't accept this
All right,
responsibility.
back to the middle of the range at a random level.
Teach everything I know, because I can't. But what I've already taught, if I stopped right now, you are light years ahead of every fucking Mickey Mouse bullshit that's out there. You literally have an unbelievable arsenal. But much like when you first handled a firearm. Oh, here we are. We're talking about a topic. I don't like that. Look past it, okay? You never handled an AR-15. Never broke it down, never cleaned it, never did any of that stuff. Well, until you do it, you don't know, right? And that's what this is like. You have to be conditioned. You have to be trained. And then after a while, it becomes second nature. You just know. You know. And maybe some of you are going to have to take a little bit more time than just this year. And guess what? That's absolutely acceptable. It's acceptable. And you have to give yourself permission, because if you wrestle with that or fearful, what if I don't learn? Because I've told you there's a deadline to me doing this everyday live streaming stuff. Obviously, you've seen this week. It wasn't every day, was it? I told you to prepare yourself, because there's sometimes my personal life may take precedence. Remember, I'm not obligated to do this. But you're going to find that if you're pressing yourself into a time delivery of you being successful, when you do that, and when you do this with everything that you try to rush through, like weight loss or gaining muscle or trying to get flexible, whatever it is, you can't force a timeline, deadline. This is when it's going to have to be. You don't know. You don't know when you're going to hit that weight goal. You don't know when you're going to get that bench press goal. You don't know when you're going to get that threshold of crossing over in your experience where you know you can trade live funds. None of you can time that. None of you can do that. None of you. Why? Because you have no idea what the variable rate of understanding is going to be for you.
I want you to stop
It's
on.
all unique to you. You can't say learn it in 40 days, learn it in 120 days, learn it in 6 months,
Maybe
1 week
this
workshop.
though. Let's see though.
That's nonsense. That's absolute nonsense. You can't do those things and expect the outcome to be universally the same. Absolutely not. And it's not even going to be in the majority. That's why these people that market that kind of stuff, they fail. That's why they're failing. And they don't like what they're seeing with me because they see me teaching with a demo. They see people going out, what I'm teaching with a demo, they're going out there and making 6 figures with real money and being interviewed by companies that paid them that money. That's hurting their ass. Their assholes are chapped. And I love that. There's nothing you can do about that. You can't argue it. You can't wrestle with it. I mean, I guess you can wrestle with it, but you're going to lose. And all of you that are paying attention and looking around, you're seeing folks do that. And I have an inbox full of shit like that now. And you're all going to see their faces. And I'm going to do my best to have a outline. The same questions I'm going to ask. I'm going to let each person know what they are, so that way they're not put on the spot. They can talk freely. They have already collected their thoughts about how I'm going to, because I don't want to be longer than an hour. That way, I'm going to ask the questions, and I'm going to sit there and let them talk. I don't need to be heard. I want them to tell me what they've done, what their routine is, how did they get started, what was their biggest fear that they overcame, where's their goals, and what's their plan on getting there. These are the types of questions I'm going to ask. And everybody's going to have shit different. And that's going to be interesting. I know it's going to, for me, it's going to be, I don't give a shit if anybody else likes it. I'm giving these students the opportunity for me to sit down with them as close as face-to-face can be. Yes, I will show my face there. And you'll see I have more than one white cap. I have other colors too, guys. I might shave my head because everybody wants to see me bald. In summertime, I might do it. I ain't afraid of it. So the good grief. You'll hear these folks give you their stories and share, and I'm going to treasure that. Like, that's exactly what I want this to morph into. I'm doing this because I want all of you to be generous with your story with me. Tell me, what it is that you're doing. If you want notoriety, apparently I have an audience that looks at this stuff, and I'm going to share if you want me to. Not that I'm going to do it, without your blessing, but if you want your socials shared, I'm going to give you the opportunity to do that. So it gives you a stage. Like there's a young man out there, Paladin. He's trying to get a course together how to beat these funded accounts and have all that stuff. He might be teaching some of the stuff that he uses while he's doing it, that he's learned from me. I don't give a fuck. Okay, I don't care, because number one, he's publicly stated that I had a small part of what he was able to do, and that's wonderful because now they know me, and then when they hear me, they talk about how did you learn, and I gave all the glory to God. That's how I want it. That's the exchange rate here. Okay, that's all I want. But he's trying to build a course or whatever, or some kind of mentorship to get funded and pass them. You know what? Go for it. That's something I'd get behind and say, you know what? Do it. And some of you may be wanting to run signal services. And guess what? I have a lot of students that can't do this. When's the last time you heard any educator, any guru, tell you they got failed students? Everybody makes money with their bullshit, right? Get the fuck out of here. It's real. I don't lie. The bottom line is this stuff is complex. This skill set isn't going to happen overnight. And a lot of people came to me like they go to anybody else. Give me the 1, 2, 3 fast track. I need to learn how to make money right now. I'm broke. And if you can't do it, you're a fraud. Fuck you. How's that work for you? Bottom line is this. You're going to work your ass off in this industry no matter what you do. Period. And time is going to be a whole lot more spent than you wanted to spend. It's going to take you longer. It's going to be more effort on your part. You want to learn how to trade? I've already taught you. You want a routine on how to go in and do those things? That's exactly what I'm teaching you this year. A day in and day out, this is what we're looking for. This is what it looks like. This is how it repeats. And we aren't afraid of signals drying up and not working anymore. I know that I'm going to have a setup. And this is what pisses people off that don't like me. I always have something. I always have an ace up my sleeve. You're damn right I do. because that was a weakness. I needed to know I had more weapons than just a stochastic and a moving average, because that shit didn't hold up long. And the
Right
markets
around
are more
equilibrium of
dynamic than
this
just
one
way.
dealing range.
You have to have a tool that
Off of a
is
random level
useful
here.
for any market profile. It doesn't mean that you're going
We
to
now have
trade
a
every
balanced
single time
price
because you
range,
have that
so
tool.
we
It
now
just
have a
means that
5-minute
you know
order
enough
block
that
level
the thing you're
that would
probably
actually
gonna
be
use if
looking
you were
for.
less equipped,
I expect to
experienced,
see new
you would
highs
try to
here.
use in an
I
environment
don't
which
really
what most
expect
of my
to see
students when they
much
first come to
lower.
my YouTube channel, they think
Exactly what I
everything's a
want to
fucking
see
optimal trade
here.
entry.
So I want
They
to
think
see
every
more
rally up
accumulation within this order block
is
to
going to
then
set up a
come
sell,
to.
and every rally down is going to set up a long. And they send me emails. They'll say things in the comment section. You know, I tried the optimal trade entry, and I get stopped out. How do you know which one's the optimal trade entry? Well, what are you doing wrong? Looking through the looking glass, you're looking for entries only. You have no context as to what you're doing. There's no narrative being applied to the chart.
All right, now
You
we're
haven't even
within that
consulted the
5-minute
higher
order
time frame.
block.
So is it surprising why you're looking at something on the smallest degree of importance, which is the entry? I've stated this so many times, and it's almost like you guys
Could
don't
possibly
want
have
to
a
believe
stop
me when
right
I'm being
here.
honest. Entry patterns are numerous. There's so many entry techniques to get you into the moves. But there's only one side of the narrative that's going to develop in price. That's it. You're not going to change that. The buying, selling, and pressure doesn't change it. The narrative is going to unfold, and that's just the way it is. And if you're not able to get on side with that, that means get in alignment, get in sync with it. Any entry techniques, I can give you the best ones I have, and it's going to fucking fail for you because you aren't looking at what? You're not looking at the underlying pinnings of the marketplace. What makes this market most likely to go higher, and where the hell is it going?
Bro,
Just because you think
how
it's
do I
going
get
up,
so many
where's it
Discord
going to? Because
notifications
if you don't
when
know
they?
that, you're going to overstay your welcome or exit far too soon. And if you look at what I'm teaching and how I teach it, I'm teaching you when to time the market, when to build a model that is bullish, when the bearish model is expected, when the market's going to be in consolidation and try not to be expanding with your, not expanding, but entering with your trades, expecting the market to expand out of that range because it's most likely to do what? Consolidate ahead of a big report. So you're not going to be guessing. You don't want to go into this guessing. If at the end of this year, you're feeling like you have no idea where you're at in price,
Oh, that makes
I promise
sense.
you this: you did not pay
Yeah,
attention.
expecting that to be a
You did
stop
not
on
take
here
notes.
within that
And
order
you did not
block.
backtest. And that's the bottom line. That is the absolute truth. And I know that there's going to be people that are going to be lazy as fuck this year. They're only going to watch the videos. They're only going to watch the live streams and try to get trades out of what I'm saying. And then they've learned nothing. And they'll be the same yahoos that were paying me money to learn how to do this. And I'm calling the market every single fucking day, every single month, and it's going where I said it's going to go. And I'm proving the concepts work. And here it is. It's going on and on and on. I got people that make money in that group, whether it be the 2016 group or the 2021, the last one. Every one of those groups, every one of those years, I have winning, profitable students. Every single one of those groups, I have students that have never made a dime with it. What's the common denominator? They have not done what I'm telling them to do. And they've done everything I told them not to do. The ones that end up making money, they're the ones that maybe they fucked off in the beginning, tried it their own way mentorship stuff, lost, learned from that, and then started doing what I said. Or they never fucked off and they followed my instructions and right from the beginning found their way into profitability. I'm sorry that it's harder than you thought it was going to be, but that doesn't make me a fucking fraud when I'm out here proving it every fucking day. Sorry. It must suck to be you.
1050
because you're
macro
literally
just
looking
opened
outside
too.
yourself for a reason to exist and live with yourself. Because if you think that this stuff doesn't work after seeing as much of the evidence of this on a day-by-day basis with such a degree of precision, you are the problem. Just like I was the problem when I first started. But you don't want to recognize that. Trading, this industry, is the looking glass. What do you see when you see through it? Do you see problems that you got to work on? Character flaws that you have to correct? Build coping mechanisms? Being bipolar, it's not a matter of what I eat, folks. Okay, I appreciate some of you that are sending me that shit, but it has nothing to do with it. It's all in my brain. Okay, I'm literally struggling to.
We
be
just repriced
sane
that
sometimes.
breaker.
It's very difficult, and I will not ever
Here we go.
take a drug that is going to make me not focus like I need to be focusing. I will live the rest of my life like this, wrestling with it, and it sucks. It does. It sucks. But I will never be medicated. I will not. So, you know, that's the.
I want to see price maybe reaccumulate within here.
But you're gonna see things through this industry.
Right at 75%. It's a fair value gap. It's
You're
also
gonna see
BPR.
arrogance when there isn't any justification for
Also
it.
at a mitigation
You're
right
going to see
above it.
modesty when they should be beating their chest. You're going to see folks fail miserably and deny that it was them, not the material, not the concepts that other people around the world are doing the same stuff with it. And well, not the same stuff, but they're using the same concepts and they're making real money, life-changing money. Some of you are new and you haven't had that experience yet. And I will have that interview with you as well. If you're willing to have it, no problem. I would love to continue that part into 2024 and beyond. I'd like to do like a one a week type thing. That way it allows me, number one, to live my life once we get through this. Because I don't want to be doing everyday interview because it takes time to be doing all that stuff. And I don't want to be held to a schedule. But I would love to be able to sit down with one each week, maybe like on a Friday. And it's an hour long in time. That's what my plan is. And just listen to someone that has gone through it. I would love to see people come in and say, yeah, I thought you were a fucking scammer. I thought you were a scammer and a fraudster. And then, I just figured, I'm going to take this guy's shit and challenge it and prove it wrong. And then now I'm making money, and this is the best decision I ever made. That's the interviews I'm waiting to have. Because I understand I have a lot of supporters, and you guys are making money, and that's wonderful. I really get off. I get my rocks off when I have someone converted. Like, I feel like I've really earned something there. I've gone through a lot of shit over the years and listened to a lot of shit. And willfully put myself in a situation where I'm going to catch a lot of shit because I'm literally out here demo balling, and I've done it for years.
Yes, that's taken by side.
You can't say anything that's going to hurt me because I have the goods. I can prove it, and I'm going to do it in your face with a demo account, and you can't find profitability in any of the shit you're doing.
Actually,
So
left equal highs.
it's been fun for me to do that. And the people that have looked at what I do and look past the things I told you to look past that, if it's real, you'll see it. If it resonates with you, run with it. And if you have the passion to stick with it, you will be profitable. You will fucking make fucking money here. And that's just the way it is. But you have to be here every day learning what it is that you have to discover is going to be the reasons why you're going to derail. Because you will, and how you react, and how you think about yourself, your trading, and this industry. Once you experience loss, one of the best things that could ever happen is for you to experience losing an account. What do you say? Yep. That's the worst thing in your mind that could ever happen right now as a student, right? That's the worst thing. How could anybody say that's the best thing? Because you'll know what it feels like to have one moment where you didn't even see it coming.
This low,
and then boom.
Let's see if we were possibly just
You don't have
wanting to
anything
reclaim this 1 minute order block
At
here,
least not enough to take another trade.
or if this was
I think every
the
trader needs to experience that.
smart money reversal right there. If we
Because
broke
then you'll
down,
respect
this
the
will
risk.
just return to 50% of
What
this.
happens if you do blow an account, but you don't respect the risk and you go out there and you just do the same thing with the second one? Here's what you're not observing. What you're seeing in that, but ignoring, is that you are impulsive and a gambler. And that means you have to do some work. You have to correct that. And it's not easy because you are the person that's driving that. And you're doing it recklessly because you need an outside of you confirmation. That's why you're doing it. You're trying to do something Olympic sized, over leveraging an account, trying to get some kind of big win so that way you can feel
this
like
is my
you
last line
are
of defense here.
formidable. You can make a lot of money. Look at this. This makes you a good trader. No, it doesn't. It does not make you a good trader. It makes you an impulsive gambler. And guess what? Sometimes impulsive gamblers go to casinos and make a lot of money. But impulsive gamblers don't go to casinos every day or every week or every month of the year and make lots of money. Professional gamblers are not impulsive gamblers. They're calculated money managers, and they're utilizing the cards as what? Their multiplier. They don't know what the next turn on that card is going to be. They don't know what hand's going to be given to them. They don't know. And they embrace that uncertainty, which is the equivalent of us doing what in trading? We don't know what that next candle is going to do. They could drop a bomb somewhere, and boom, the market gaps completely outside what your chart's showing, especially some of you, what I was talking about today in the lecture this morning. You're so zoomed in, and you have just a handful of candlesticks. Like, it's only going to move 10 handles at most. Like, you have to have some data on your chart. That's the reason why you're not holding your trades as long, because you have no visibility. You're too close to the forest, or too close to the trees to see the forest. You have your nose on one tree, and the only thing you can see is that bark on that one tree. That's exactly what every YouTuber is doing. There isn't one YouTuber out there that I've seen that has enough data on their chart to make balanced decisions. You're looking at it too close. And when you do get a winner, I'm in your audience sometimes, and I'm thinking to myself, what are you talking about? You're going to close it. What the fuck are you doing? But it's your trade, and it would be rude of me It would be rude of me to overtake and say this is what's going to happen. But I have sometimes tossed out numbers that said like here, like a gentle nudge, like here, look there, and then don't take your profits in the next 5 handles. And I don't want to override someone when they're in a live stream because it's rude, and that's already bad enough when I show up and I try to help someone with their with their audience and help build them up and tell them, I'm in your audience right now, I'm watching what you're doing. And then invariably the folks that know that I'm there, or if I invite all of you, hey, ICT's in the house. What the that's not, I don't want you doing that. And it's rude. It would piss me off. It would drive me fucking crazy. Like seriously? Like I understand if somebody showed up in a live setting and they're a celebrity, but I'm not a fucking celebrity. I'm literally nobody. And giving you my attention, or giving me your attention in somebody else's live streaming chat box is rude. That's fucking rude. Don't do that. But these same YouTubers who I sometimes adore because they are doing something that takes a lot of balls to do it, and seeing them discover themselves in the presence of other people, man, that takes a lot of courage, And Patrick, if you're listening, my advice, and you can take this with a grain of salt, but I guarantee you, if you don't engage the chat and you just do you, let them say whatever the fuck they're going to say. Who cares? The chat window, whoever's talking in the chat window, they're not really fucking worried about price. They're just hanging out. They want to be a part of the clique. That's what that all is. And they're not going to learn anything anyway. So just let them have fun in there. Who cares? But if you're there doing what you're doing,
Wow.
I mean, you can find trades. I mean, we can see you doing it, man. Just focus on what it is you're doing and fuck the bullshit. Don't let them distract you. That's why I will never do that. I can't have a window where people can talk because I'm going to look at the cars going by and I'm going to chase the right one. That's what they want. They want me distracted. I'm never going to give that to them. I'm not going to do that. And you're easily taken out of gear, bro. And when you lock it down, the best thing you could do is just turn that shit off. Not for the members. Let them go there and talk. That's fine. But you don't look at it. Just have a one-way conversation, man. People are there to listen to you. That's why they're coming. When I show up and I'm in your stream, I'm there to watch you. I'm there, I'm watching you, I'm watching your mannerisms, I'm reading your face, I'm reading your eyes, I'm watching how you talk, I'm watching you fidget around in your chair, I'm watching you shift around, I'm watching you get frustrated when it ain't working, I'm listening to how you talk to yourself. I'm watching all that stuff. To me, it's a social experiment. I'm watching you find yourself, and I'm also watching you wrestle yourself. And this is exactly what I talk about all the time, which is the reason why I invite everybody to go to you, because if you wrestle all these things that you're competing with inside you, and I hope you're not being offended by what I'm saying here, because I'm saying everything with love, bro. I'm not trying to judge you. Nothing I'm saying here should be viewed as negative. Like, I'm telling you that what you're doing is very courageous, and I'm hoping that you will be successful more than you already are. And I'm hoping that you just consider what I'm saying.
I think buy side's more favorable now.
It might not work for you, and that's fine. I'm not trying to take credit for anything that you do in the future. All I'm trying to do is be a help. That's all. But what you go through and the things that you're experiencing, and then you say, oh, fuck this fucking trade, that's negative self-talk. And that negative self-talk has such an impact, such a huge impact on what you're going to do. And you're doing it, you're doing it in a setting that's absolutely incredible in terms of difficulty, which takes huge fucking balls. Like, to do that, number one, in front of anybody, in a live audience setting, takes a lot of courage. And if you're trying to discover what it is that you're going to be excelling in as a trader while doing that and allowing other people to give you feedback, and sometimes what's going to happen, assholes are going to show up because they suck. They literally can't do it themselves, and they want to make themselves feel good if they can wreck your mindset. So deny them that and still do what you're doing. If you're distracted with what other people are saying, like, why don't you try to trade like this, and why don't you, fuck that opinion or question. Who gives a shit? You know what you want to do when you see it in the chart, like anybody else. Doesn't mean it's right, doesn't mean it's wrong. That's the thing you're looking for. You're waiting for that thing. And if you let other people get inside your head and take your mind off of what it is you're looking for, whether it be a student of mine or whether it be someone that's pretending to be a student of mine by talking shit about me, which I think is really what's going on. I think there's people out there, and you know who I'm talking about. They're trying to make our community look like a bunch of assholes by going into other live streamers and shit. And that's why I'm not going to invite anybody anymore, because that's what's been going on. But failing what YouTubers I'm listening to. Patrick, I'm in yours. Trades by Matt, I'm in yours. And the other YouTubers are just uploads. And the other ones, I'm not going to tell you who they are because I use their chat windows for sentiment. And I don't want them to think I'm being an asshole because that's not what it is. I have nothing against the YouTubers themselves, but they have a rich chat window that is a wonderful sentiment indicator. So I've said that before. But Patrick posted a comment about how, and he's also said it several times in his live streams. I'm talking about Patrick Whelan. Um, he does a live stream every morning on YouTube and trades the morning session and such. And I think he's a cool character. He's funny a lot of times. Um, and I'm very interested in seeing how he finds himself in all this, but still hopefully maintains that character because it's edgy. It is going to work really, really well if he knows what he's doing and he's consistent with it. There's a lot of emotion, and which is normal. Like he's a roller coaster of emotions, which many times I think is why people go to watch him. And when he makes it and kills it, he's doing his normal everyday man flex where he gets the touchdown, he does his dance, and he's cheerleading himself, whatever. That question he posed several times about how he needs to find a way to hold on to these trades a little bit longer, and then now when he tries to do that, he gets burned because he has winning trades and turns back on him. And I think he's dabbling with the idea of doing partials, which, Patrick, that is the absolute best fucking thing in the world because they always make money. Partials always profit.
I don't think
every
this is gonna
single
hold
fucking
anymore.
time. There's never been a partial profit
We just
that
have that
didn't
order
make money.
block.
That's an absolute 100% win every single time. It has a 100% win rate. You can't beat it. It is what it is. The problem is once you taste $4,000, $5,000 winning days, the impulse is to keep chasing that, like that first high. When you see these folks in the back when I was younger, you would see these folks on cocaine. And that first time they took cocaine, like they want to chase that high, they never get it again. They never can get that same one again, but they constantly keep going back to it, wanting to get that same high. I don't have personal experience in that shit, but in the 80s, that was the drug of choice. And we saw a lot of it. And it was in the movies, it was in culture, it was, that was the fashion drug at the time. Well, when you're trading and you get that high of a big win, that's a high that you want to get back almost limitlessly. Like you want, as soon as you got out of the trade, you're thinking, man, that was great. Let me go again. Like there's something in the chart that's going to give you that same 15 handle run again. It's done. Like you got to stop. So a lot of the things that I hear him talk about, whether he realizes it, is some of the things I've been talking about in my lectures. I'm using him as like a model to help coach. While I'm not actively saying I'm teaching him, I'm using the things that he's making public as a point of concern for himself or personal goals, or he's reflecting on what he feels he's done incorrectly and wishes he had a way to overcome it. I'm using that model of him and what he's focusing on or contending with. I'm using that in my lectures. So while I'm not drawing special attention, obviously now, but I'm not trying to say, look, I'm your mentor. That's not what it is. I'm just trying to be a help. That's all.
We'll see sell side.
And hopefully,
most likely,
by this real world person trying to do this, if you can learn from the advice I'm giving and say he doesn't take this in consideration and doesn't do anything with it, or tries it and says it didn't work for me, okay, that's fine. Somebody else that's listening to everything I'm doing might warm up to the idea and it fits them perfectly. It may
overall just a slow probability day in my opinion.
They figured out that thing that was a hindrance.
Not really anything
the thing that was
too much worry, too much concern.
Once they remove it,
like this day,
I
don't really care too much about.
They can get right to where they're going. No reason to feel like they're being impeded on and slowed down.
That's just
me
personally. They won't
have that fear of holding on to a trade. They won't have a fear of being stopped out because they know what they're looking for is going to repeat over and over and over again. And it's one thing to have a model that you think is good when you first start finding profitability. That might be a profitable model, but what tends to happen is you try to demand more than what the model can provide. And that's the reason why I have to have different setups. I'm not comfortable accepting a one trick, one pony type thing. I can't. My mind won't let that.
This
happen.
Is like really the ultimate last
about price and how it delivers.
line of defense.
I know there's a plethora of things that I can utilize to get into other setups, and I try to showcase that. And unfortunately, what that has done is
we just went right back to the middle of that
everyone
range,
else to do all those things too, and you're equating that is the only way of determining success with me. or you're not a real ICT
Off a new
student
day opening gap.
unless
Back
you
to
can do
equilibrium.
everything that I've ever taught about, and that's not true. All you need to be able to do is find one setup, and I've done my best, and I don't know how to do it any better than stripping it down to simply 5 handles. And I talked about in a Twitter space last week how that might not be.
Hey, thanks for the sub, bro. Dump
Sounds
already.
like I just got shot, to be honest with you. Hang on 1 second. I'm in live.
Yes, left equal highs.
Highlander.
I
Down in
really don't think this is high
This is
probability.
Somebody just shot out 3 shots. There you go. Live
But
on
by
the scene,
looking at
KYDC
this,
recording.
we've come up to
I don't see
now
nothing.
75% of
Long as they
that
ain't shooting me,
candle.
I'm good.
Where the bodies are respecting the
nothing.
threshold.
So
Let's see if price wants to displace to
you
this.
might go after those 5 handles. And like I'm teaching my son Cameron, and what I've mentioned also in the Twitter space is that what happens if you're trying to start off as a 5 handle trader, and you're going to find that can be found a lot intraday. Lots of opportunities of that occurring, and you can be bias neutral, meaning you don't have to have the bias correct. So for the folks that are struggling with bias right now, I'm giving you a way to study and look for setups, and it's such a small range of movement and price. 5 handles is nothing, like it's literally nothing. But for you, it may not have probably seemed like worth it at all, because you hear other people saying, "Oh, 5 handles, you got a little dick." No. 5 handles can change your entire life if you know how to find them consistently. High frequency algorithms are taking many times huge numbers of trades just to get less than 1 handle move. So who's fucking laughing? Okay, the clowns that have an ego problem and have a superior.
I'm gonna finish these notes.
And they have a small audience. That's the ones that are bitching and making up bullshit. So you shouldn't listen to those people anyway. But what happens if you're aiming for those 5 handles, but you don't have the confidence yet because you're new, and that's understandable, but you take it off when you get 3 handles, and you do that for months until you find that level of comfort doing it, because some of it is going to be requiring you to do things longer than you think it's going to take right now. And when I just said that, several months, and some of the trolls are snickering and laughing. He said do 3 handles for months, because this is hard for some people. It's scary. Like I had to overcome a lot just to get into trades.
So we did come back
In
up into
1992,
this
like,
up
it was
close candle
scary
here
after my
and
first trade,
into this bounce
which I
price
also
range
just jumped
here.
in because I had to just do something. I felt like I had to do it. And if I could be honest for a second, it was much like when.
So now if we
doesn't
take
make
this
sense. I think I've
low,
talked about this
I
before.
still think this could be a
My son,
possibility.
Caleb said that he understands this perfectly, but it might be a byproduct of us having the same DNA too. But have you ever drove your car? And I promise we'll come back to the 3 handle and 5 handle. I promise we're going to go right back to that. But when we have episodes where you're driving, okay, just say I've experienced that, or if you never experienced it but you think it's fucking weird and funny, respond on Twitter too. That way I know everybody's awake still. But you ever drive your car on a bridge and start questioning yourself, what happens if I just jerk the wheel to the right really hard and just go off of it? Like, and did you ever feel that and begin to fear your body just doing it out of just like it's going to do it and you had no say in it, and fearing that your arm's just going to do it like a knee-jerk reaction, like a reflex? It sounds crazy to some people, but I promise you, in this audience, I guarantee you, some of you have experienced that, and you're thinking, man, I hope I don't drive off this bridge. You don't do it, but sometimes you start questioning, like, what happens if that happened? That would be embarrassing. No, you're going to fucking prison. Not prison, but you're going to the grave. And if you turn into a crowd of people, or do something like that into another car, you're going to injure somebody, then you're going to go to jail, right? Or die in the process. That moment when I got into my first trade in 1992, and I did that orange juice option, it was almost like that same feeling. Like, it felt like it was an overwhelming, I have to do something, and almost like I didn't have any control over it. Like, I literally was pushed subconsciously to make a dumb decision. And I know, looking backwards at that moment, how it was one of the most reckless and just careless decisions I've ever done with money. And obviously the outcome showed me that that was careless. I lost 50% of what I put up in the option, which was a lot of money to me back then. And I just closed the account immediately after that. I said, okay, I'm going to send me my money. I wasn't ready. I was scared that I was going to do something like that again and lose the rest of it, right? So you might have those impulses where you're fearful of what you might do to yourself in trading. which is what I had, and I had to be conditioned to go in looking at the market from a different approach than just one entry technique. It feels too, in my opinion, because I wrestle with all this bullshit and obsessive compulsive disorder, it feels too myopic for me to know only one way of getting into a marketplace. In my opinion of a highly efficient trader, they should have more than one way to get in. And I felt if I didn't have that, I was not properly equipped to trade. So I wanted to have a repertoire of things. Because in my mindset was, I'll have a tool for whatever the fuck they bring to me. Whatever that market's going to do today, I will have a trade. Now, I can do that today, but admittedly, that was a dumb decision, which caused me to make a lot of tweaks and mess with stuff and blow accounts trying to make things happen when I didn't have any proof behind what it was I was trying to force as a trader when I first started. And for some, if you listen to me as a benchmark of 5 handles, you're starting from ground zero. So 5 handles is a huge win. If you just get that one time a week and you stop and you don't lose it, that's a good thing. That's good, especially if you're doing it with one mini contract. You're doing $1,250 a week. Well, that's not entirely true, is it? If you're doing it multiple times each week, you can build it up to that, 25 handles. But if you do it every single day, do that, you're going to get it that way. But if you just, right now, for instance, the folks that are in Africa, you are challenged financially right now. And in Nigeria, there's a whole lot of shit going on. If you made $250 a week, just a week, that's life-changing over there. And some of you have done the math on that, thinking, man, I'm going to live a whole different lifestyle once this starts happening for me. But in the United States here, unfortunately, and this is not to talk down to anybody else in another country, but $250 doesn't even pay my fucking cable bill per month. So here, we have a lot of expenses, and we live lives that are really bloated with things that are just overpriced. And I'm not exempt to that. But these 5 handles can make a major dent, even with what I spend a month. I already told you, $1,500, $1,300, $1,200 of groceries. And I have not my full family. My 3 older children, they have their own places. They're outside my house. And I still have to pay a lot of money. In my opinion, that's a lot of money for groceries. So I know that all of you that aren't making a lot of money right now, and you're making whatever your job pays, and you have your families, you have your bills, your ends to meet, and you have all this stuff going on around us that's causing shit to get really expensive. Like really expensive. The car I just bought, my son, Cameron, Nissan Sentra, $28,000. That car should never sell for $28,000. They wanted $29,800. That was the lowest we were going to go. And I said, I will never buy another car from this lot again unless I get it for $28,000. So naturally, they sold it for $20,000. So I know it's hard for everybody else because it irks me to see what they're making people pay for it now. And going to the grocery store and seeing how much shit costs, it's nuts. So now bring that into the equation, trolls, and folks that are trying to learn how to do this. They've never done it before. You have to have a goal to reach that's realistic, that it's rewarding if you hit it. And now I give you what? You aim for the 5, but to give yourself confidence, as soon as you get 3, close it and watch and see how many times it goes to the 5. That's what I had to do to build my confidence to get into trades. I conditioned myself that way. Cameron's in the process of going through that. He's going to go through that same process of you're looking for 5. As soon as you get 3, you're going to close it and then watch it. Does it deliver the 5? How long does it take? How much drawdown did you experience from the point where you took off the 3 contracts? I'm sorry, the 3 handles in that one contract move. How much time did it take in drawdown before it went to the 5, or did it ever go there? Those things you keep a running log of. And you're going to be doing these multiple times intraday, which is why I'm telling you to get your $10,000 demo trade or demo account ready. Because I want you to be doing one mini, yes, with a $10,000 account, because I want you to see the effects of rushing in underfunded, but I'm going to show you how to correct the drawdown too. You're all going to create the drawdown because you're going to be doing things through ignorance. But I will teach you how to fix all that stuff and also how to fear getting in. I'm going to do the whole thing I did with myself and what I'm putting my sons through. You'll be able to accomplish beating that anxiety, that, performance anxiety is what it is. I'm afraid I'm going to do it wrong. I'm afraid it won't be like your trades are. I'm going to show you how to get past all that stuff. But for someone that's new, and I give them this model to start with, it's a looking glass. And it allows them to focus on what? Look for 5, be content with 3. And by conditioning themselves over and over again, intraday, using 1-minute charts, It gives them several opportunities per day to challenge themselves to have that experience. It's like a laboratory experiment. And you're going to be prompted to do that. And it's going to be viewed by the trolls as, oh, look at this is dumb. No, it's to help you become indifferent to the outcome, which is exactly what you need as a trader. When you put a trade on, you know that this is what your model says it should do. You also know that it's usually more times than not correct. So if it's more times correct than it's not, if it fails, it's not going to cause you to wig out. You're not going to say, oh, well, I'm going to have to jump on something else. This doesn't work anymore. You'll trust that this is a speed bump. That's all it is. It's not a roadblock. It's not a barrier. It's just something that didn't give you what you were wanting that time. Just like getting turned down on a Saturday night at the club. She's good looking, ain't she? Yeah, she is. You finally had the courage to go up there, and you went long on one contract trying to get 5, and you didn't get nothing. You got stopped out. As she said, I'm not interested. Sometimes the market's going to do that. Ladies, you're not exempt either. Sometimes it's just no. I hope he asks me out and then you see.
Let's look at YM. Let's look at YM. YM was in a deep discount here.
So by conditioning yourself, looking for something that's realistic and practical, 5 handles at the beginning, I think is
I think
reasonable.
YM would seek higher prices here,
in my opinion.
So therefore,
but it's also powerful because
ES and Y or ES and NQ could draw higher.
The confidence.
If you look at dollar though, dollar's been drawing higher this whole time.
You're gonna see a whole lot of fucking setups, a lot, and you're not gonna be fearful of missing anything. Why? How can you get to the point of ICT never fearing missing a move? Because I see them fucking coming at all angles all the time. There's a lot of them. The point is you have to find the ones that you like. I literally walked through on Thursday with the GDP number with my son. I said, look, here's something going to happen here. This is what's going to happen here. It was doing exactly what I said it was going to do. But I said, but I want to see the trade that goes up to the fair value gap. That's my trade. That's the one I want to do. But even though I'm calling it live right there in front of everyone that was listening to us, that's what it's like to be, well versed in this. You can see lots of 5-handle runs, up and down, and you're never going to be fearful. Which means what? You're not going to be impulsive about getting any losing trade right away back. Just because I can see lots of trades and I can see them coming and I can engage on all of them. My experience has been when I've done that, I lose sight of where I am, and when the bigger moves come, because it's like a game after that. Like I'm like, okay, I did this one, I did that one, I did this one, I did that one, and I forgot. Oh, I'm supposed to be looking for this, and it's my obsessive compulsive. This takes the better of me, and I don't do well in that situation. So, which is why I did what with my trading. I have to be highly selective. I want to be in the moves that have the best potential for the big runaway runs. I know how to find them, but if I either missed them because it happened before I got through the charts, or it happened when I was sleeping, that's a move I can't participate in it. You can't either. I'm not getting up and saying, oh no, Bitcoin just moved 10,000 points over the last 6 weeks or whatever. I don't give a shit. That's not my market. I don't wake up and look at the S&P and say, oh shit, it moved 20 handles overnight. I wish I could. No, I can find 20 handles in a day doing 5-handle runs, up, down, up, down. Here's my 20 handles. I'm not worried about it. And you won't be worried about it, which is where you should be as a trader. You need to know what you're looking for, what you're going to accept as a trade that incurs risk, and be comfortable with that. And if it fails, you're not going to lose your mind about it. You're not going to be in a hurry to try to find something that really isn't in the chart. What you're trying to do is impose your will. You're looking through that looking glass in a losing position. You're in drawdown. You're going to manifest your next setup, even when it's not there. Why? Because you don't have a clue what you're doing. You don't know your model, because if you knew your model, you would sit still until it formed. Maybe you watch live streamers. Some of them don't live stream anymore because they wreck themselves. The ones that do it, if they're impulsive, if they go in and try to overcome and do more than they're supposed to, study them. If you know somebody that's like that, tell me who they are in a tweet to me. That way I can watch them and see. I don't want to go there and troll, and I'm asking none of you to go there and troll. But if it's someone that you see that is impulsive, that's a wonderful social experiment to study and observe them, not to bring hate on them, not to make them feel bad. That's not what this is. But if they're willing to put themselves out there like a fish in an aquarium for everybody to look at, that's a perfect experiment for you to see what not to do and watch them feel the anguish and struggle, trying to do something, expecting some specific outcome that's never going to come. because they're just reacting to price versus predicting price. I saw a tweet by a guy. I'm not going to name him. We talked once, not directly, but through online posts and such. And he posted something to the effect that your job is not to predict the market, but to react to price. Okay, so that's some grade A bullshit right there, and that's the reason why your results look like the way they do. And sir, you know who I'm talking about. It's you, and I'm not going to try to say anything more than that. But you have to predict the price. You have to. That's what every winning trader is trying to do. So how the fuck can you say your job is not to predict price? That's exactly what the fuck we're doing. That's like telling the football teams, your job is not to go get touchdowns. What the fuck are we here for? I'm here to predict the future. We're here to predict the fucking future. You can't think about what the fuck you're doing. You're trading futures, for fuck's sake. It's in the name. That's what you're doing. That's what the fuck we're doing. We're predicting the future. And when I see these people say your job as a trader is not to predict the future price movements, it's to be ready to react to price. How the fuck is that sound logic? That doesn't make any bit of fucking sense. That makes no sense at all. What the fuck? That makes no sense. And that's not the only person that said it. It's regurgitated and it's posted all the time in shit from people that don't know what the fuck they're doing. How can you spend, seriously folks, holy shit, how long did it take for you to see me calling these things before the fact to know that, you know what, this ain't random anymore? And once you get to that point, okay, once you get to that point where you know it's not random and this shit is controlled,
hey, have it going, Lorenzo.
Fucking sense to listen to somebody tell you, or the world tossing out an opinion into the abyss of the internet, say your job as a trader is not to predict price, it's to be ready to react to it. How can anybody that has spent any considerable time with me proving what it is that I teach and show you what the real market is, how can anyone palate that? How can you accept that or even entertain it as a reasonable fucking consideration for what we do? Nobody fucking can do that. Nobody absolutely would accept that. Let me explain why that is perpetuated in this industry. This thought process is a very soothing excuse for why they suck. And there's no nice way of saying it. It's for people that don't know how to predict price. And it's a wonderful excuse for them to be able to lean on, cozy up to, and say, well, it's impossible to do anyway, so therefore I shouldn't feel bad about it. You bought the hook, line, and sinker that is in books. You can't predict price. No one can time the market. Well, I should change my motherfucking name to no one, because I'm proving it every fucking day. And guess who else is doing it? My fucking students. You're seeing them taking trades that I didn't even talk about, but they're using the logic that I've taught. So guess what that means? All the other bullshit is horse shit. Grade A. So yes, our job is absolutely predicting price. But in the beginning, you don't know how to do that. So how do you protect yourself from it? You go in with baby steps. Gradually teaching yourself to trust your ability to do it. Also, condition yourself. Build in coping mechanisms for bad character flaws, impatience, impulsiveness, gambling. All those things that you don't think you have right now until you start pushing a button. And then you're going to discover you're a fucking train wreck. You thought you had everything together. Did you ever see those guys that go around on YouTube? My wife shows me this stuff all the time. I don't entertain it myself, but she's a TikToker girl, right? She fucking eats this shit up all day long. And I'm like, do you feel your IQ dropping watching this shit? Like, when you share some of this stuff, I literally feel like you fucking stole time from me. Like, what do you see in entertainment value in that? It's dumb. But she shares this stuff with me sometimes. She'll say, look at this guy here. And they'll ask people, how many states are in the United States? And some of the answers are shocking. And it's like, what the hell? That's nuts. And there's another one. He'll say, hey, look, oh shit, I lost my train of thought. Some of you probably already know where I'm going to go with this, but I lost my train of thought with it. Damn it, it'll come back to me. Give me a second. Let me get a drink here. Let me think. It's spring weather, by the way. I don't fucking drink alcohol. It's these goobers that think I'm drunk all the time. I am just off the rail sometimes, yes, but I'm not inebriated. I don't drink and I don't take drugs. So oh man, this guy, what does he do? He goes around and he asks people some shit. I don't know. I might not be able to come back. If I remember it, I'll tweet about it. I might even share a link to one of the videos. But oh yeah, that's what it is. Okay, thank you. he'll go up to a guy and say, hey, look at this woman here. What would you rate her? 10 being extremely beautiful and 1 being a grenade. What would you say? And they'll say, oh, well, you know, I think she's a 6. And sometimes these women are drop dead gorgeous, like beautiful. And they come off with some stupid shit. Like, oh yeah, she's like a 6, maybe 6.5. And then he says, okay, what would you rate yourself? Oh shit, I'm a 9. And they literally look like a buster. Like they don't look like they even have a fucking job. It's a mess. So they end up taking that guy's picture and sharing it to another person, saying, what do you think about this person? And they're like, this guy's a bum, basically. He shouldn't be asking anybody out, right? And it's interesting to see what your perception is about yourself, especially if you're opinionated about other people. And it's very much like a fucking Vinny, where you're a little dick guy that runs around and think you're a savage and you can't do shit. And your opinion of yourself is gigantic, right? So you know he ain't packing shit downstairs. He don't have a giant P&L. And that's what's like when you see these characters in
giant.
like they go around with their ego. They go around saying how you should do things, but they bring nothing to the table showing what they can do at all but failure, not doing well, and they spread bad advice. Bad advice. They don't have students that are killing it. They don't have profitable students. They don't have people proving it. Nobody's interviewing their students. Nobody's seeing anybody getting 6-figure withdrawals in accounts and companies that are literally interviewing them. So when you listen to other people talk shit about you, our community, and me, and what it is I'm teaching, and if you entertain that, if it gives you any negative feelings, you're not paying attention, because there's no reason for you to be even entertaining that bullshit. There's so much proof in here, you're drowning in it. It's intoxicating. It is a fucking cult of winning. But in the beginning, you can't appreciate that, because what are you doing? You're having that same complex that this gentleman highlights when he goes around and asking other people. What do you think about this person here? What he's targeting is the ability for the human mind to look for the negative in any fucking thing. Toxic thinking in weak-minded individuals or ill-prepared people as traders, and everybody when they first start are all ill-prepared. But you don't know the level of toxicity in you until you start doing this. If you see somebody doing well and you feel like I gotta start talking shit about this person, well, you're a little dick Benny then. But if you look at other people and they're doing well and you don't feel like there's an issue, there's a problem, and you're like, wow, that person's really doing well. And even though you can't do what they're doing, you can't even do anything close to that, you can appreciate what they're doing and think, you know what, that might be motivational for me to do that. Even though I can't do it, I don't feel like it's defeating for me to feel that way. Why? Because you're new. You're new at it. And so many, especially the young men, so many of the young men that come in this industry that follow other influencers that make it about image. Everything's got to be the new car, the nice cars. I'm telling you, having had lots of shit like that, it doesn't make you a better trader. And frankly, nobody gives a fuck once you show it. Once you show it, that's it. You done shot your wad. It's done. What are you going to do? Be seen in it again with a different haircut? They've already seen. Okay, so what? You got a car. Big deal. What have you been doing in your trades? Show me your live account trading. Show me over a chart while it's ticking real time when I'm watching it. Show me what the market's going to do. Tell me what it's going to do. And unfortunately, that's the stuff that never fucking happens. And that's where I live. That's my fast lane. I'm taking you in there doing that. But I also know, as your mentor, that you're going to have problems in the beginning. You're going to discover things about yourself that you are not going to like. And you're going to impulsively, because you're not disciplined, you're not going to have the impulse of a professional where it is, okay, I'm in a market environment now that is not conducive for high probability. So I'm going to impulsively remove myself because my training tells me to do so. Not run away in fear, or not roll the dice and see what happens, which is predominantly what everybody does. That's the demo disease, okay? Push the button, see what happens. Push the button, see what happens. In the beginning, you're going to be a train wreck when you discover what you have as character flaws. Nobody has ever started this industry, ever, ever. Never happened. It's never, ever happened. It's never happened. Where somebody walked out here, got it all right from day one, and never had hardships or had to wrestle with internal conflicts with what they are as a trader, what they're not as a trader. They don't have a person out there in the industry that's like that. Everybody comes in here and we are all baptized in the fire. And that is going to be pain, it's going to be loss, it's going to be frustration. And guess what, folks? Listen, friends and neighbors, that is absolutely part of this. And that's why I never make any sugarcoating about it. I want you to know that's coming, because that way you're prepared to, number one, identify it when it does. And then you have to do certain things to wrestle it and subdue it, because it will undo you. I don't go out there and say, go out there and try to go for 10 handles a day. That's unrealistic. I tell you to look for 1 5-handle move. That's what you're looking for. In hindsight, by doing that every single day, you're conditioning your eye to see it. It's the same thing that happens when you go out and buy a car. Oh, I got this car. It's such a pretty blue color. Nobody's ever got a car that's this color in my neighborhood. And all of a sudden, as soon as you buy it and you drive home, on your way home, you done seen 17 of the same fucking car. It's like everybody went out there that day and bought your fucking car. How did that happen? How the fuck did that just happen? It didn't just happen. What you just did was you opened up and activated your reticular activating system. So now your subconscious that was filtering all that stuff out before, because it didn't matter that that car was owned by other people. You went to the lot, you saw it. Oh, I got to have that car. It means something to you now. It resonates with you. It's something that is part of you. So it should come to no surprise when every time you walk around, you see your car because it means something. You have adopted that as something meaningful to you. Well, when I tell you to look at hindsight and backtest and study old data, looking for shit, and when I tell you to pause the video, look through price and tell me what you see. Well, not that I tell you to tell me what you see, but annotate what you see in your log, in your journal. When you do that, what you're doing is you're activating your reticular activating system. And when you do that, what you're doing is you're inviting your subconscious to draw on to something that is meaningful to you. What is that? I'm teaching you fair value gaps because it's the most visually identifiable thing in price action, apart from relative equal highs and relative equal lows. So in short, really, you could just trade with just that. They're the two most important, visually pleasing, easy to find. Jump on a chart real quick, any time frame, your eye will go right to the relative equal highs, relative equal lows. And if there's a fair value gap in the middle of it, and you know that's likely to go up there, well, you can buy the fair value gap and ride it up to the relative equal highs. There's your model right there. It's done. I just gave it to you, and it costs you nothing. Probably some of you never even thought about it. You're like, now, oh man, I never thought about it like that. Yes, it's just like that. But when you don't go through old data and you just binge watch my videos and you're not pouring yourself in charts, spending time literally every single day looking through charts, studying how these other moves that you can't make money or lose money in, everybody else is going to tell you it's a waste of fucking time. They're the same people that will not be trading with live funds 6 months later. There's a lot of bad advice in this industry, a lot of bad actors, a lot of chapped asses, man. And I'm sorry. It's harder for some of you. I'm sorry. But it wasn't easy for me in the beginning. I've just been doing a whole lot longer. I know what works. And I'm telling you, if you listen to the shit I'm telling you to do and avoid the things I'm telling you to avoid, you will save yourself a whole lot of time. And be accepting, be flexible. Give yourself permission to take up to this year and maybe into next year to get it. For some of you, if you give yourself a broad timeline with no definitive, I got to know it by this time. You know, in a lot of ways, I regret having told you that my last live stream is going to be the second Friday of November, because it kind of pushed the envelope on pressure. Like, now you have to, by this date, I gave you a deadline. When I teach you, don't have a deadline. I didn't tell you that so that way you can be fearful of it. I've told you that so that way when I get to that point and I say I'm stopping, I can say, remember, I told you, because that's just the way it is. I got to have I have to have an exit clause here. Okay. When I'm going to leave, why I'm leaving, and why it stopped. It wasn't because somebody ran me off the fucking internet. It wasn't because, I'm locked up. It wasn't because I'm, in the poorhouse. It's because Michael's going back to fucking doing what Michael does. Okay. Which is be Michael. And I've spent a lot of time, if I do this every week, every day, I'm investing a lot of time in all of you. And it's your job to do all the work in between, which is a lot. It is. And I saw a guy saying, listen, man, I love what you do, but listen, you're doing these Twitter spaces and you only give like 30 minutes of applicable information, and we got to sift through all that stuff. Listen, kindly, sir, please, don't send me shit like that, because that's the kind of stuff I block. Because you're saying my time investing into you, telling you all these things, you can't be successful if you just know the concepts of getting in, where to put a stop loss, all that other stuff. Because if it was just that easy, I can do that in a book and you won't make money with it. I can do that in a video because I've already done it, and you're not making money yet, because that's not all that is required. You have to understand the person that's in you that's going to absolutely fuck this up for you. I'm sorry, but that's the reality. We're not always going to be prepared for doing difficult things, and this is one of the most difficult things on this fucking planet. You're wrestling with yourself in an industry that's designed to take your ass the fuck out. You're not supposed to make money here, man. You're not. it was not created for everybody to walk in here and just know what's going on and make money. It was designed for, well, P.T. Barnum said it perfectly. The sucker. There's suckers born every day. And they come in here looking for animal patterns and bullshit Mickey Mouse
Woo!
things that tells them it's going to
Oh
go
my
up because moving
gosh,
averages
just
are
finished
across
those
there,
notes.
and they
All
lose
right,
their ass.
I'm
And they
anticipating
get
this
mad.
for
They
value
think,
gap
okay, I
to be
didn't do it right
the
that
draw on
time. And
liquidity.
they push and push and push. And they
Overall,
lose their ass
though,
again, not realizing that the market doesn't respect any of that bullshit. And if they have a strong opinion of view about how they won't ever submit to somebody else's stuff when the other stuff is absolutely what's going on, they become absolutely toxic to themselves.
you listen to a whole hour of that? No, there's no shot. There's no shot. All right, I will say one lecture, and then we'll backtest some more, and then that'll probably be around time for me to head out. I'm planning on doing these for 11, like a little under 12 hours every single day, so then they can upload to my YouTube channel. Honestly, if it were an infinite amount, if it didn't matter on the time limit for it to be uploaded to my YouTube, I'd probably be doing this for like 15 hours. But I would take like an hour break during lunch. Like right now, it's about to be lunch hour, so I'm not interested in trading.
The previous last trading day, because the weekend we can't trade indices. So it's a matter of knowing what you're looking for and how it's likely to deliver in price. That's narrative. That's a little bit complicated, and it's going to take some time with me throughout 2023 to kind of get a feel for what that is. I don't always know exactly what the narrative is going to be. Sometimes I go in with an expectation it's going to do this or that, and I have to adjust and I have to adapt to what the market's doing, because manual intervention can come in and upset what I believe the algorithm is likely to do.
Where's
It
that
doesn't
one?
mean that I
Where's
don't
that one
know how to
lecture?
find another
I want
trade
to watch
that
that
would
again.
not necessarily be in alignment with that pre-market analysis or narrative in mind. It just means that I have to be, just like everyone else, adaptive to what the market's going to do. It's a living, breathing organism.
Yeah.
Okay, and
I'm not sorry. I'm not gonna be watching this one. It's gonna be a different one. Which one is it? It's in 2023. It's of course. It's it's like got like orange for value gaps. I think it's like 40 minutes. Oh, it might be this one. May 23rd. I don't think so. I think it's in October. I want to say it's one setup for life, but it's not. Oh, I'm not my channel. Sorry, I'm trying to find this. I think it might be this one.
Midpoint of the high bounce sell sign and repel price higher. Returns back. This, okay, I screenshot this so that way I had my
It's
cursor
not.
right on.
Sorry. Yeah. Blah, blah, blah.
You can see how we worked off the low here.
We're not gonna watch it. We're gonna watch something else. I can't find it. Did you play games? Like video games? The only games I play is not anymore. I'm gonna look for one more second. If I can't find it, I do want to find it. I did not. We'll watch this one.
Good afternoon, folks. Happy Saturday to you. So we're going to do a little bit of a review today. Promise it won't keep you too long. So here's the dollar index. This is our weekly chart. There is a fair value gap in here that has been left in place from
After this, I'm
last week's trading.
just gonna back test
weekly candle. I want to see if we can keep this level in the form of resistance. In other words, it can go up here, hit it, and how we trade after we go into it is going to be vital for me going forward. Now, if we were to go above it, come back down in, I would expect it to act as support and maybe reach up into the rejection block, which is this highest up close price here, and then eventually the high and consequent encouragement of that wick. But I want to wait and see what we get on Sunday's opening, and I'm going to allow Monday's trading because there's a lot of things happening around the world, and if you're not paying attention, these things might surprise you. So just check the news headlines and you'll see what I'm talking about. But moving on into a daily chart. So there is our weekly fair value gap viewed with a daily candlestick chart. So it doesn't look like there's any imbalance there at all. But on a weekly chart, there is. Okay, so we did have some support off of this fair value gap here. I mentioned when we were dropping, go back and look at the other commentaries, that we would reach into here, bit of volume imbalance, and said if we got below that, then this is the area to watch. We traded down into that on Thursday, right up into consequent encouragement of this wick right there. So it's a wait and see. So Sunday's trading, Monday's trading, I'll be keeping my cards close to my vest. I'm not certain what we'll see, but could be pretty volatile next week. Euro dollar daily chart. Okay, we have a weekly imbalance here, and you can look at that on your own charts. I'm trying not to put too many things in front of you to look at, but also leave you some room to go in and do your own investigation. So we have a weekly fair value gap here. Again, look at your weekly chart and you'll see this same thing here. Easiest way to identify it with study is put a rectangle on the daily chart from this low to this candle's high, then go to your weekly chart and you'll see right away what that weekly fair value gap is. So the fair value gap is formed now because of this daily close. So we worked off of this fair value gap, and I want to see, does this find its way above the weekly fair value gap and act as support. There's been some issues with the crops from an agricultural standpoint for folks that follow the commodity market, the grain markets, because there's a drought right now. Corn, wheat, and soybeans are expected to have a difficult year. So that would be bullish for those grain prices. And if that's the case, that would probably be seen with a dollar index that is consolidating or lower. But we have the added uncertainty of WARU paying attention. So there's a lot of things to weigh out. So what do you do with this information? When I see it like this, I stay to the day trading side of the market, not doing longer term analysis, sticking to intraday trading the sessions only, morning session, afternoon session, London session, that type of thing. Hourly chart here, you can see we ran above buy side, shift in market structure here, right there, and then we rally back up. This is model 2022. There's your entry, and then drawing down into an imbalance. That would be your perfect 2022 model. Market trades all the way up down into this low here. If you look real close, you'll see there's the buy side imbalance, sell side inefficiency with an order block. That's why you see this nice little rip higher. There is some unfilled sell side imbalance, buy side inefficiency. So for the bulls, we would need to get back above the weekly fair value gap and find some support and rally. Otherwise, we could see consolidation on the dollar and make a run for the euro sell side liquidity here and dig in a little bit deeper on that weekly fair value gap that has just formed. 15-minute time frame. Okay, just a little bit more detail. Nice SIBI after a shift in market structure there, after buy side's taken. Imbalance, sell off. Optimal trade entry here. And sells off again. Breakaway gap. What is a breakaway gap? Breakaway gap is where you have a SIBI or BISI in an area close to a swing high or low. In this case, it's moving lower. So in this swing high, volume imbalance, but the S&P has only traded up into this SIBI with buy side being taken here. And we traded right back down into the low of this SIBI right there. 1 hour chart on ES, and the chart is shown in regular trading hours. Here's that buy side. We worked all up to the upside for a move just outside of that old SIBI, which is the shaded area here. Then we broke lower, had volume imbalance in here, traded up just enough to get into the actual gap. This is a liquidity void, a real one where there's no trading at all. And then we had another opening range gap. That's what you're seeing here. These are opening range gaps, opening range gap, opening range gap. So where we settle at on the New York session when you're watching CNBC and they ring the bell and they clap their hands, that's the equivalent. And then where we open up the following day at 9:30, that's what's being represented here. That's the opening range gap. So whenever you hear me talking about it, that's the concept I'm employing here in reference to time. So there's an opening gap here, trade up into it, trade it once more as resistance, and sells off. Opening range gap for Thursday's trading, and then Friday morning 9:30 opening, that separation in there will be seen as a opening range gap. All right, so you can see nice little opening range gap, trades up into it here on the 21st. We break lower, we have an opening range gap here. That's not shaded, but extended in time. You can see that we're returning back into that. Now, opening range gaps, I don't like to take them beyond 5 days. So in my opinion, they expire in 5 days. Now, that doesn't mean that you won't find examples of where the market has respected them that were utilized beyond the limitations of the filter I'm saying I use for my analysis. So 5 days after that, 6 days from this day, basically, I'm no longer interested in using that as a return back into it as support or resistance. So I'm not treating it like a new week opening gap. Okay, so new week opening gaps, I can hold on to them and use them for months.
I appreciate.
Opening range gaps and new day opening gaps, they're short-term imbalances with an expiration date, and it's 5 days. Okay, so you know. And we had,
new day opening gaps
market
can be
open,
held for longer,
bounce
in
around,
my opinion.
trade up into half
At
of the
least
gap.
that's what I've seen.
Range.
I've seen proof of it over and over.
And we have a 5-minute chart here. So you can see where we settled, where we opened that range here, and then 50% of that opening range gap is being noted here. So we traded above the short-term high in the morning session, trade back down to the low of the opening range gap, which is the opening price, 9:30 near critical time. Regular trading hours, you'll see the separation. Trade down to the opening price at 9:30, and then rallies. What is it going to try to do? It's going to reach for the buy side here, and then try to work inside and reprice into what? All this opening range gap. But we have a lot of order flow here and here. So it's not necessary to do a complete closure. And I mentioned that I was interested in that daily fair value gap on ES. I sent a tweet out on Friday morning, and I'll show you that when we get into it later. But right away you can see how we went from noon to 1:30. We ran buy side, and then the target or bias that I mentioned I liked for Friday, which was the discount fair value gap on ES. We actually traded into it by 1 tick. So here's the 12 p.m. to 1:30 p.m. New York lunch, and I taught recently how to use this information. If you have a bias, you think it's going to be drawing to a specific higher time frame key level, I shared that with you on Twitter Friday morning. I said that I favored the lower fair value gap, and you can see that on the ES chart. That's what we're looking at here. So we ran up throughout.
What day is this? What day is this? July 24th or June 24th? June 24th. Molly in August.
lunch to take the buy side, half of, right here, half of
So
the
was
opening range
it
gap between where we settled on the
on the
previous day, or
side?
open at 9:30 on Friday. Measure that with a fib, 50% is here. It trades to it here, consolidates, and one more time runs into it, and then we trade into mean threshold of this bullish order block. So notice how it was used here as support or rallied up. Once we traded below that low, every one of my PD arrays has an inversion application. Everything acts like you learned about in terms of support and resistance. Which high and low do you use with classic support and resistance? See, I've already deciphered all that. I'm not looking at just the low. See, classic support and resistance, fellas, they'll look at that low, draw a line on that out time, and price should stop there, but it doesn't. It consolidates and rips through it.
Oh, it is.
So
It's
my
the
ability to
23rd. Okay. It's the 23rd. He just posted on the 24th. So it's this day right here. I can't view regular trading hours, but at 9:30 we come down. So kind of just sloppier day, honestly. And we reprice right to that high, and as we know, this order block right here. Wow, that's nice.
go into order flow, old market structure, and refer to very specific levels, things I'm looking for that are very finite. They're not ambiguous. There's not a range that you have to guess about. So a lot of these things have required rules to adhere to, and you're learning them as we go through this year. So the market rolls back on. Anyone that was short in this big gap down with electronic trading hours, you would see there's a lot of movement from here to here. Buy side here, buy side above some other highs in here that we don't even need to look at. But to eliminate all the guesswork, just get a range on that opening range gap. It's Friday. It's likely to draw down into its daily fair value gap, which I'll show you. So it's only pulled back to give a short-term premium. Then the market breaks lower, and then you get the typical run back down into the opening range gap low here, and then trades into the low target, which is the daily fair value gap. And again, I'll show you what that is. But you also probably notice you see some discoloration here. And for those that have been with me for this year, you already know what that is. That's the framework for the Silver Bullet AM and PM session. So here's a 1 minute chart, and you can see how that 50%
Hey, appreciate it. You too, bro.
of the order block and convergence of the opening range. The dashed line is 50% of the opening range gap, and this is 50% of the order block or mean threshold. So that's what you're seeing here. I'm just annotating that. I would have did a better job of not wording it that way. So looking at it now, I wish I would have said it differently, but we're going to stick with what we got here. So at 10 o'clock in the morning until 11 o'clock in the morning, we're looking for a silver bullet. I mentioned that I favored the lower end. So bias, in my opinion, was bearish. And I know some of you that are highly critical or just maybe you're brand new, you're looking at this move here to here. Well, how is it bearish when it did this run? Or how's it bearish when it did this run to here? Or from here to here? What was the largest move of the day? It was moving from here down to here. And it went one tick below where I've already told you to look at on Twitter with the daily fair value gap. So bias is what? My bias is bearish. So I wanted to go short. I showed examples of executing, working at the 9:30 opening, and was like 75 or so handles taken out. And you can look at that on Twitter, by the way. But if you want to find out what my Twitter account is, you can go to my YouTube channel, and you'll see the actual official Twitter link, upper right-hand corner. But we have a gap here. We trade up into it, right there, and at 11 o'clock, and a few minutes after, it still went a little bit higher, but that's fine. You can see on the 1 minute chart there's a little bit longer city, which is a fair value gap. So it offers it there, but you would have been filled here, and you'd have to have a little bit of drawdown. Because the rules for Silver Bullet is you have to enter between 10 o'clock and 11 o'clock. And if you're very uncomfortable with that idea, then don't trade that model. And it trades down to the low end of the opening range gap. So that's almost about 10 handles, but we don't need that. We just need 5 handles for a Silver Bullet. That would have offered it there. Then we have the retracement going into lunch, running on buy side, and we see at 1:30 we get one more little trap move that takes us above the relative equal highs in here. Buy side is tripped, and displacement is shown short-term lows. Fair value gap, trades up into it, wait for displacement. We're at 50% of the opening range, and we're at the old swing low, which is a down close candle, bullish order block, and mean threshold level. Okay, so that's what this is. The market starts to work lower again. Time between 2 o'clock and 3 o'clock, we're looking for an imbalance that we can use to enter on to get in sync with the directional bias. I shared mine on Twitter. So here's a CIBI, trade up into it between 2 o'clock and 3 o'clock. There's your PM session Silver Bullet. What do you hold for? Opening range gap low, and then the daily fair value gap. So we had a nice run lower here, and then we dig below these relative equal lows, and one tick into that daily fair value gap, and then retracing back up into the range. Here is that fair value gap I mentioned on the daily chart for ES here. I had this one highlighted, but I very specifically stated that I favor the lower. as the buys on the day, and it drove down and one tick below that low right there. That was the delivery. So 4381.75, 4381.50 was the printed low of the day. And there's your difference right there.
I'm curious to see NQ run this day. Friday, June 23rd. Exactly. NQ explains that delivery beautifully. Right here, you have a fair value gap that we draw into. We draw into the lower portion. And what else are we? What are we respecting? At 8:30, we don't create a high resistance signature at 8:30 or 9:30. Come back down lower. 11:30, come up. We reprice something. All right, I don't wanna lose sight of this because I have this like. All right, and now we backtest again. For we'll do it until we get. We'll do it for 2 more hours. We got 2 more hours. Okay. All right, then after that, we pretty much just reprice lower. And then we low-key make a random low, like an actual random low. Maybe at that order block. I would like to see more of an imbalance. All right, now we're probably entering buy side of this curve. This is a very slow market maker model. Here we have this order block right here. We'll see how this. Honestly, we could just see consolidation. Yeah, we actually do make kind of a random low, like an actual random low. I mean the 1 hour is respecting those, so I guess around these new day opening gaps. Here we have 9:30. Oh wait, that's 9:50. Where's 9:30? Oh, 9:30 is up here. Oh, 9:30 is up there. For I gap in, for I gap out signature, right in that new day opening gap. Market opens here. Do we have like a higher time frame new day opening gap that's not being depicted? No, there's nothing there. This was a large sell day. A large sell day. Now swing highs formed on the daily. Okay, let's go to the next day. Not really too much there. Wait, let's look at the 10 a.m. What fair value gap gets traded into at 10 a.m.? Right here, that's the silver bullet. We'll just put 40 points for reference. Right there with that other new day opening gap. Oof, beautiful. $10 a.m. Powell testifies and on NFP week. So we respect this new day opening gap, fall short of this new week opening gap, then come back down to new day opening gap again, and we put in equal lows here. $9:30 opens here. Where's 8:30? Okay, 9:30 kind of comes up here and then reprices to this for value gap right there. And then where's low resistance liquidity? We originally accumulate off that new day opening gap. Then we break through it. At 950. Oh, that's gorgeous. It's gorgeous. I just want to see for possible SMT. It doesn't look like we have that. Change state delivery at 9:30. Because notice how this is paired with the order block and a mitigation. Got myself out of drawdown today, made 1400, but it's not planned out, and there wasn't very much of a strategy, so I won, but not really. Oh, brother, I would recommend to stop trading for a whole month and realize and ask yourself if you're really a good trader, honestly. And I'm not saying that to be mean or anything, but like if you're saying that you got yourself out of drawdown and you made $1,400, bro, I'm gonna be straight up. That's probably not your money. That is the market's money, and it's gonna take it back from you, and then you're gonna feel more pain and more ruin. But I mean, well, you can keep on doing that, and you can see where that takes you. But I would highly recommend just taking time away from the markets, just not even trading. That's what I'm doing. And yeah, you might want to suck because you might want to make money right now, but bro, making money right now is not the important factor. It is not at all. It's just gonna be what just ruins you. We come down into new day opening gaps after liquidating sell side. Do we have SMT here? If we have SMT here, this might be actually a... Yeah, we do. And ES is trading into a new day opening gap here. So they're both trading in a new day opening gap. We have SMT at the lows. Pretty high probability trade here. Oh, I can't listen to this, bro. Oh, where does that start the sell side delivery?
Nasdaq is trying. Dow did that as well, I think. Yeah, yes, Dow did that as well. So we have a SMT, chance of seeing SMT at the highs, right? And now that we found a hourly BC, I think that's gonna be a very easy target for a 2-hour delivery from hourly chart if we
All
can
right,
spot
here.
that nice drop
And then
here.
having displacement.
All right, so BC from 60-minute hourly.
Notice how here we take sell stops.
A lot of trail line liquidity, relative equal lows here, right? Just below this order
And that
box,
fair value gap too.
below this BC. So we got our bias, right? We are expecting bullish price action for now until price reaches to this or until price shows a reversal signal, because we have a SMT here. We also have a relative equal lows. So once price respects the SMT or takes out this high, we wanna see price returning back to this BC or this BC. All right. So now I wanna see if price providing me that short opportunity with a nice pattern. If it's doing that, then I'm gonna go for that trade. If not, then we'll just stay trade. For now, it's best that if you keep an eye on hourly charts, because hourly is much cleaner.
We consolidate
compared
around
to
50%.
15-minute or
Not really consolidate, but we
5-minute charts,
accumulate.
right?
75%. We then have silver bullet right at.
1 minute is very choppy, generating a lot of false signals. So I'm gonna stick with 3-minute and 5-minute until I see a setup on 3-minute chart or on 5-minute chart. So if I wanna take a reversal trade, right, then I'll be relying on a higher time frame market structure shift like 3 or 5-minute chart, rather than focusing on 1-minute chart because of the false signals. So we're gonna focus here. We also don't wanna see when price dropping, generating relative equal highs. That's very important that you understand this, because price generating this liquidity for what?
What
To come
high?
back
Where do we reach
to these
into?
zones again. You can tape read this breaker here. See price getting support.
4
from it.
hour. 4 hour.
And
fair
I
value
think
gap.
we have a small SMT there. Let me check.
And then we create a
Yeah,
fair
SMT.
swing high here on the hourly chart.
At these lows. VTS.
Big displacement, pull back, fair value gap. No, I'm not really looking to
So
trade this
tape read
though.
this
I'm just looking for
scenario,
theory.
Pattern.
50% of that, I guess.
And
Take
SMT is
hold
here.
held. Do you have
That's the
SMT
bullish
there? No, we
breaker we
don't.
have here.
ES though with the new day opening gap puts in the high and we reprice lower. Alright, let's go to the next session.
Hey bro, what indicator do you use to show the 8:30 open and weekly open? The indicator is this one, ICT everything by at cold reors.
940
Indicator
we manipulate
very
and we head
useful.
straight to that new day opening gap.
UTC4, yes, correct. So this one worked at 8:50 to 9:10 macro. This pattern. The breaker came with the SMT. We had relative equal highs. Still, I would not take it because price had a discount, unfilled fair value gap down here. So it makes much more sense to me if price drops down here and then forms this pattern here. So the pattern price formed here, I would like expect it to see inside this fair
Let's see
value
if we
gap.
if this
A lot
this
of
new day
liquidity left
opening.
flow. So I'm not gonna be bullish
that's
as long as I
nice.
see this. You guys already know how I trade. So for me, that's what
930
gives
we
the
come back
bias.
down into this.
And today there's a lot of
So
relative equal
930 we
lows.
open up, we're
So
within a
I'm
new
gonna
day
wait
opening, new
for
week
a
opening
bearish
gap. We come back down
opportunity.
right to this.
Very
new day
likely
opening gap
throughout
right
the
there.
day, throughout the M session, until we deliver below here.
Yes.
At least down here at this 60-minute gap. So this one worked. Journal this, all right. 8:50 to 9:10 macro. We saw a breaker. Very rarely we get to see price moving inside this macro. Usually we chop to high resistance. we have an inversion, close the body above. Can I use, is there a reason that you are not using SMT indicator? They give a lot of false signal. Alright, and why would I use a indicator, the thing that I can do on my own? I'm not the lazy to rely on everything on an indicator. Do you see this chart here? I have 4 monitors and a laptop where I execute on my live funds. So I'm watching here lower time frame, higher time frame. I have another one above, so no need for that. You know, some people ask me, what's the indicator for macro? Seriously?
We take, notice all
Time,
these
you can see
lows,
the time
lows,
there.
lows
Time is
stacked
macro,
right above here.
Right? Time is not a strategy. We use time because it provides a repetitive pattern. We get
Balanced
to see
price
repetitive
range?
pattern inside this small time window, but that doesn't mean that every time I was gonna do that, right? And some people ask,
Sensitive fair value gap.
what's the indicator to see time? Does it make sense? People are that lazy, you know. Which laptop do I use for trading? I use Asus ZenBook. I think I already showed it to
We
you
even
all.
take this
It has
low
2
within
display,
here.
2 touchscreen monitors, so very very useful for traders. Let me see the model. Okay, let me show it to you. Those who wanna
950
buy it, I
macro.
think it's best for us not to buy a MacBook than because of the functionality it has, right? Yeah, Asus ZenBook Duo 2024. This one. 1500 USD. In Canadian dollar it comes down to like 1800 something with the base model and stuff. And very very nice. I feel like the S&P 500
Hey, appreciate
chart
the
is
sub, Nico.
in trading view changed because
Let's look at ES's delivery right here.
sporadic with a lot of gaps and weak.
Because we have a 5-minute fair value gap too.
V-Box. Now that's a reflection of someone talking with very
That's
few
clean.
months of
5-minute
experience.
fair value gap
As
right
a
here.
beginner, you will experience a lot of things happening like
And
that.
that
It's very normal.
new day opening.
Alright,
Or
it's
that
not
new
like
day opening
price is
gap.
changing the algorithm. No, this is the algorithm.
Do we have SMT too?
And prior
Those are 9 a.m.
9:30,
lows.
majority of the time
Oh
you'll
my
see
gosh.
ES
And
doing that.
SMT here.
But the price range that you are seeing right now, make sure you select this one, ES1 continuous chart, and also make sure you
Same
turn
delivery
on
here off
the
of
ADJ button.
Yes, but we
Down
just
here you can see
re-accumulate
that.
a new week,
ADJ,
new
and
week
then
opening
it will
gap high.
mitigate the gaps. Otherwise, you will see the gaps. Alright, even after that, if you see
Right
that,
there,
then
that's
that's
soup.
the algorithm. Sometimes they do deliver candles in barcode. Inversion here with a breaker again.
That's beautiful, bro. Right off the new day opening gap, fair value gap in, fair value gap out. Just
You got
picked up
any
Change Your
upgrades or jump
Thoughts,
the base
Change Your
model is
Life.
good enough?
Justin was
Base model is
recommending
good
it,
enough.
and
No
it
need-
was.
no-
Is it a
because
book?
I'm only using my laptop to
Is it a
execute.
book?
I don't use it for any other reason. I don't even make content there, so just to like use trading view, I think that's more than enough what they're delivering.
Who's a buy? I'll look at it.
Look at the price action, how price is delivering liquidity in high resistance, right? So I want to avoid all these high resistance,
Oh shoot, is my
and I want to get in.
was that desktop? My bad, bro. That desktop audio was on. I wasn't listening to it. I'll look into that for sure. How many points is this? 160 point move. Beautiful. Alright, here then we break down. I don't really care about this. Actually, price breaks through. How many points was this? Wow. Do you have SMT there with the 345 high? No. I think we do with this high though. 256. Yeah. We don't take that. Next, we have bigger new day opening gap here. $8.30 creates high resistance, and then we trade up into buy side. And then this is all-time highs. That's the draw. We generate liquidity right above it. Wait, we take previous 415 low. Ah. It looks like we could. Nah, I don't. I think we might have divergence up here. $8.30 creates high resistance. Oh, this is NFP. Oh, look where NFP delivers right to on ES. Should we just start? Should I just start trading news, full porting NFP? It just doesn't get old, does it? Oh, I wanted SMC, not SOSA. Look at the news delivery. All right, let's measure this wick. Where does this wick line up with? Maybe 1.5. Oh, look at that. -2, -2.5. Then that frames a reversal. NFP creates whipsaw here. And then we initially get a Judas swing higher, lower, double purge Judas. We're looking for all-time highs. We've yet to take all-time highs. This is now an order block. Yeah, ES has been an all-time highs. We sweep this low here. Oh, we got SMT at the highs. SMT, smart money reversal. SMT. Oh, it kind of depends. I've been backtesting new day, and new week opening gaps a lot recently, and I've been incorporating new day opening gaps within my analysis. See, we fall short of that breakaway gap. And then we look to trade right back within a new day opening gap. Where's the draw on liquidity? Price reaccumulates in that. All right, next. for sure gotta be. Oh, day before CPI on a Monday with no red folder news. Let's see though if there's anything at all. Maybe on lower time frame. I doubt it. At 9:45. Woohoo! Oh yeah, this is a nice Judah swing. So on a day like this, just be nimble. Market's not gonna bottom like that. No shot. Market opens right here. We retrace in that 5-minute fair value gap. Put in a low a day. Where do we put a low? Is there a nice 15-minute order? Oh yeah. This is a nice 15-minute order block. That is an order block, because on the 15-minute it's an order block because it sweeps the liquidity and also rebalances the inefficiency. Like a 5-minute, it wouldn't make sense for this to be the order block. That's why it's not as responsive. But notice, I mean, I guess it's kind of just chop, but body right there and boom. Right there, we reprice to buy side, probably heading to new week opening gap would be my guess. Then we have low resistance liquidity signatures at these highs. We are drawing into that 15-minute imbalance right now. Oh, look at that 25% of that dealing range. I don't know, maybe that's random, but we break down right there. At 12:30. Boom, drawing liquidities getting met. $9.50 macro reversal. Seek and destroy Judas. For value gap with that new day opening gap right there at that 950 macro. And we saw sell side. We reprice where? We have imbalance right there. Mitigation right there too. Displacement up to buy side into new day opening gap. Within the 1050 macro, we trade into that, creating a turning point. That perfect respect right there. And we kind of just consolidate between new day opening gaps. Oh, beautiful. And look at that. The high probability soup is the one that takes buy side. Do we, if we reprice the sell side, that would be crazy. No, just back to the middle of the range. Like, even look at this random jump in price. Where does it go to? New day opening gap. Soup to middle of the dealing range. Yo, what's good, Reno? How you doing, brother? $150 macro, new day opening gap after taking sell side into a deep discount. It also looks like we have an imbalance right here that we repriced to, BPR. And we come back up to buy side. We actually do take buy side there, but I would be looking for a premium of that if I were to scalp that because it's a consolidation. Oh, I'm chilling, bro. It's good to hear. All right, now it's about to be CPI. So let's see what the consolidation was for. Oh my, like look at CPI, bro. Look at CPI. Look at the delivery. Right to new day opening gap. Like right to new day opening gap, and also like maybe this is an hourly fair value gap. I doubt it. There's no way. But like, I would think that this would have been like random, or right to that. Well, that is okay. The volume imbalance on the daily is just a new day opening gap. So volume imbalances on the daily chart are just a new day opening gap. Wow. CPI delivers. Like I'm convinced it's not random because I've seen it. Oh, that's not the one I want. Hey, I appreciate it. Appreciate it, Nico. Only continue to get better. I can't wait, bro, until I can't wait. Look at where we deliver straight to, you know? I mean, do y'all think this is cherry picked? Nah, bro. 10-hour shifts ain't shit, bro. I used to work at Chipotle, and I used to slave 16-hour shifts. But I mean, straight up, like working somewhere like that. I mean, honestly, it's like the same. It's the same thing. And then my approach now is like I'm just gonna live stream every day and just do this. Because one, now it puts pressure on me to show up every single day. Well, I would say weekends or Sundays, it's not gonna happen. I'll just do shorter streams, and that's cool. But every other day, I'm planning on doing like 12-hour streams. We're 11 and a half because I normally would do longer if they were, I would do longer streams if they were to be able to be uploaded to YouTube. Because I learned that the hard way. I did a 19-hour stream and it didn't get uploaded. It didn't get uploaded to YouTube. And like I want them to at least be uploaded. I mean, I guess I could just stream, but I would like them to be uploaded. This is nice delivery off of. Look at where we displaced from. 930 displaces from, and we're also probably retracing into a what? Classic Judas. Look at also this fair value. Oh, I thought it would have been nicer. IOFED. Probably gonna be lower time frame fair value gap in, fair value gap out. Judas, we're tapping up into that. Boom, displacement, fair value gap in, fair value gap out. Same thing, balanced price range. Where are we repricing to? Well, we have some. Let's actually use some liquidity other than just looking for this. Well, we have a hourly imbalance that we don't actually draw into. Where do we offer short-term resistance on ES? Do we have an hourly imbalance on ES? Wait. Oh no, that's CPI right here. Yeah, we do. What's CE of this? Okay, we come into that 75% perfectly. Oh my gosh. This also isn't occurring within an order block. We also have taken that low here. I haven't been using this. Then price breaks down. Do we have SMT here? 858 high. Oh yeah. SMT allows for a entry where we don't really get a pullback here. We don't really get a pullback. Fast entry. Fast repricing lower. Now we're within this. New day opening gaps. We have just taken this low right here. Volume balance. Reaccumulate in new day opening gap. Pretty fast though. Fast turn. Market's in a hurry. Yeah. We'll take that off. And we come back in here, then we displace higher. Not really much there. Alright, so we had CPI. Do we have PPI today then? Yeah, we have PPI. After CPI comes the PPI. $8.30, we expand with no wick. No manipulation on that news driver. Right, 2, new day opening gap, new week opening gap, we come up, we price the buy side here, come back down to a random level, and then we close. I was like, I don't remember playing ES. Oh, that art. Wait. ES's delivery was kind of lackluster. Is that the same day? Wednesday? The 13th? Wow, look how much weaker NASDAQ is. ES didn't move at all. We're kind of just held in consolidation. Are you UTC -4? Yeah. Oh, New York time. New York time is what I. Well, I'm actually Mountain time. So, for me right now, it's 1:07 p.m. But I use New York time. That's the time I operate and use my charts with. It's because I'm on the 5-minute, I think. But still. Well, we already had manipulation overnight. Think about it. So wouldn't it make sense for us to really need to manipulate? We're within a breaker here. Or mitigation. Manipulation occurred overnight. Wait, hold. I haven't really been looking at like the profile. I've just been looking for 8:30 and 9:30, but that's only valid if we haven't had a nice low day manipulation. I mean, I guess I would have noticed maybe. Like here, low day already manipulated. Low day already manipulated. We're not looking for 8:30, 9:30 to manipulate. We're just looking for the continuation into a PD array. That's what we get here. We get a retracement into a PD array. Whoa, hold up. 2 a.m. here. We don't have valid manipulation here, so we're there. We're looking for New York manipulation. That's what we end up getting. Right here, we've had. We haven't really had London manipulation here. That day's like a void, honestly. $8:30 news. Let's see if there's anything to trade here in these lower time frames. We do have a IFED here because we have an imbalance over here to the left side of the curve. So we have this. That's how I mark this imbalance. They kind of both overlap, but for this one, I honestly would just mark it here because it's a bigger imbalance. That's what we respect, and then boom, we get it. Oh, 9:30 opens here. Where did 8:30 open? Oh, 8:30 opened here. $9.30 just distributes. I'm honestly surprised we don't have a new day opening gap here. We have to have one on YM. We have to have one on YM here. I honestly have a feeling that we do. Unless if 9:30 we're trading within one on yes. Okay, I mean 9:35 we trade within one. Market volatility. Yeah, overall kind of a shaky morning session. Fair value gap in, fair value gap out, right here. We have this right here. Then this is a valid order block, and you would use the wick as well because it overlaps with a fair value gap. And we can see what's the low? 050. High 050. Perfect delivery. Perfect delivery. Notice how the move we get is not even within the macro. Where's 950 macro? Is there a silver bullet within here? 10 a.m. It's not the 950 macro. I was tweaking. Wow. Look at the respect on ES to this. Look at cost of encroachment, the low. Hey, appreciate the sub. Appreciate the sub. I think that's just like, is that when like people watch me? I don't even know. Like, do you have to be for that notification to occur? Do you think you got to be in the stream? I don't know. I doubt anyone's in here. If you are, what's good? Oh, Thursday we had Oh, this wasn't PPI. This was bond auction. This is PPI. Oh, we got 10 a.m. expansion. Like, if we zoom out to the hourly chart, just look at all this. Ooh. See, now that is satisfying. Now that that's nice to see. Yeah, I actually do have FX replay. I do have FX replay. But the reason why I'm using TradingView right now is because if I trade futures, I can just look at the contract codes. And I can also use indicators, which I like using this new day opening gap indicator. So that's the only reason why I use TradingView right now. But yeah, I do have FX replay too. Okay, so we already have SMT. And we have more distribution within here. Right within these new day opening gaps. Market opens and then volatility. Since we've already had manipulation. Where does price suddenly stop? Oh, wasn't this when I tried to? I think I tried to take a soup. I'm not sure. I remember there was one day I took a soup, and I would have won, but I lost. I remember that. I was taking shambles over that. My psychology was bad because I wanted to win. Overall, nothing really there for this morning session. Oh, I think the contract's over. All right, this contract's over. Hey, bro, we kind of back tested a whole. We back tested since 2/7. That was only a whole month. But that's still like a month like going in, you know. Cheeky little session. All right, our draw on liquidity has been hit. Here on, this is just ugly delivery today. I'm not gonna lie on ES. Oh my gosh. Oh, look at that. Beautiful to see it happen live, you know. Dang, bro, I wish I was able to see that delivery happen. Breakdown. I want to see if this level is an impact later today. All right, I got about like 40 minutes. See if there's a lecture. Oh yeah, I'm gonna do a mental log too on live. Alright, Loki, I'm gonna do this. Okay, we're gonna watch this and then do the mental log, and then I'm gonna head out, and then I'll probably come back.
On the weekly time frame. Now, we covered the dollar index last week, and again I got a little bit carried away, so I didn't get to the euro portion. So what I'm going to do is this week I'll focus on the higher time frame for the euro dollar. Next week I'll focus on the higher time frame for the British pound. So we'd have covered the euro, the pound, and the dollar from a higher time frame perspective, right? And then we can track the market going forward, and we can get down into intraday price action. For now, I want to show you how dealing range theory works on every time frame, from the higher time frame down to the lower time frame. And I showcased that really on the dollar index last week. So this is just going to be, again, another amplification to it. So the first thing I want to bring your attention to on this chart is this area over here. We have ran the buy side liquidity above this swing high, and we have ran the sell side liquidity below this swing low. This is the lowest low, and this is the highest high. I call this the IDR, or the initial dealing range. Now, this can also be the initial consolidation. Why I call it the initial dealing range is because of the way it forms. Now, if you look at consolidations, and again, if you've been through my courses, you will know that a consolidation in itself is a dealing range, right? If you look down here, inside of the IDR, we have this high that's been swept here. We have these relative equal lows that have been swept here. And this creates a consolidation inside of the initial dealing range. You can see how price really moves away from that area, but we'll get to that in a second. Now that we have the initial dealing range from this high down to this low, we can project deviations in price higher. Now, initially when price is running higher, I'm looking at how it's reacting around these deviations, right? You can see how at the 0.5 deviation here, look at the bodies failing to close above it, and how we have this consolidation. And then we really run up into 1 standard deviations of this range. Now, this level comes in at 1.23522. So we want to calibrate this level and round it down to 1.23500. If I hover my cursor over this candle, you can see that the high comes in at 1.23495. So we're going to round this up to the nearest level, which is going to be 1.23500. Now, the 5 levels and the 00 big figure levels is where the institutions are going to be looking, especially on a higher time frame. Again, this is ICT theory, it's all been explained before. But when I am grading levels, or when I'm calibrating levels, I'm always looking at big figure institutional 00 levels or 500 levels. And I want to see how price is reacting at those levels. Do they want to run through it and close? Are they rejecting those levels? And this is going to give me an indication of strength. And that feedback I'm going to interpret and make a decision on whether I want to change my opinion, change my bias, or does this confirm my opinion or confirm my bias? So now we can grade this dealing range low to this dealing range high with our DRT levels. You can predict the high and low of a buy or sell program before they form. It's all mathematically derived from the pricing structure. Notice what we have here. To change my opinion, change my bias, or does this confirm my opinion or confirm my bias? So now we can grade this dealing range low to this dealing range high with our DRT levels. You can predict the high and low of a buy or sell program before they form. It's all mathematically derived from the pricing structure. Notice what we have here at the 25% DRT level. We have this buy side imbalance. Notice the consequent encroachment of that buy side imbalance. It overlaps nicely with that 25% DRT level. Also note this volume imbalance that sits in between these two down close candles and it forms at equilibrium of the IDR, or the initial dealing range level, from this high down to this low. Now, what is this gap?
Breakaway.
Again, my students will know that at the 25% DRT level is where we find our breakaway gap. We're breaking away from this consolidation down here. At the 50% DRT level, what do we have here? This is a buy-side imbalance, but more specifically, we call this a measuring gap. You can see how we're finding support at the premium end of that measuring gap, and then price really makes a run higher, creating the high up here before the market going into a sell program. If we look down here, we have that original consolidation inside of the initial dealing range. Notice how price runs and closes above the 25% DRT level, right? So we have our consolidation and we expand
what's good, brother?
through it on a closing
Thanks for the
basis.
sub.
We then
Sprat.
have this retracement, and then we expand with a close through the measuring gap at that 50% DRT level. Price then goes into another area of consolidation before expanding and closing through the 75% DRT level. I call this the terminus gap. Why the terminus gap? Because we're in the upper quadrant of the dealing range. Price is going to be in a hurry to run above this swing high and liquidity to the left, or an imbalance to the left. And
I'm wondering, how do you find a genuine YouTube trader? What do you mean? Like, someone who's genuine out there? Are you looking for one or what?
this is going to happen in the upper quadrant of the dealing range. So we have terminus up here, and we have our original consolidation down here. What is this? This is a market maker sell model. We have the initial consolidation inside of the initial dealing range. We have our first stage of accumulation, our second stage of accumulation, and then the run to terminus at a calibrated big figure level. Now, ICT talks about the measuring gap. Now, he hasn't explained this, so again, this is just a theory, and I've been very careful about delving into things that I have researched myself, right? There are a lot of things I've discovered beyond what ICT has taught, and I'm very reluctant to, number one, release that to the public because somebody will go out there and just make a course on it, and number two, I'm still testing a lot of these theories, right? And I've been down a number of rabbit holes. I do apologize, I am digressing slightly, but I think I need to get this point out that what ICT taught us is enough. My question is this: if you haven't fully understood what ICT has already given you, why are you going down rabbit holes and looking for other things and trying to find enigma? I've been there and I've wasted a lot of time. You're going to make your own discoveries in price. It's just inevitably happens after years and years and years of looking at charts every single day. You're going to notice things. One of the things that I notice, especially when everything is aligned in price, my grades and my structures, everything aligns. When I'm looking at the measuring gap and I take the breakaway gap low, which I know is going to form around that 25% DRT, and I project a deviation from the low of that breakaway gap to the low of the measuring gap. And if we project one deviation higher and extend this level to the right, what do we have here? This is our terminus gap. If we project one deviation higher, we get 1.23390. This alone is in close proximity to the terminus level that we had already graded down here with the IDR swing. But again, if you've been a student of mine, you know that
Most of them are scammers telling you how to make money. Trading didn't work. I don't know. I would just stick to yourself, and you don't need a YouTube trader for.
I grade two things, right? I grade the wick to the tail, and I grade the body to the body. And I also look for projections here. Now, between 1 and 1.5 is when I'm generally looking for a retracement or a reversal after the initial consolidation.
I would recommend
or
ICT.
The IDR range is
ICT.
being printed. The level we get at 1.5 is 1.23380. Now, look how close that is in proximity. So again, this sits around the area where I'm anticipating a retracement or a reversal. And ultimately, you can see how we reached the terminus of this buy program, and we had a reversal up here. I'll get into a bit more details on the market maker model again at some point. But like I said, I've really taught all of this in the initial course that I have on the website. Now, one of the things that we've been taught about market maker models is that the left side of the curve should align with the right side of the curve. The way the algorithm books is based on previous dealing ranges. Again, something that I've outlined just in the last video alone. Now I'm going to scrub this chart to the right a little bit, and these three levels where we have the breakaway gap, the measuring gap, and the terminus gap, I'm going to highlight in red and remove some of this stuff just to make sure that you follow what I'm doing, right? So like this, right? So we've scrubbed to the left, and those key fair value gaps are highlighted here in red. Now you can see how we have reacted to these levels on the right side of the curve over here. So this is the buy program, or the buy side delivery of the market maker sell model, and this will be the sell side delivery or the sell program of the market maker sell model, running the initial consolidation down here. But for now, I want to draw your attention to these gaps. On the left side of the market maker model, they reside around the DRT levels. The terminus gap here at 75% DRT level, if we extend that out, you can see how we are having a hard time getting above that. The body's here telling the story, and we're rejecting from equilibrium and the discount end of this sell side imbalance. If we look here at the measuring gap, now I've refined this measuring gap. We do have an overlap over here, right? The reason why I've chosen this area here as a high probability area to look for a trade is because we run back through the 50% DRT level, and if you look here, we have a sell side imbalance and we have this buy side imbalance, but we can refine this buy side imbalance because from this candle's low to this candle's high, this is sell side delivery. So if I'm going to take this portion of this buy side imbalance and stretch it across, we've only had buy side delivery here and sell side delivery through this range, making this a balanced price range. But you can see how we've run up, tap the consequent encroachment here, and tap the 50% DRT level here, and then gapped lower, closing back below the 25% DRT level. Now this is significant since it's on the right side of the curve, and it's giving us an indication here that is likely to run the original consolidation. Again, where is this occurring? Around the 25% DRT level, which is our breakaway gap. Look how the bodies are respecting the consequent encroachment of that breakaway gap, this black dotted line here, and the 25% DRT level. Consequently, you see price roll over and run for the sell side liquidity below that original consolidation. Now, this is again just the tip of the iceberg. If I were to explain everything else here, we'd be here for a long time. But
dang, y'all going crazy.
Zoom out here.
I don't know what it
show
is.
How price really ran that sell side
liquidity Iman
trading below that original.
Yeah, I think Iman trading is like he's just spreading fear and this guy's a scammer. This guy's a scammer. Like I'm like who cares, bro? If you're getting you don't want to be mentored by a scammer. That's why I'd recommend listening to ICT, because Iman Trader is like, oh, ICT is a scammer when Iman Trader is not a profitable trader. So why would you listen to a profitable trader about people that are suggested scammers? So yeah, there are crummy stuff out there, but just stay in your own lane and just worry about yourself, focus on yourself. It's a game about yourself. Worrying about other content creators, worrying about other people, worrying about other people that are running mentorships, that is not going to make you better. So I don't even think that that's even a thought that you should even worry about. Who even cares if someone has a course that they sell to people? Okay? If they have a course, and if you're able to get knowledge out of that, and you're able to better yourself out of that, you're able to become a better trader out of that, then what's the issue? I'm 19. I would say so many people worry about other people, then they should just be worrying about themselves. And Iman Trading is one of those guys. And that's the only guy that I will ever talk bad about, because I don't really mess with it, because it's kind of, I've watched like 2 of his videos, but it's cool. If he's profitable, why does he do YouTube? Because he has a genuine passion to teach other people. I would suggest you doing your own research and come to your own conclusions. I've come to my own conclusions because I've actually listened. But I will say that ICT is not a bad guy. He's generally not a bad guy. If he was a bad guy, then why would he have so much YouTube videos for free out there? Well, part of that is because his mentorship is getting leaked every day. So that's part of the reason, maybe. But I'll also say, I don't know. Hey, good stuff, bro. Good stuff, bro. I would say, yeah, it's all about finding your model and staying in your own lane, finding what works for you. And I'm currently on that journey, so don't think that I'm like there yet. I don't know. The more you worry about other people and focus on other people, the more that you're distracted by yourself. And that's kind of hard to do with social media, and especially most of the education out there is on social media.
That breakaway gap, this black dotted line here, and the 25% DRT level. Consequently, you see price roll over and run for the sell side liquidity below that original consolidation. Now, this is again just the tip of the iceberg. If I were to explain everything else here, we'd be here for a long time, but I want to zoom out here and show how price really ran that sell side liquidity below that original consolidation, right? If I take this swing high, which was the first swing high after we had this high put in, from this high down to the
You
first
just earned
swing
another
low,
sub. Hey, appreciate it. I mean, I won't ever like force anyone to sub.
and I project forth.
Once you realize you got a working strategy, you would never sell it as a course. You can't place a price tag on unlimited money. I mean, I wouldn't say unlimited money. I feel like that's kind of devaluing the amount of work and effort it takes to find that strategy in that model.
Standard deviations lower, we almost nailed a very low over here. Again, if you have been through my stuff, 4 standard deviations is generally how far a program will run for during its distribution phase, and it will generally run from 1 to 1.5 during its manipulation phase. Accumulation, manipulation, and distribution. Notice how we ran through the original consolidation and the 0% DRT level. So this was the low of the actual dealing range. We ran and closed below it, leaving this sell side imbalance. We ran back above, completely closed that sell side imbalance, and then ran 1, 2, 3 drives lower below that original consolidation, really digging into the sell side liquidity below it. Notice where this consolidation is forming. What is this? This is seek and destroy. Right, and it's forming at around the 50% DRT level. If we take the range high down to the range low, you can see where equilibrium sits. We're currently struggling to stay above equilibrium. If we take the consolidation, which sat around equilibrium of the previous dealing range, we have a smaller dealing range inside of the larger parent dealing range, and this will often occur at equilibrium. Again, you can see that we're sat inside of the discount region of the upper 2 quadrants. So we have our premium and we have our discount, which is also inside of the premium relative to this high and this low, right? Because we have our equilibrium level here. If you haven't seen last week's episode, I would strongly advise you to watch that so you'll understand what I'm talking about here, right? Let me zoom in here a little bit more so you can see this better. Now, I want to bring your attention to this volume imbalance over here. Notice where it sits firstly. Inside the upper quadrant of this dealing range. We also have this up close candle, as well as this high, low, higher high, where we've got these 2 consecutive down close candles. Again, it's a signature that you're going to find in price, and this sits in the upper quadrant of the dealing range. If we extend these levels out, you can see how we've tapped it here. You can see how we've rejected from the volume imbalance here, and then really sold off. So straight away, this is showing me signs of weakness. That is struggling to get above the volume imbalance. I mentioned last week that the volume imbalance is ICT's weakest PD array. So if price is being held at bay, this is giving us an indication of weakness, right? We're also struggling to get into the premium or the upper quadrant of the entire premium range. Below equilibrium, I can see these relative equal lows. Interestingly, this low has failed to go below this low, and this low was the low that caused the immediate rebalance here, right? So it's a very strong signature. I'll be talking about these a lot throughout the course of this mentor. Interestingly, this low has failed to go below this low, and this low was the low that caused the immediate rebalance here, right? So it's a very strong signature. I'll be talking about these a lot throughout the course of this mentorship. But below these 2 equal lows, we have sell-side liquidity. Now, this sell-side liquidity, number 1, sits in a discount relative to this range high and this range low. We also have this low, and this low forming a trend line, right? So retail are going to look at this as support. I look at this as an area of a buildup of liquidity, especially with the equal lows over here, right? Below this trend line and below the sell side liquidity, what else do we have? We have this buy side imbalance. Shit, I've put sell side imbalance here. I do apologize. It should be buy side imbalance. But why have I chosen this portion of price action as the buy side imbalance? Because this candle here, which is an up close candle that has eaten into this buy side imbalance, is an up close candle. And the same goes here. This candle that has eaten into this buy side imbalance is an up close candle. So I'm taking this low to this high, and this is going to be the buy side imbalance that I'm targeting, which sits below the liquidity and sits below equilibrium. We also have these consecutive down close candles here, right? And again, these sit in the lower quadrant of the dealing range, and we haven't yet traded into the high. So if I were making a market, I'd like to see price run lower to upset that trend line, rebalance this and tap into the order block. But this profile here of this consolidation, this is tricky. It's very, very difficult. And again, this is a sign of where we currently are, right? The economic climate isn't great, okay? There's so much stuff happening all over the world, which is making things very, very uncertain. When it's uncertain, the large speculators and institutions with the deep pockets want to stay on the sidelines. And we could stay in this prolonged consolidation for a while. There will come a point at some time in the future where the markets will start moving nicer and we'll have, like, you know, price action like this. This is really, really easy, nice price action, right? If you compare this, right, to this, which one do you want to be in? Anyway, let's zoom into the daily time frame. Again, we have a dealing range, right? From this high down to this low, we have a smaller dealing range inside of that larger parent dealing range, and equilibrium is this green line over here. See how we're rejecting equilibrium over here, failing to close above it, and what happened? Price really ran lower, creating another dealing range, right? We ran buy side liquidity here, we ran sell side liquidity here, making this our DRT high and this our DRT low. So let's zoom into this area. Now, since we have our high and low, we can now grade this range with our DRT levels. Note where we currently are. We're at this equilibrium level. I'm looking at this area here because I'm always looking at what retail are looking at as well. There's going to be this trend line that they're looking at. Where we are currently at equilibrium of a range is difficult, right? Generally, I don't like to trade once we're around equilibrium of a dealing range. I suspect that price may want to push higher and potentially rebalance this sell side imbalance, right? Because again, the premium end of this sell side imbalance sits inside of a premium relative to this high and this low. If we run higher, we would upset the trend line. The way prices ran higher is lethargic, right? We had an imbalance over here. We had this down close candle as an order block, and we had this sell side imbalance, which became an inverse fair value gap. Again, look where it's resting, right? I just realized that I've done this upside down. Again, my apologies. So this should be the 25% BRT level, right? We're finding support here. Look at the bodies of the candles here, really respecting the discount low of this sell side imbalance. We then ran higher through this sell side imbalance over here. So the consecutive down close candles here with the sell side imbalance after price ran away is important. If we extend that out, you can see the consequent encroachment of that sell side imbalance. We're failing to close below it. Completely rebalanced this buy side imbalance and then again ran higher. At the minute, does it look like it wants to reverse and break down and go lower? It's too hard to say. I would like to see price run lower, close back below this sell side imbalance and get back below this swing low here. That would give me conviction that the market is likely to reprice lower. But again, I'd like to see it run this high and dig up further into this sell side imbalance before price runs lower. So there's a few things that you have to weigh up, right? Just because I think that the market is going to go lower because of everything that I've outlined from the higher time frame doesn't mean that I'm just going to willy-nilly go in there and start selling, right? There has to be confirmation and there has to be an element of logic behind why price is going to do what price is going to do. Anyway, I think this is going to be it for today's lecture. Next week I'll go over the British pound, and again, hopefully after that we'll get into a little bit more intraday price action and working with a few different models. I hope you guys have found this insightful. If you currently aren't on our mailing list, I give a ton of gems and wisdom in terms of psychology and experience through the emails that I send out on a regular basis. We have nearly 50,000 people on that mailing list right now, so I'm incredibly grateful for you guys. So I'll link that in the description below if you are interested. If you
Hey, shift is about to be over. Let me do my little log. Hold up. Gotta think about what it's gonna be on. I'll be like, why I'm giving myself time to. Here's my second mental log, and right now I'm giving myself time as a trader. I haven't placed a trade in over 2 months, or like demo or live trade, and the reason for that being is because I feel like if I try to trade, whether that be demo or real trading, I'm just inviting myself to over the last 2 or 3 months, I haven't even placed a single trade at all, whether that be demo or live trade. I've been developing as a trader, and the reason why I haven't done that is because I do have an ego. I can have a big ego, and I feel like as a trader, when developing, that ego can get hurt and bruised and can kind of avoid you from learning. At least me myself. And that's kind of a struggle that I had for a minute, because I would place my self-worth on whether I have won a trade or lost a trade. And I feel like that's a big mistake that I made, is, oh, if I won something or if I won a trade, I was doing something right. That's not always the case. And then if I lost a trade, I would think that I always did something wrong, which also is not the case. And every single trade I would have maybe a different entry technique, or a different way to enter, or like a different time I was entering, or a different model I was looking at. And I feel like that in itself was just not helping me grow. So I decided to say, hey, bro, let's just give it time and let's sit back and let's not even trade. And that's what I'm doing. I'm submitting to time. I'm giving it time. And throughout the next 4 to 5 months, I don't plan on taking a live trade yet. Maybe demo, maybe paper trade, but I guess we'll see. I don't plan on live trading. I plan on maybe demo trading for at least four months in a row, desensitizing myself to the result. So then when I do go to a live account, then I'll be much well prepared. It'll just be another day in the office. It'll just be a emotionless trade. And that's kind of what I'm planning on doing, is just desensitizing myself so much over time and seeing the same things repeat over and over again, to where I don't even get emotional at all when I'm trading. I feel calm, I feel relaxed, because I've seen it happen. And that's really where I want to get at to my trading. And the reality is that's going to take time. And I'm not there right now, but that does not mean that I'm not going to be able to work my way to be at that point. So that is kind of why I myself have not been live trading. That's why I've not been taking any demo trades. I've just been tape reading. And some people might say that, oh, you need demo trades to really grow. And I honestly don't agree with that, at least for me. Because I know myself better than anyone else will, and therefore my own advice is probably going to be better than other people's advice that don't even know me. And I feel like that's a lot of people. They'll come into you, or they'll say, hey, bro, do this, but no, I feel like you got to trust yourself, and that's what I'm doing. I'm submitting to time, and I guess we'll see where this ends up taking me, and we're going to see, because every day I do want it. I've been live recently. I've been doing like streams where I'm studying and backtesting on stream, and I kind of like them. I kind of mess with them. Let me know how y'all think about them, because I'm just chilling in there. Anyways, that's my little mental log. I'll catch you guys tomorrow in live stream and also a mental log. And I appreciate you. See ya. Man, I wish I could cut that, bro. I wish I could cut that. It's kind of bad. Like you mess up for 1 second and say something that you shouldn't really say, and then like I feel like I want to cut the whole thing, but I can't. Alright, let me upload this. A mental... I'm from the United States. I'm from Colorado. What about you? What about you, brother? What's good? What's good? How y'all doing? Publishing this video. I'm actually about to head off stream. Right when the whole chat's pulling up. Yeah, I know. I'm sorry, but I'll be live tomorrow for sure. I might be live later today, but we'll see what happens. We'll see what goes down. I was live for like an hour yesterday, and then I had something to do, so I thought I was gonna be live longer, but then I had something. All right. Anyways, I'm gonna head out. I appreciate y'all for tuning into this. If you're watching this, I appreciate you. From Bangkok, Thailand. Nice to meet a young man. Good attitude trader as you. Hey, appreciate it. I really do. I'll be live tomorrow, and I appreciate you guys, and I'll catch you guys later. This was a good stream. 11 and a half hours. That's crazy. I'm gonna keep on doing these. I guess we'll see how long we go with these. I plan on doing these for like 11 and a half hours every day. But 11 and a half hours is kind of crazy. That's like a whole shift. That's like a shift and a half. Like a regular 40-hour work week. But we're not working 40-hour work weeks because we know it takes more than that if we want to be where we want to be. Anyways,